basically we have that spike that has the report associated with it. Then there's what was like a smaller version of that spike that came down to the VWAP, and then what happened was is it sprang off of that, broke the baseline of both of them. You can see overnight that this is the pattern it chose to make, where it went and it had a pop out of the top with a sideways consolidation, a pop out of the bottom, and it literally broke the trend and almost got to the red zone. Basically, went to the other side of the range. And it's like it reminds me of what it's been doing lately, where we've essentially broken out of the choppy, slower area that's contained within the red yellow line, and then everybody gets in this very like exciting part, where the market's moving really fast and everybody thinks that there's, a lot of opportunity for them. So they get involved with it. But look, the exciting part is the fact that it's going up, right? Any of that exciting part that anybody was to choose to buy, it's overlapped with a loss. And then any of this exciting part, it gets overlapped with a loss. And then the entire move, just to double whammy, because the market is just trying to show how it does not respect anybody that's bought above that level. It continuously comes back for the people that got excited after the fact that they should have found value in the market. Because this is the best price to trade, and look at how less threatened it is. And look at how many little people are in there. Not there's how little people they're in there. Sorry, barely any people, because nobody finds any value when it's the lowest and the scariest. Everybody wants to be in at the worst price because that's where everybody else is in from. So they feel comfortable like that, as long as CNBC tells them, the government tells them, somebody tells them. And what it seems to do is get everybody to trade right here, which I mean, when has right here ever been the best price? And why the hell would anyone find any value in trading there? The point that they control everybody, because it's not a good place for anybody. And if we talk about who's being controlled, it's definitely people of this line. Yeah, they won't think two seconds past that name. Point of control. Maybe they think that they're in control when they buy it, and the results don't matter to them because they must just believe the name or something. Like, not good enough for me. You can see the spike and spring broke into the green zone, effectively creating B points all the way along the highs of every single high that we've made. It's acceptable that we make that red line into basically a medium point. Fifth wave. 5 wave move.
The report comes out in like 10 minutes, eh? Yeah, the Michigan consumer sentiment.
The red zone that we were using in relation to this green zone hasn't really had much time with it. We haven't had much time with it since we've came off of it yesterday. I think we'll see it again at some point today.
Up on a W, down on an M.
Like another 5-wave move, essentially, been created to the downside. Basically, just after our 1, 2, 3, 4, and 5 up, we've made 1, 2, and 3, 4, and 5 down. Basically, remember when I talked about the POC and I was like, we could come back and make that the medium level? If you rewind in time, you'll see that the 5-wave move made that the case. So we went 1, 2, 3, 4, and 5 up, and then that 5-wave move broke us down to the VWAP, where I was talking about, or sorry, the POC. So that is like the area where I was mentioning how, it's called the point of control, but it's the point that they control most of the people because nobody's winning from that level. I mean, if they are, they could have been winning from a better spot. And I mean, like, why did so many people settle for this spot when it's never been the best price and never will be? Is mind-boggling. But they somehow convinced everyone to provide liquidity just like that. And we saw that very clearly in the morning. Of course, there was a report. There's going to be another one here in a minute. So Anybody that took the fifth wave is undeniably profitable. You could take off enough right now just to make it safe, and then continue holding whatever you have left if you did take it. But at the end of the day, turn some more off there. Watch out for any retests of the previous highs. The red zone, like I was talking about a minute ago. Hey, now watch for it to come back to this high. That's what it does. It's shocking that everything from the from the spike and the spring played out. The 5 wave move played out to the downside, then the next 5 wave move played out to. Okay, sorry. So, first off, the spring played out, then basically the idea is that we make this the medium line. The 5 wave move made that happen. Then we did another 5 wave move, which was clear as day, and we could see the value in getting to the red zone. And then from the red zone, where did it decide to go? Back to the red zone. Will be on the table shortly. I'll just the music bot is Money Tunes. You can just right click the music bot and it would be the option to reduce the volume on the music bot. Or you could just mute it. It's the Money Tunes person in the chat basically. It's a bot. Here, I'll just can change the name of it to lower the. So we can see that we're back on our way up to the red zone yet again, and effectively we've come back down to just do a little test of the green zone and acknowledge its presence. Come back to clear any B points that were in the way along the way. The report was in favor of those that saw the analysis clearly. The report, everybody will think that the rest of the moves of the day now will be based off of that report. When people say, hey, why did the moves of the day happen? You know what they will say? They will say it's because of that report. And I will say 70% of the entire populace thinks this. They're just easily, like, just content with knowing that there's a news article or some sort of, event that's been, like, presented to them. And they think that all of the reasons that they've had all of the excitement or disarray that they have is because of those events. And that just sounds very gullible, but like people don't know that they're being gullible. Instead, they think that they're honing one of the most specific, trading strategies out there that is their own, and I'm just like, ay, kills me. Me feel so uncomfortable. Reminds me of like the just tough. But all of my opponents were like that. Would be very easy, wouldn't it? But they're not all like that. Most of them. Or else the market wouldn't move so much and capture so many people that just settle for less. Like they're not even looking at where buying low and selling high is. It reminds me of, what I used to say, where it's like people don't buy low and sell high, they buy and hope to sell higher. And that's not buy low, sell high. But that's what I see when I look at the results of the people. Buy and hope to sell higher. Normal. And whenever I talk about anything being normal, it's bad. Just get that down. It's not a good thing to be like everybody in this industry, or else you will get everybody's results. Everybody's a freaking victim. So you have to be esoteric in a way. Like a blue line. It's funny that everybody wants to like be their own genius and do their own trading. Yet when I see how much people conform, it's very, very interesting. And I mean, like when given the opportunity to conform exactly, it's almost human to ensure that they will change things. And I'm like, well, in this process, like I would dare to change anything that I'm doing here. Like from the 5 wave move down to the POC, from the 5 wave move off of the POC that allowed for exposure to the report, from the move from the red zone down to test the highs, from the move from the bottom of the highs to get back to the red zone. At what point were we out of line with the directional movement of the market? And could this day be really easy for us now? Could we hold for the rest of the day? Can we focus on taking hedge trades back to the blue line? Can we focus on, you know, making moves against our core? It's like we don't come in with the with the idea that it's possible to hold a long trade and take small shorts against it, making money the whole way up that we're holding this long. I'm like, well, if you don't make it part of the plan, don't be surprised if it doesn't happen for you, right? So, and if it's like, okay, if you can think of a better plan for, you to be able to capture the market's movements and stay in for the majority of what it has to offer, well then why wouldn't we choose for that to be a strategy for us? And why wouldn't we try to formulate it in our lives? But a lot of people, it doesn't seem to be that they don't think that way about it. Said they let hope be part of the process. And when you let hope become part of the process, you really let fear become part of the process. Because hope is scary, it is scary. We wouldn't cut a window on hope, and we would be scared to do, like, if we were to bring it to our employer or something like that, they would be like, oh, this doesn't fit because it's wrong. And I'm like, well, that's tough. And the market has its own way of telling us that it's wrong. Of course, this is the upper VWAP band, and it could involve a test of the red zone.
Yeah, I've got it all at the 227 from that B point down below.
Yeah, I like the distance that it made out of the bottom of the green zone and the top of the red zone. I think that that's what really giving it a juice right now. And in pretty much anybody that was associated with the blast part and not getting in before it was exciting and moving, they're doomed. Literally. Like our friends on Wall Street will ensure this is the case. So they do not like people to get lucky breaks. They want them to have known that it was going to reverse and anticipated the reversal. Or if anybody bought into the exciting blasty bit, they get to be part of the chaser eraser. Because that's what they are. They're chasers and they get erased. Hence, chaser eraser. Beautiful. I didn't invent it, Wall Street did. I just named it. The name of the game is to keep the long trade, like yesterday, the day before that, the week before that, the month before that, the year before that, and never said to give it up. Didn't say to give it up yesterday either. The name of the game is to find a hedge so you don't give that up either until the market chooses to take it back from you. Because why would you ever choose to give up your insurance policy? Why would you choose to give up your safety protocol? And that's what a hedge is. It's a safety, it's a move that keeps your hedge or keeps your core safe. And if you're interested in holding for like 10 years, but you see a little bit of a dip coming, why not make some money on it? Are you going to give your position up that you've been holding 5 years ago for 5 years, let's say, and no, you wouldn't give it up because you're not going to be able to get in at the same price. And if it's just going to make a small dip and it's not going to come back all the way to where you are, why would you take another risk in buying lower again? When you're already in, you don't have to take that risk ever again. You never have to put another stop out there so that, everybody's just, making that little buy order and then having a stop so they maybe can lose money. But instead, the people that just decided to hold from here and then take that trade down never had to buy here again. You know what I mean? And it's like, but people choose to give it up because they don't want to be held accountable for the work the market demands that they need to put in order to maintain that position. And I'm like, the institutions don't have a choice. It's like they say you can go work at another firm if you don't want to manage it correctly. And you don't think it's that way, then you got another thing coming. And it's like they take pride in their ability to be able to manage it because they do it intentionally and they understand their work and they want to be able to do it every single day for benefit in the future. And I mean, the way that they do that doesn't seem to change very often. There's different variants of it, but it's all about how they work themselves around the public. And every single day they come in and think, how are they going to respond to what we do? And how are we going to essentially push them out of the way to get what we want? I mean, the people just think it's ordinary people against them. That's the way it goes. So we did indeed come back to test the red zone. And of course, anybody that assumed that there should be a spike out of the bottom of the green zone that matches exactly the one out of the top of the red zone, it spent its time choosing to do this amongst everything else because it's more important than I think any other indication that we're getting right now. at the end of the day, why would it be so precise about being a spike out of the top of the red zone? And it didn't get to the 261, didn't get to, a respectable fib, and from that respectable fib, it didn't come down to the B point. It decided to just use the red zone. Suspiciously particular, like it doesn't give a shit about the B point, like it doesn't care about the fibs, it just cares about the range, which is unlikely that a lot of people have the range because it's over 3 weeks old. And I'm like, well, if the people don't have the range, then who does? The people that actually matter in the market? Like the people that actually choose where it moves? Or is that unbelievable? I can't believe that anybody chooses where it moves. But they sure as hell do.
Beyond that, how many people actually draw ranges in?
Yeah, exactly. How many people like draw the ranges in? And I mean, like, not even I have to like, and even if they do draw them in, are they going to be right? Like, and do they rely on them? And they might think like, hey, at the end of the day, because this range came all the way away from it like that, oh, do I take it off? Is it going to like, it doesn't look like it's being used very well at all, does it? We went away from it for quite some time. Are we still interested? Look at it's barely using it there too. It doesn't use it here either. And then we come into it and it's like, how long ago have we even used this range? And when should we believe that it's to be used properly? And I mean, like, it's just like, that's when having a relationship with the market comes in really, really handy. And I can tell these people are long, clearly. Pushing everyone out of the way, orchestrating every single pattern clearly, from 5-wave move to lining everyone up at the POC to putting the people of the reports in their place, because basically they just moved the reports towards the favor of their own agenda. That's what I see. And they use their classic 1, 2, 3, 4, 5. And don't assume that it's going to come down either, because 5-wave moves have come down all day today. They've played out all day today. And people see a nice big juicy one, they think it's going to work for them. No, it's not.
Hey, morning, man.
Yo. Contrary to popular belief, people will only like they'll see what's given to them. They'll try to analyze what's worked the best for other people and try to make it happen for them. That's like piggybacking. Market doesn't like that.
Ooh, zoom out a little bit, John. We're in a channel.
What do you mean, this one?
Like on a 5-minute.
5-minute shows all the information I'm looking at, except it just distorts the fuck out of it. I don't like it. What are we looking at here? Sideways, down, and then up, I see.
Okay, hold on. I'm gonna post my chart here.
But yeah, no, I would be very careful with the 5-wave moves that we see. Just because it's been beneficial for the people that have played them in the past doesn't mean it's going to work for the people now. I see more grind than anything. Going to keep them caught in this area up here and grind and grind and grind. A lot of people will be shorting it. And what we're going to do is make them wait. And we're going to give them time to push their stops higher. We're going to give people time to chase. And they're all going to get stopped out. Every single move that we do on top of this blue line will come back to it. And it can come back to it by going sideways. And it's like, it doesn't have to, but because it can, it's a risk. And I mean, with its appropriate ability to go sideways here, I think it's going to be giving the people of a 261 a rough time. A rough time. It's already
Well,
like...
we really are far away from the uptrend line too. I mean, you put that line in there, but that's friggin', I think, minor.
Yeah, this one over here.
From the bottom. Yeah.
Yeah. I mean, it's minor until we get to it. But yeah.
Yeah.
I mean, it's appropriate for a consolidation here, and honestly, we could do this entire one right here. And it could look like a 4th wave. Or, yep, could look like a 4th wave.
I mean, what I'm saying is, since it's so far away from the uptrend line, there's no incentive to come down just yet, even though it does hit a fib.
Exactly, but a lot of people
I used to
don't
take
see
these
that
left
though.
and right before.
I know, and it would just waste your energy, And I'm like,
You're frustrated as shit.
I know,
You know?
it's an energy waster because it doesn't really take much money from you, but you sit there thinking it might the whole time, and by the time you're
Yeah.
done with it, it's like, oh geez, not even worth it. A lot of people need to go through that today for some reason, and it'll make them timid about tomorrow.
So I posted my chart in the exclusive call. It's super rough, but it's the red lines that I cloned. There's 2 red lines, one on the top, one on the bottom.
Yeah, let's take a look here. Okay, I'm just gonna.
Sure. And it
Check
kind of
this.
gives me like pitchfork vibes.
Oh, pitchfork. Let's talk about that then.
I tried putting the
Pitchfork.
pitchforks down, man. I just couldn't find the freaking angles. I never used pitchforks. Last time we used it was the last time we talked about it.
Oh, and the last time we talked about pitchforks, I'm like
The
still
freaking
proud
wall.
of it. I'm still
Yeah.
proud of it. I think like, you know, out of all the people out of all the people that use that, nobody uses this. Look at the precision last time we were using it here. You want to know what's funny? Is I readjusted the way that it used this pitchfork, and it came exactly to the same level. Check this out. So you see how it went from that blue line all the way up top? When I readjusted it, it was a mathematical phenomenon that it found value in the blue line on the other side of the spectrum. Many people will not recognize that, but it's also true that the spike out of the bottom of that triangle was formulated again.
So yeah, if you see the chart I posted in the exclusive chat, you'll see like the two red lines that are cloned, and yeah, I just couldn't find an angle for a pitchfork. If there is even an angle for a pitchfork in there.
An angle for pitchfork. Sorry, let me look at what you posted in there.
Also a bit of a triangle, those yellow lines there. Like we may have to come back to the tip.
Take a look here. Consuming this data for a second here. Let's take a look.
Yeah. Everything I'm talking about is on that picture I posted.
Yeah, I'm looking at it here. Let's see, so you got everything. I like how symmetrical everything is. This is a good range you got going on here. It's a shame that we're gonna be leaving it soon, but we're gonna come back, and you're gonna freaking have everything, and it's gonna be very clear next time we come into this area. And what's funny is it might not be moving as hard the next time we come into this area, and it might grind the crap out of the green, might grind the crap out of the red, and all of these little changes that you have, they'll respond in like very, very, very specific ways. It'll be very helpful in the future. But what was the point? You were saying, like, I think when I see this, I'm like, okay, well, it wants to make an effort at spiking and testing from the outside.
Yeah, those red lines that I have there. You see that red line on the
Oh
top?
yeah, okay.
And then the one just on the bottom near the VWAP.
Oh, the spikes out of the bottom of it could be on the top.
Yeah, so I'm looking at that whole range of the cloned red line that I did as like a potential for pitchfork somewhere. Yeah.
Okay, let's think here.
And then after I posted the picture, I also saw the yellow lines on that same chart, the support and the resistance, and I'm like, are we gonna have to come back to the tip of that triangle?
Yeah.
We left it a bit early.
Triangle. See what you mean. The language of technical analysis. Yeah, no, it is very intriguing. I do understand coming from with that. It's a very neutral pattern, but it's like, you know, everything that's been working here, it's like subject to coming to an end, which is not a bad thing, but it's just like I wouldn't assume that the green zone's going to work like it has been and the red zone's going to work like it has been. And it's like, well, the first 2 cents towards that being the fact is the fact that we're outside of the range already. I'm like, clearly they're not working properly. I mean, we can hope and wish all we want, but it's outside of the freaking range. And I'm like, that's huge.
So if it's outside of the range, it's making me think it's like, oh wait, there's a triangle here, and I'm like, we just left the tip. I can see it's coming back in the near future.
Yeah, we could.
Even next week, like it doesn't have to be today.
Yeah, because this is a long-term chart, right? What is this chart? Time frame? Hourly? No.
No, I think that's only 5 minutes.
5 minutes.
Yeah.
So why isn't the 5-wave move working out for the people associated with it? They all got to see that 1, 2, 3, 4, and 5 meant down. They all got to see 1, 2, 3, 4, and 5 meant up. And why is it that when everyone sees the big one, once they're all comfortable and ready to start trading, that it does this to them? So interesting to me that you can see how people could fall for that trap, right? Because it shows them the same thing over and over again and then provides it for them, and it doesn't work for them when they do it. Because, and you want to know what's funny is I can go up and I can type in 5-wave move or impulse wave, which is what it's called, and I think it should be called 5-wave move because that's what it is. But you know, people try to make it sound smart, so I have no respect for that. I have respect for the way that they talked back in the day, but damn, I don't have respect for the people of our day that don't update it, for crying out loud. Like, why didn't we update it? I mean, forever, will I always call it a 5-wave move, because I don't want to have to answer, what is an impulse wave? Well, it's a 5-wave move. But it's a waste of everybody's time if I didn't call it a 5-wave move to begin with, because why would I name it something that would have you ask me a question? Isn't that stupid? I think it is stupid, personally, because if somebody can name something that explains the entire thing, when I'm like, hey, it's a 5-wave move, are you gonna think that a 5-wave move is something else, you know, or like something else, or like what else could it be? But a 5-wave move is clear; it has 5 waves, and in the sequence, you know, like what about the word impulse means this? Because it's named impulse wave. If you look up on Google impulse wave, you'll find this. But instead, if you look up 5-wave move, let's take a look. What do you get? You better get impulse wave. Yeah, you do. So I mean, like, dude, come on. Why does anybody ever call it an impulse wave? Just because the first guy did? Conformity. Like, why does he deserve any credit at all? I'm like, gone. It's mathematical understanding. We can either understand it well, or we can be confused about it. And I mean, you know, it's not a good start when you're already confused by the name. I'm like, me as a teacher, I'm like, I don't like to waste time if it's unnecessary. So it's a 5-wave move as far as I'm concerned. But if I could go back in time, I would argue it. What are you doing? When you just name it after yourself, you may as well, you know, just call it an Elliott wave. People will think it's a 5-wave move. It's also useless. Because what about your name means this? And every time I'm asked what does your name mean, I have to say that it means a 5-wave move. Rather, you could have just 5-wave move, made everybody's lives easier, but instead you made it difficult. And I don't like that. What to sound smarter? I'm like, I like to get things done correctly. I don't like to sound smart. So, at the end of the day, one thing's a waste of time, the other's not. I recognize this. But in fact, you know, it's actually smarter to make it simple, to make it to make it something that people can understand quickly and easily, and without exaggerated explanations and stuff, and without taking people's time to do it. You know. Now you'll always remember what a 5-wave move is because I have such a problem with the way it's named. If anybody ever says impulse wave, you can tell them that if they're not talking to somebody that already knows what they're talking about, then they're in for an explanation. Because they better know how to explain it if they don't call it a 5-wave move. And I'm like, okay, that's seems to be the reality of it. But anyways, the people of this 5-wave move, just to talk about it, I'm gonna trace in all of these moves. Oh, you know what? I'll even use this indicator so nobody can get it twisted. It's 1, 2, 3, 4, and 5. Did it not make 5 trend breaks to come up with that? It doesn't have to be across the high. Most people think it does, but there's actually a variant of this pattern called a truncated impulse wave. Another word that people will not use and do not understand, because I personally had to look it up when I heard it too. And it means cut off. Simply put, truncated is 3 syllables, takes longer to say than cut off. Why would anybody choose that? Personally, I think it's incorrect again. Should be called cut off 5-wave move. But no. At the end of the day, people try to make themselves sound smarter by using words that people don't understand. And I mean, how is that helping anybody? At the end of the day, you won't catch me doing that crap. And then there's another 5-wave move down here. And, you know, you can see, you know, it was 5 waves. And then I'm like, well, interestingly enough, we did it again. And it was bigger and clearer for everyone to see. Maybe everybody thought that because it was bigger, it would offer them more. And the bigger one offered them less. And it was even higher. You could think that because it was higher, you know, it'd be easier to fall, or there'd be more room to fall down because we went up so much. But no. Interesting that so many people will fall in this trap, you could say? Is it like a trap? Is it like it's been set for somebody? I think it's been set for somebody, ladies and gentlemen. Or do you think that the people are so aware of how to make 5-wave moves that they've created this against the other half of the individuals that are also working together somehow in unanimity with all of their analysis lining up when they don't even look at the charts? It's like, no, they don't. I won't even have it. You can look at the disarray outside and you can see how lost people are, and it's not a result of their combined lost efforts that make it so precise. I will say this every day. And that's the way that I've come to that conclusion today. And it's like, if not, then how is it the people? And how should we even regard even a small portion of the way that they analyze the market? How should we even regard a small portion of the information that they're all given to eat up every single day? And I'm like, ay. And it's like they'll take their strategy, they'll make a strategy, having seen it never produce results, and repeat it every single day like it has been. And the market has to show them that they're wrong. I'm like, ay, that's tough. And it's like nobody would choose for that. How do we prevent that from happening? Well, patience to wait until we actually understand exactly what's going to happen.
Going back to the red line, actually, that I put down.
Interesting. So this move right here is meant to get people to chase it. So people that were on the fence about the 5-wave move, they see a little bit of a dip, so they think that they're actually missing it. This is the worst time to think that that's the case, because look what's going to happen to the people that were not only late on the 5-wave move, they chased it because they thought that they missed it. Not only did they not see it early, but they chose that because they were late, they felt that their time was necessary to trade late into the trend, thinking they could still squeeze some value out of it. I think that in time we will return back to the blue line, but it doesn't have to be on downwards movement. That's the kicker. And because we treated people so badly at the 200 and 188, it's very likely that, you know, we come back to taunt them. You know, it's like, oh yeah, all these people that thought it was going to reverse here, you know, we come back to give them their average price. And you know what? 70% of them still hold, because it's human to do that. They don't have the guts to cut for a $20 loss or something. Instead, they'd rather it be 300. That's normal though. It's human. And the institutions count on it every single day for people to act like that. And I'm repulsed by acting like that. Here's another 5-wave move, interestingly enough. 1, 2, 3, 4, and 5 all the way down. Which it's intriguing, because if you look up what a 5-wave move is supposed to do, it's supposed to provide a 3-wave move that comes after the break of the 5th. So we have a 5th now, and typically when we make a 5-wave move, we get a 3-wave move. So that looks like an inverse head and shoulders, because you get 3 after you get 5. The blue line being tested means that we don't have to test it in the future. Of course we can, but it's not going to be a necessity. It doesn't mean that every single trend break from now on out has the potential to return back to the blue line, but it did before.
Morning, guys.
Hey, morning.
Hey, man.
Morning.
How we doing?
Good, good. Wow, time flies. It's already Friday.
True, right?
I know, eh? Holy smokes. I remember talking to you and you said you were gonna come in on Friday, and I was like, oh man, and then that just reminded me. I was like, somebody told me it was Tuesday, I'd believe you.
Feels like a freaking Tuesday.
I
Man.
know, right? I'm like, what the hell? Weekend
Such
already?
a bad migraine yesterday, man. Got off work like an hour early. Got home at like 4:30 and couldn't stop puking until 9:30.
Puking? Oh my god, that's terrible.
God, man.
I don't puke on migraines, but I could see that's terrible.
Super nauseous, yeah.
Fucking hell. It probably has to do with those concussions that you have. Or that you had.
Yeah, maybe. Also, weather changes, like really drastic weather changes. And yesterday was like pouring rain, and by the time I got back to head office, it was like clear skies, no clouds. And I go up in the mountains up in North Van, and then I come back down to like Surrey, which is super low. And then I have to go way up in the clouds up in Burnaby, and then I come down to sea level down to Richmond. So it's like I'm always going up and down, and with the pressures, oh man, it hurts.
Yeah. Especially, like I think like, when like like for me, like it annoys me when I see that people have shiny cars and literally that shiny like on the edge of the car and it like burns a scar into my eye. I'm like, fuck you for your stupid shiny car. And I'm like, and literally when I see people on driving in the opposite direction and it's like their high beams just burn a hole in your eyes, I'm like, I don't want any part in that crap driving around like a freaking pleb. I don't like it. I don't like it at all.
Oh yeah, I had to call the RCMP yesterday actually on a lady because she made me sit at a green light and then a red light, and then she went, and then she ran a red light, the very next red light, and almost hit a lady and in the crosswalk and almost smoked a car.
Yeah.
And I followed her, and she parked in front of Walmart and goes into Walmart. So I take a picture of her vehicle, and I guess her license plate isn't even registered to that vehicle. So yeah, I got her.
This little B point in here as well is almost going to get hit. Any hedges that have been taken. Yeah. But like when I see this, what it shows me is like, do we not talk about all the blasty exciting bit taken back? I mean, like all of these people that got excited about it, they were taken back. Doesn't mean give up your long trade unless you want to try and fight for another one back in the middle. But I don't think is a good idea. 61 is near this area too. Yeah, when I have a migraine and I go out and I see those shiny cars and stuff, bro, oh man, it really ticks me off big time. I'm like, people are.
Driver and you gotta look at the sun and it's sunny out.
Oh yeah, see, I don't like that. Like I don't like to drive. It's too risky. Like rather people that are professional drivers to drive me around. That's the only way that I'll get into a car. Only way. I like to give people GTA missions basically. It's like you do the mission and you're the driver and you get paid to drive and you are the best driver and that's why you get paid to drive. And that's the way I like it. Because I don't want to have to think about it. The best time that I think is when I'm sitting in a car when I'm traveling. I get to think. And when people are driving, what do they get to think about? They get to think about the road. And I'm like, if they're not, then they're putting themselves in danger. And I'm like, that is a waste of time. I don't get entertainment out of traveling. That's trivial.
Oh man, I run the same route all the time. So it's like sometimes I'll leave my work and I'll get back by like just before 5. And I'll be rolling up to the head office and I'll be thinking to myself, wait a second, is it morning or is it evening? I can't remember if I'm going to work or just getting off work. Because I zone out because the route is the same basically. So yeah.
Oh yeah.
Luckily, I've never really struggled for migraines. I've had migraines before, but my head never hurts from it. I just can't see shit. My eye goes super blurry. It's really bad.
Yeah, yeah.
Yeah.
Yeah, I had one a
Goes
few
from
days ago.
Shoulders to your neck to your, and it kind of like
In the back of
curls
your
around
head.
your head. Yeah.
Mm.
Oh, hell no.
Makes you like motion sick.
It is. It is. Yeah.
I
For
put a
me.
piece of toast on my lips yesterday and instantly ran to the bathroom.
Oh, that's not good. But it's gone now, though. You're good now.
Yeah, I feel much better today. So
Sure.
hopefully I don't get it today.
Puking is the worst thing in the world, man. I hate it.
And you tried to like, smoke some weed and stuff, and it didn't help.
No, didn't whatsoever yesterday.
Oh, you
I
didn't?
didn't want to feel dizzy. Didn't want to.
Oh yeah, true. It could have been made it worse. I guess you don't want to. You can.
There's actually a study being done in Hanover, Germany, right now for cluster headaches and migraines.
Yeah.
And they're using the non-psychoactive ingredient of LSD.
Oh, interesting. I was gonna say MDMA.
Yeah. Apparently, it destroys cluster headaches.
It's like, tell me you have a headache when you've taken MDMA. No, you're gonna feel great, and you can't change that because it's a fact. It's like, your body will respond a certain way if you're given a drug, and you can expect that to be the results every single time.
Oh yeah, they take the psychoactive out, so they can actually, instead of dosing it for like micro 1,000 grams, they actually can dose the non-psychoactive in like.
I think that's crazy though. In my opinion, I'm 100% an advocate for everyone to literally try it and do LSD the way that it should be. It's like it changed my life. I love what it's done for me. It opened my mind. If I had to do life again and they said don't, and you're not allowed to try LSD, I would consider maybe what's the other option. Like literally, like I think it's a huge thing. Huge thing. Most people,
Yeah,
they
no,
conform
I
with
mean
the
just
idea
for
of
headaches.
yeah,
The
oh yeah,
theory is
oh
that
true.
people who don't want to do psychedelics, that they can take a non-psychoactive, and if they have cluster headaches, the non-psychoactive LSD actually, like just gets rid of the headaches instantly within like a minute or two, apparently.
Oh yeah.
Yeah, like people were literally saying like, chop my head off, like kill me right now.
Oh, that's crazy.
But they're getting better, I guess. Yeah.
Yeah, like
Man, I gotta get enrolled.
yeah, I thought about it and I was like, if you could, spawn in again and have the autonomy to choose your character and be like, oh, these are the attributes I have. One of the attributes I think that would be absolutely amazing is to be able to have it so that you could do drugs and not have a negative impact. Because, at the end of the day, like I've done pretty much every drug anybody can think of, and I have absolutely nothing I would change about that. Like I'm absolutely fine. I don't do drugs, but I've done them all. I've lived
I
through
have
all
the
of those
same symptoms,
experiences,
yeah.
and I've experienced every single one of them, and that's how I've gained my experience. All of those different areas of opening the mind and thinking, outside of the box. I didn't listen to what they told me, ever. I did it my own way, and I was my own person the whole time, my own journey, and I'm proud of it. I love it. Most people are too scared to do the things that I've done, and I'm like, I love that. My own way.
I'll send you something to listen to, like a podcast. It's actually
Okay.
quite cool. It has to do with basically if you think that you have like family history of like cancer or diabetes and stuff like that, doesn't
Mhm.
mean you're gonna get it. Like addiction as well. It just means that you may have that certain gene mutation, and if you supplement that gene mutation, then you could actually never have diabetes, never have whatever your family history has, never have addiction,
Oh yeah, that's
and
interesting. I
and
that kind of
all you
makes
do is
sense then,
spawn
and I
in,
hope that they
and they can
harness
tell you
that.
what mutations you have from birth.
Oh,
And
that's
those
cool.
mutations are they come down in your family. And so 200 years ago, if your family member had that gene mutation and they died of like heart disease, you could have helped them if you knew about it.
Hmm.
Like they could have never had heart
Yeah,
disease if they
literally,
just ate something specific.
it's really interesting too, because like my grandma had Parkinson's, and my grandfather's like a really he's like a scientist. Like he taught biology in university and stuff like that, and it's like I saw so many things on like marijuana helping people with Parkinson's, but because it was illegal, you never got to benefit out of it. And I was like, so close-minded, and it's like I just I don't know. I find that we're getting better at thinking the way that you're talking about, and I'm like, only if we thought that sooner, more people would be helped. In the
Yeah,
60s, we were experimenting with LSD and all kinds of stuff, and it was fine. People were allowed to do these drugs, and they were fine. So it's
Well,
it's
that's how
been
the
it's been
Manson
taught.
family actually was created
Manson,
through.
like the guy that murdered the chicks.
Yeah, like the whole Manson family. Like
Oh
everybody
yeah,
was
yeah,
pretty much
yeah.
a serial
Yeah,
killer.
that's why there's no hippies anymore because of that jackass.
Yeah, well, he was a science experiment. Him and the Unabomber were in the same program.
They got a special place for people like that. It's not.
Well, the government created them.
Well, that's.
They took them into a. I mean, they were already there. They had that mindset. They probably were looking for someone like that, but they tried to see how far they could take it, and I mean, it was pretty fucking far.
Yeah, yeah. It's interesting how far they will go in the name of finding an understanding for things they don't understand, and how many people have suffered at the name of this cause, and how many people we don't know that have suffered by it. Like we don't know if Buddy 10 doors down went missing. We don't know the guy 10 doors down. Interesting.
Here, I sent you a link to a podcast to listen to maybe later on. It's super interesting, man. It hooked me instantly.
Hmm.
Yeah, with the gene mutations. So.
Okay. This area that we're in right now, we're grinding it. And it's grinded here before because it was inside the middle of the red zone and green zone. I can see one thing is a fact, that we've made a consolidation around the POC. And outside of that consolidation, we have a spike very similar to the spike that we have on the other side of that consolidation. The good thing about this is it's almost over. This is the line that I care about the most.
For 180. This one here.
You know
So
my
this one?
picture I posted?
Yeah, I use that B point there. Yeah.
Oh yeah.
I don't normally go back and use the B points from,
It is a weird
there,
one.
but
It's like a
but
fourth
I
wave.
didn't find any out elsewhere.
It's weird. You know what it reminds me of is that other day where I was like, hey, they could have put a B point in here, but they didn't. And it was just a grind along the bottom. I'm like, where do you put the B point in here? Because clearly nothing mattered. You can put fibs anywhere down here. I don't care where you put them. It didn't reverse at any of them. I mean, like, really, it's like, where's the B point here? Is it the fourth wave again? And I mean, like, well, if you look at that, and I mean, like, well, we look at this. It's like 1, 2, 3, 4, and I'm like, really? That's butchered as hell. That's not really like we've seen so many 5-wave moves that could be so much cleaner than that. And then I look at this one, and I'm like, 1, 2. This is like a cap wave. See, I don't know what's going on with that lag right there. It's so stupid.
In the exclusive call, I circled the two spikes that look very similar to each other.
Let's take a look. Take a. I see that.
How much is commissions with Lulu then, by the way?
Like less than 50 cents a trade.
Feel weird because I just took around $100 trade there. Then just took a little hedge up there and took it for $100, and now it's giving 60. That's weird.
That's not because of commissions. I don't know what that could be.
Weird.
Yeah, I would double check everything. I've never had that happen ever. Never even heard of it happening. So something must be.
Yeah, just hit the B point there.
Yep. Also the blue line. It's like a head and shoulders on an angle almost, because I see the left and the right are very similar size, time. Not that I'm bearish. I think it's wise to continue holding the long, but focusing on catching the dips while you're holding. The next trade should be a short trade, but nowhere near the middle of this move in here, and nowhere underneath a downtrend. Like I never short underneath a downtrend, ever. Never buy above an uptrend. So, sorry, yeah, never buy above a downtrend, never short below an uptrend. Because at the end of the day, if you're doing that, then what is the excuse for not being in before the trend? Always. And why do we settle for less? Because it's never the best place to trade late. That's where you come back to test anybody that didn't buy prior to the trend break because they saw value in the trend breaking to get to their target. But everybody jumps on the bandwagon of everybody else's trade. They already see formulating money for them and they feel FOMO about it, and then they get in. But that feeling, you can't program that into a robot. And I mean, you can almost guarantee the market doesn't have that feeling. So why do we associate it with this game? Not a winning tool. But if you're so serious and focused, it's so hard to feel anything. What I've understood. Severity of the situation. It's like if somebody's watching you, and it's like imagine you have a coach and like you've been joking with the team and everything like that, and he's watching to see if you're joking. You wanna you wanna smarten up real quick, or he's gonna put you on the bench, right? That's the way that I would see it. I'm like, okay, for sure, you know? It's like, and it can play for any sports team and anything like that. If it's a good coach, I mean, they wouldn't allow for you to do it wrong for long, you would think. 61% retracement. Like I have the attitude where it's like I look forward to seeing everyone at the finish line. You know, like that's the idea. You know, it's not like that's a strong like idea. Like, you know, it's not it's not something where I'm saying anything to do with rushing anything or doing anything quickly, but making it to the end. Something that's very difficult. And it's like it's insinuating that the person that you're telling it to may not make it to the finish line. They don't have what it takes for the journey. So they quit when the first thing gets difficult for them. And you can assume that this can be maybe about 60% of the people. Just the easy, you know, way to get them out of the way. And the institutions will have these people down to a science. Like they'll understand, hey, when we make a move this much, it'll affect this many people negatively. If we do it 4 times, then we'll have 40% less people. That means we can put half as much money in and move the market twice as far. If we've used all of the people in the morning to accumulate their positions because they provide a lot of volume, what are we going to do with that volume? You know, do you know that the institutions have to deal with that volume every morning? Because the people show up and they realize after a certain series of their own actions that they can get a certain response or result out of the public like they're a herd of buffalo. Like we've got the herd of buffalo science down. Like we know how to herd cows and sheep. It's not different, but the shepherds understand exactly how to do it. Like, at the end of the day, they don't even realize, just like the sheep, that they're being herded. And I'm like, well, I think it's important to understand everything as it comes and not to be a victim to another ideology, but have an open mind that allows you to think outside of the strategy that you just last implemented for a profit to see if there is something that could be wrong with it on the next environment or the next move. Like, well, just because a 5-wave move worked before doesn't mean it's going to next. That's the main thing. And it's funny to me too, because this move, it just took everybody's long trade back. And I'm like, well, where are you going to get in? If you allowed this move to knock you out of your long because you didn't hedge it, because you didn't protect it, because you didn't keep your stop at the extreme, because you didn't value being long, and you think that you'll be able to get it in somewhere else. I mean, like, oh. I just think if you're the institution, how would you explain to them that you've given up their assets from 1967? Where are you going to get them back as safely for them to be able to continue holding? Or are you going to work every single day to manage the short term to say, yes, I've got my stop and profit today. Yes, I've got my stop and profit today. We're going to get those assets back. We're going to keep that control back. But who's working? Like, you're going to be working and working and working, and they're going to be watching down your neck every day. Just like, well, the price of not doing it right. There's one way to do it, and that's the way the market wants it done. The way for the most profit. And I mean, like, well, if we see that what we've done could have been more profitable doing it some other way, is the way that we've done it the wrong way? I say yes. 100%. That's maybe a little harsh, but I believe that it should be worked on. It shouldn't be settled for. It shouldn't be something that we should try and do again if it's not giving us the best results. Because somebody's getting the best results, and what you're doing is not good enough for them. That's what's interesting to me, and I'm like, I have a problem with that. I'm like, well, I can't have them win like that. It's just a piece of information that sets the difference. And it's like, we can either be comfortable with it or without it, right? I mean, like, well, it's good to make sure that, yeah, you're in line with the market at all given times. And if you're not, then it's good to stay away. But a lot of people, just because they're at the computer, they will feel the need to trade, and they'll end up likely in the node if they do that. We've moved the node, speaking of which, up here.
Starting to look a little bit like that new pattern that we've got there, John, from yesterday. A little bit.
Yesterday?
Consolidation, up, down, and then up, sideways, and up. Something like that. The one from yesterday. It's in the chart, I believe.
Oh, yeah. Take a look here. Okay, so like the first consolidation has a major pullback and the second one doesn't. Because it's like what we've done is basically taken this consolidation on the green zone and said, hey, if anybody didn't find value in the green zone or below, we're going to take all of that back. Because, who finds value in the middle of the range or in the red zone? It's like, should they be allowed to continue profiting off of, trading actions that are literally just, it doesn't make any sense. They're not buying low, selling high. They're not buying part of patterns. They're not recognizing that this used to be the middle of an old range. Like I'm 100% the market taking all of their money. Like, they shouldn't be trading if they're doing that. So I'm like, okay. I mean, like, you won't catch me being one of those people, that's for sure. And if it means that 80% of the day is at the point where most of the people are going to trade, is it good enough for us? No, not. And the name of the game, like I said, is to keep the long and focus on taking short-term shorts against it. But under no circumstances do we give up the long. And I'm like, well, at the end of the day, this can be done for any long trades that have been held, not even just the ones from today, but the ones from previous days. Did you know that yesterday's is still, the day before yesterday's still holds? So that day that we ended the day at the very low, and it came all the way up. If you managed to hedge for that move, you can see the benefit in having hedged it. And now we're continuing again. If you found value in today's moves, then that's fine as well, but I just, it's easier to be in from a month ago, man. I'm like, now we should all see that. When I'm like, hey, 1,000-point move, you know, don't give it up. Because, let's take a look here. Like, if I type in the word 1,000,
Almost looking like an inverse way at the top. You see that? We're friggin' high, and it has the audacity to do an inverse.
They don't give a shit.
How many people are going to see this as an inverse and then go long way here, like way up here at the high?
a lot of people. You know what's funny is they're probably going to get away with it.
Yeah, but like, possibly. But it hurts me inside.
Yeah, because it's not something that would have worked many, like, it's honestly, I think that a lot of people are shorting it, and they're going to put their stops at the top, and they're going to get smashed. Oh yeah, this is the same thing. So I posted this on the 28th. Right there.
Sure I was there that day, I think. Remember?
Still holding. The key is holding the daily lows long, long, long all the way. I keep saying it. Before earnings, hold. After earnings, hold. Just to be clear, everything below the white dashed line gets bought up. They are long-term control points. It has dipped a lot since this point, but not as low as the entry. Reference the charts from above. The long core still holds. The strategy here was one to have in retrospect, and we haven't even started the real run yet. That's what I'm literally saying here. All gets bought back up below that price. I stick to it. If you're holding and you sell, I'm confident that is the biggest loss you can take. Giving up the clear entries we fought for in capital letters. The strategy is to hold for thousands of points. Mark my words. What the fuck is everybody doing? Because this is huge. You want to know how many points this is? You know, it's 20. Okay, so I guess it would be $2 a point for MNQ traders. That's $4,000, ladies and gentlemen. $40,000.
Stealing is frozen, eh, John?
What do you mean?
You want to gain those thousands and thousands of points, you better. Oh, that's a daily.
Daily.
Oh, I thought you were on the second.
No, it's frozen. Yeah. Oh, that's funny that it looks like it does on the 1 minute for a minute there. I didn't notice how much there's a secondary high in there, and how you could actually think that could be the 1 minute. I'm like, what the hell?
Wow. Okay.
That's an interesting point.
No, you're on the daily. No.
Yeah, I just switched it again. I'm like, well.
Because I didn't see any red candles there, and I'm thinking, you know.
Oh yeah, because you saw the double top coming off, and you're like, well, hold on.
Yeah.
And then I'm like, okay, well,
I can see an M and an inverse. Like, and if I see both, I think other people see both. And if other people see are not as good as me, then they may only see one or the other. So that means like half the people think we're going down, the other half think we're going up.
Let me find another date in here. So you see January 01, 2022?
That's crazy. It lifted off on January 1st, huh?
Oh wait, that was the 7th.
I think the low was in October though, in that inflation report. Because I was there for that.
No, I'm talking about 2022.
Oh.
This is the daily low, and that was after I said to go long here.
Yeah.
And that was a 5,000 point. Like if we type in 5,000, you know, how many times have we seen that that is the case? Oh my god, other people have typed in 5,000. And disregard this chart because it's not meant to be looked at in the long term. So if you think that I'm analyzing it on that time frame, it's absolutely insane. And I won't accept it for 2 seconds. Most people hurts their head when they see multiple lines, but it doesn't mean you have to comprehend it. And I'm just like, there's a culture around that, and I despise it. As soon as I see that, I'm not gonna let it in this room. I'm not gonna let it in this group. People bring that in here, I'll take them out, like 100%. No ifs, ands, or buts about it.
You put down your zone. You can't put them all down at the same time. So it's like, you know your lines, you know your zones. You just put them in over time, and then all of a sudden you got a chart like yours. So like, it's not that hard. Like, just do it over a week, and your chart will look like that too. But you know,
it's a while to get there.
Yeah, and it's like just because they can't comprehend it, they feel negativity just like they do in many other things that they don't understand. That's what I see when I see it. I mean, like my life is full of that. Even just being, yeah, it's full of it. Masonry, full of it. It's all full of it. People don't understand, they fear. It's petty, in my opinion.
Well, I have a good meme. I'm gonna send this to you, John. It's a money manager meme.
Yeah, I'm scrolling back and I see some of this analysis from before, and it just jogs my memory on like some of the amazing things that we've done and the realizations that we've had in these ranges like this. And I'm like, this is an example of how it failed to do something that it was so commonly associated with being able to do. We don't really see too much often. Let me just type in the 5,000 move. Sorry, when I first started the trade, it was a 4,000 point profit target. So again, we have moves like this. You can see the value in being long. You know, so keeping the core long position is necessary to keep it as easy as possible. To the 4,000 point profit target. That means if you just put $100 in on that trade, you'd have $8,000. Just off of $100. Imagine you put 1,000 in. Imagine you put like 5K in. You know, imagine you just bought one NQ. That was a 2-hour chart. Literally. Telling everyone they're going to throw away 4,000 points if not. You know what's funny is I can put it right in front of everybody and people humanly still won't be able to hold because they see that 1,000 profit is too much for them to hold through. They can't make it to 2,000 profit because 1,000 is too good for them. I mean, like, that's tragic, right? Only if you've seen it 1,000 times would you understand that it's worth more to actually make it to the target. But humans are very interesting because if $3,000 is good enough for them and the trade's $30,000, they'll be out at 5K. I mean, like, that's tragic. Only if they saw $30,000 every week for 20 weeks, they would think that cutting the trade early was stupid. But it's all relative to the way that people are and their experiences, and those experiences make people worse because they don't trade like they're like what they're worth. They don't trade like they're making multi-millions of dollars because they trade what they're worth. When they see $100, that's $100 excites them. They take it because that's a lot of money to them. They don't get to the target. I'm like, ew, is what I think. I'm like, ew, that's a waste of potential, waste of time, waste of money, waste of analysis. And the name of the game today is to break through the highs. We've just come back and tested the range, suspiciously particular that they chose it to be the distance out of the bottom of the range, very similar to the distance that we had out of the top of the range. Give or take a few moves. Of course, it's still obstructed by all the people that are literally not aware of the technicals, so we have to work around them, get them out of the way for the end of the day so that when we can see the moves are absolutely clear, it's because those people are not there because they couldn't hack it. Like they've never survived a full day before. But it's also like the culture where it's like, let's say they have the opportunity to quit early, they can go and brag to their friends that they're not working. I think that is the most cringe thing in the world, and I'm like against it so hard. I don't like that at all. I'm offended by it. So when I see that somebody's there and it's slow, and they're working through it, it reminds me of all those times where I was at the office and it was slow and I didn't want to be there, but I had to be there. And it's like
your friends though, right? Like if you make a good trade and all of a sudden you're just done and you call up your friends and then brag about not working, it's like that just hurts them.
exactly. It's the culture though, because
Even if you
people
don't think it,
people take pride in the fact that they finish work early. And if you do that in this industry, I'm gonna come and take all your freaking money because I don't cut corners. And I'm like, if everybody did that, they wouldn't have awareness of that certain part of the day. I have a significant advantage of that certain part of the day, as well as every single time that it goes into this very like untradeable range. I specialize in that, literally specialize in every single thing that everybody doesn't freaking that everybody neglects, and I'm like, ay, makes it easy for me. All you gotta do is put in a little bit of work and reap the reward. And it's like so many people can work really, really hard reading all like the reports and stuff that they're given. That's not working hard. It's not working the right way. I guess, like your job can be, to do a taxi driver, but you can pick up a shovel and start digging a hole in your front lawn instead. You're not gonna, it's like, yeah, you get the task complete that you'll have a hole in your front lawn. It's not going to change the fact that you didn't get your work done and you weren't doing the right work, and you were working harder at making the hole. It was a lot harder than driving the cab, but I'm like, well, just because they were working harder digging the hole doesn't mean that their work is worth anything. You could work hard all day on CNBC, but it doesn't mean you're going to provide any kind of results for anybody. Well, I see that.
It's a work ethic though, right? I got guys at work like one dude specifically, biggest dude in the company via muscle mass, right? Doesn't lift a freaking pinky.
Yeah.
I'll ask him to help me. He literally turns around and walks away. And I'm like, oh my goodness. Work ethic, people.
Yeah.
And yeah, I see a guy like that. And it's like, if you had an opportunity to make a lot of money and you wanted to work with someone who had great work ethic, like he wouldn't even be on your list. That's the thing. the way I see it. It's like, people can create opportunity along the way, and if you show that you're a hard worker and stuff, the guy that has that opportunity may remember you. So
See, we're in the phase of the day where people will start to feel the dread because it's literally decreasing in size on the ATR. The average candlestick is getting smaller, whether people notice it or not. And it's getting closer to the area that's literally more unattractive, hence the slower movement, the lack of interest by the big money.
I'm looking at the 15-second here, and we're moving up on the RSI, but we're moving down with the candles.
On the 1 minute, it's not doing that either, but it's doing it on the 15-second. Yeah, you're right.
Yeah, not the 1 minute.
Trend line 2 I got here, just from the bottom of this secondary low.
Low of the node too. Like now, I'm inclined to draw the trend in. And like I said yesterday, this line right here, it's not affecting the price right now, but it'll affect people that don't understand charting because they can't comprehend multiple lines on one screen. And I see that a lot. I'm offended by it personally, but I think it's like literally, I think everybody should try. If they see something difficult, they shouldn't put a negative barrier up first. They should actually understand, my results are consistent, and I don't step aside for anything. Like it's like every day I have expectations and they're met every single freaking day. I don't remember last day that they weren't. So call it unbelievable if you want. You can choose to be on my team. So at the end of the day, it's something that I'm honing every single day. It's never a complete task like it may seem like it is, but we get to choose whether or not we find value in the area. And if there's a day where we're chopping the crap out of people and centralizing around a node, making things even around the middle of the node, we can choose whether or not we want to find value in returning to the node, being part of any move here, being part of the move that gets away from the node, having awareness of the things that can actually end the consolidation. But my interest right now, it's actually in trying to break the highs, funny enough.
There's a bit of a gap on my capital com between 15,997 and 15,981. So like a 4-point gap just below here in the red zone. Like there's a literal candle gap down there.
Could be just a provider thing.
Yeah, I was thinking that as well, but I just wanted to mention it just in case we kind of spike down to that area. I'll post it just to see what it looks like here.
Yeah, it's also interesting too that, frequently now I see that, it's like the toughness at the middle of the day or the beginning of the day can deter people from being in for the absolute clarity that there is towards the end of the day. And of course, when everyone thinks that they have to show up at the end of the day and they try to make a routine out of it, just expect the market to work around your routine because it's conditioning you to be the wrong way. And most of the people that think that they can make a routine around the market, I think that they're wrong, man. Like hands down. I think that they become wrong. Like they sit out from the times that they think are hard and they try to show up for the times that are exciting, and it's not a good way to do it.
Is lazy in my opinion. Like,
yeah.
I've worked so many crappy jobs, man. Once I'm here full time, like there's no way I'm leaving before market close. Like,
yeah. it's interesting.
Keep you interested, you know.
I can see that this is why that you know, when I look at the traps and I analyze the traps and I analyze what goes wrong for people, I can see that they're falling for things because they weren't paying attention a moment ago, because they didn't take the time to actually look at what just happened and realize that it's happening again, just maybe a smaller version or something like that. And it's like, you know, it's interesting to me how some people can think that the jobs report in the morning can affect the entire day's movement when it doesn't even have something that you can say, like, what is it affecting the fact that we're going sideways? You think that there's so much, you know, imprint from those reports that that's the reason why we're going sideways? I won't hear it for 2 seconds. You know, it's BS. But what it does is it closes people's minds off to actually looking at the analysis and the facts that actually, you know, that we can actually, you know, put our hands on. Like, where, like, yes, there's a trend line, yes, there's a consolidation, yes, there's a space between now and that trend line, which gives us an idea of maybe how long the consolidation can end for. Like, how, or can go on for. How long can we spend at this level before breaking the downtrend? Well, maybe 5 minutes. You know, if it wants to spike down to the green zone, that's absolutely fine. But I mean, under no circumstances did I ever suggest anyone to buy late or within a previous move. So it's like we only find values at the points where everyone is fearful or freaking out because it's at an extreme, because they don't know what a reversal looks like. So they wait for it to actually reverse. And then when it's on its way up, they get excited and they buy in. And then what happens? They're part of the chaser retracer because the market comes back down. It's like, oh, you didn't find value before it reversed? We don't like that. And therefore, we make it uncomfortable for you, if not take your entire position from you. And I mean, like, why is this a result for people that don't do it a different way? See that? And it disturbs me because there's nothing I can do about the sideways movement in the middle of the range. And it's like, I know people develop dread for it, and it's hard for me to keep that that hardened, solid veteran type mentality where it's like no environment is going to make you capitulate because you can't handle it. Like, you're going to fight to the death, you know? Like, that's the idea. You you know, like, that's the way I see it. You know, no prisoners, no nothing. We don't let them win. And it's them or us. You know, funny. That's what's interesting about it. And like, either it's one person's coming out with the money, and it better be us, right? So, if not, we're wasting all of our time and resources. And at the end of the day, is it worth waiting for? 100%. How many B points have I taken off today? I don't know. Already lost count. But there's not one on the chart right now, so just keep that in mind.
Well, this is coming off at 261 to that B point at 1055.
That's another. It's like a smaller version of honestly what happened in here.
That's what I was looking at. Yeah.
Still, I wouldn't be caught buying here the 10-foot pole, because I'm like, even if it is a 261, it's convincing people to buy it in the middle. Like, not good enough for me. And in the middle of an old range. Because when you look at what it's leaving people with, it's like, what, are we buying a 41% retracement or something? I mean, it's not even the 50 yet. And the 50's middle. And I mean, like, it's worse than the middle. And I'm like, okay. It's like the middle would be better than this, ironically. The middle would at least be the green zone. Tough. And it'll spend a lot of time here. And it'll still be wrong for a lot of people. And I'm like, ay. Even if it's right, I'm like, do I want to be positioned from here? Or is the next 61% retracement gonna likely get me out? Probably, so I'm working for nothing.
You're still pretty high. Oh, sorry, go on, dude. Sorry.
Oh, my bad, dude. I was just gonna say, if you were only short, would you consider trading right here, or is it just way too middle diddle?
That's a great question. You know, if you use half or less than your core, then you could. But if you're just doing 1-on-1, you want to be really careful with that, I'd say. Like, it's a tough position. Like, if you're short with 1 NQ and you're gonna go long with like 3 MNQ, yeah, you could do that. But if it's 1 MNQ versus 1 MES, I would wait for something like the 61 maybe. And then,
So I was gonna say we have loads room to come down the 50-minute as well on the RSI.
take a look. All pretty centralized. Yeah, it's like, it has the capability from this point to stray in both directions, and I mean, like, that's a quality of a middle like area. I mean, I look at it as upper middle range right now. Like, what if it wants to be an M? You know, what if it wants to be an all-in-one? Like, it's like, hey everybody, look at this giant M that I'm making, and it's a W. Would I be surprised? Not really, not really. But I just know that it will be easy for the people that chose to follow the rules of yesterday or the day before that, and you continue to hold. And the name of the game is to find the highs and not worry about where to go long, because that's what everybody else is doing because they're late. It's tough for them. And we can choose to settle for that situation or wait for the next extreme. And like I said, when we got to 16,000, we could have a series of really, really small moves that just continuously make it hard for people to develop that short trade. Like, let's take a look at the daily. You know, like, this is what we're doing on the daily. Like, this right here, to the people that I've been teaching, should be very clear that this is a pattern that was orchestrated with absolute precision. The channel itself doubled. Like, let me go find, I guess I can't do it on here. This is the way we looked at it, originally. I'll post it again, why not? If I click on it, it should change this. Yeah. Oh yeah, I posted this over top of it. But basically, which is interesting because it ended up making a little bit of a dip before coming up here, and you know that this is actually a bearish pattern when it completes. And it involves coming up to a new high just past the BC. It's funny too because you can see it's actually creeping through the other side of the chart. I don't know why it doesn't let you function the chart the same way as normal, but you got to use these buttons, I guess. And effectively, if you look at the schematic, the UTAD, it's above this BC, it's above everything. And that's where we are right now, just above everything. And is it not true, this line exists? If we can connect all of those lows. Well, it doesn't show us back, but yeah, we can connect the lows across that bottom. And of course, the way that it is we understand that the people that are exposed to the downtrend break of that channel literally got the target. And look at how they treated the target. The green. These are ranges from over 2 years ago. 2 years ago. Okay then, this is a huge range actually that's already been in play before. Over 2 years ago, we had a red zone up here that was connected with this green zone down here. I find it suspiciously particular that we moved exactly off of a spike in the bottom that chose to support itself off of a spring that was the green zone that immediately went exactly to the red zone. Suspiciously particular. The work of the public. No freaking chance. And it shows how the vast amount of knowledge that the people that do move the market have. They've been around 2 years ago. They've been moving the market 2 years ago. Been printing money for decades off the back of the individuals.
So you see the 1 minute's sort of running into the 15 and on the RSI and getting a little bit of resistance there. I think that's where we're at right now with that.
Funny enough, I think we're getting on top of it. The name of the game is to get through the high again.
Yep.
We'll step on it maybe.
And the 1 minute almost came down to the green line again, right? They were both good good trades for going long.
No, I wouldn't say so actually. I don't care if it's profitable. You wouldn't catch me with a 10-foot pole going long in this middle of the range. I just can't do it. I can't endorse it.
I'm not saying it's the middle. I'm not saying it was a good trade because it's the middle of the range. I'm just saying with that confluence, you know, that it came down to my division of red and yellow on the volume node, and it also hit a 261, and it also came very, very close to the green line on the 1 minute RSI.
And out of all of those things, this is the reversal, but let's see what it does for the people that caught it, if it overlaps them or not. I have a feeling that it will.
It obviously will. I'm just saying that if you want some points, there's potentially some there.
True.
Just like that other low, the one just to the left of it, right? That was the bottom of the 1 minute RSI. And because we know, right, that the 1 minute RSI wants to come up and meet the 15 when we're in uptrend, right? So get a couple of points.
Yep. This is
I don't advocate trading in the middle or anything, but if you're
and at the
or whatever.
EOC and stuff too, so I'm like,
yeah.
that godforsaken red line. I'm like, whoa.
Yeah, I know. I know what you're saying.
Yeah. Yep. And it's interesting because I'm like, well, it's like what the mentality that I would have if I was first starting now and I hear that it's like, okay, there's a series of movements that are to make it difficult for the people that don't understand what's going on. So we're like, all right, well, in order to do it right, you must understand that there's some patience into finding that reversal. And it's not waiting multiple days. It's not, what day have I not put on a green dash line, and it's been removed? What day do I not remove? Pretty much every green dash line that we intend on hitting. There's some that I'm like, I don't want them to hit, and they don't end up hitting until like the next day or something, and that's fine. But every one that we're going for is hit. I can't remember one that hasn't hit. Like, I cannot remember one. Like, I cannot remember a target that does not hit. So I'm like, is it worth waiting for the next one? Yeah. And I'm like, okay, well, let's say there's no waiting or patience involved. You commit to the full day. And then you're like, okay, well, because you're going to do it the full day, there's no dread to waiting. There's no idea that you're could be, wasting your leisure time because you otherwise would have taken it. But you're committing, no matter how slow the day is, to the fact that you're doing this until you find what you want. And it's like, it reminds me of the hunter that's looking for a deer, sees squirrels everywhere. You could settle for the squirrels if you wish, but you can wait for the deer. Your family might not be fed on squirrels. Might have to wait for the deer. So I'm like, yeah, it's there's less of the deer that come around though. You have to be more patient. Might get a little hungrier waiting for it.
Squirrels.
Yeah. And
you gotta survive. If you're in the middle of Alaska, right? You need to eat. I'd be shooting as many squirrels as I could.
Yeah, of course. But you only got one bullet though.
Oh, okay. So you're putting parameters on it.
You don't have infinite shots here though, so I would suspect that would be the case in reality.
Yeah, true. Yeah.
But I like it. It's good. I try not to make them so grim, but they have to be a certain level of grim because it's not a happy fairy tale land. It's a war zone where people are trying to take everything you've ever earned in your life and leave you with nothing. That's the reality of it. So unless we're better than them, well, they'll get the better of us. And it's not that hard when you look at what people are doing out there. The institutions are laughing at the individuals, literally laughing at them. When they release a report, they're like, they're going to eat all this up. Watch, everybody's going to think it's the report from the beginning of the day that did this the whole day. We're going to accumulate the whole way, and they're going to think it's the report. Look at them go. And I'm like, wow, yeah, they'll say all these companies made money, all this happened, and recognize it doesn't freaking matter. And they can try for about 10 years using that information before they realize they'll be so pissed off with the fact that they thought that was the right strategy to go with, and it just literally wasn't because it continuously drains money away from them. And I'm like, well, that's a choice. It's a choice to block off. It's like, reminds me of, we don't ever question, when we're learning grade 3 math, like whether or not the teacher's going to be accurate, do we? But in this, it's like you've got 1,000 teachers spread across all of Google and 90% of them are wrong. You start to think that maybe there is a way that you can find your own way. Try it. Almost certain failure. 100%. I guarantee it, actually. It's like, there's one way to do it and it's the right way. The market's moving, and unless you understand it, you're doomed. And I'm like, it can be understood. It's a language that people can speak, but it's not like people bring the same words to you every single day just because you speak the language, but you can interpret the small little noises that come out of my mouth as different meanings, and collectively they build an understanding of what I'm trying to convey, the message I'm trying to convey. And it's like, technical analysis is a series of smaller moves that insinuate what can happen with the bigger ones, and so much more, and I can prove it every single day. And it's like, yeah, it doesn't matter that, the majority of the time it spends trading at an area where it's not good for most of the people that trade at it until it leaves, which it leaves once. And every other time that it's there, it's treating everybody negatively. And how many times did it touch this red line? How many times did it touch this red line in this 5 minutes? I can't even tell you right now. Maybe if I counted it, 1, 2, 3, 4, 5 times it touched here. How many times did it touch here? More than 5? And how about here? Every candle just made them into a loss again and again and again. Not very nice, and it's not very, doesn't feel very good to be the people of that level. And now we overlap the people of this one. And I'm like, well, that's the price of trading in the middle. I'm like, that's why when I heard that, I was like, oh, it's danger. I was like, no, Randy, you're not exposed here unsafely. I'm like, okay, good. I know, but you could see the fear in my voice. I was like, oh God. I know. Okay, good. Because I'm like, it's like we can put our hand in the flame for a second, but if you keep it there, it's like, oh my goodness. I saw him putting his hand in the flame, and I was like, pull it out. Jeez.
I mean,
yeah, it's good. It's good. Okay, good. That's funny. I love it. That's good. Good job on managing that. Okay, that's good. That's good. It's like, it reminds me of, like, there's a chicken wing in the frying pan, and if you do grab it really quickly, you can have the chicken wing. And it's like, it's like, if you spend too long grabbing it, you will burn your hand, though. That's the interesting part. That's what it reminds me of. I'm like, yeah, exactly. And I'm like, it's hot. It's hot. That's funny. Cause like it was me literally yesterday with the air fryer. I'm like, I grabbed one out of there and I saw how hot it was. The second one, I literally left it for like 15 minutes, came back, and then ate it after. And that happened to me. I was like, oh geez, I really wanted the first chicken wing, so I ate it and went through the fact that it did actually somewhat burn my fingers when I grabbed it. But the second one I didn't, ironically. Price of being hungry. But
Pizza's the worst though, right?
Oh, the roof of your mouth being burned? I hate that.
Yeah.
Absolutely. Especially if you crisped it too much and it's like sharp. I'm like, oh man, that's like all the fun in pizza is taken away instantly. It's like a law of the universe.
You've had it all slide off, like all the
Oh yeah, and you can't get it out quick enough.
No.
That's brutal. Yeah, that's brutal. Mm.
Troubles of life.
Mm-hmm.
I get probably here no change, just trading back to the VWAP, right?
VWAP is where? In the middle, or PSU you mean? Or how'd you mean? VWAP.
No, the trading back to the VWAP. I mean, lifted off the VWAP before it took off this morning.
Oh, like
just open.
Yeah.
Yeah.
The 188's down there. To the big B point. But the M thing we were talking about earlier as well, that's kind of trying. And I'm like, okay, what about the all-in-one? Like, could it turn into a W? I mean, I bet you that would, fool a lot of people if it did. And I mean, like, do we think that the bigger players, they've been advancing it ever so subtly, and then pulling back over everyone that didn't see value in the beginning of the move. So it's like, yeah, sure, everybody could be part of it as long as they were in from where it actually reversed. But if you're not, if you're in from the exciting bit, what happened to them? Taken back. In from this exciting bit, what happened? Taken back. If you're in from this exciting bit, what happened? Taken back all the way. So I mean, like, under no circumstances is it safe to drag any long stops above the green zone or short stops below the red zone. And I mean, like, this range is absolutely terrible. I cannot stand this range anymore, to be honest. We need to get away from it, and we're closer to leaving this range than staying in it. I think it's the 16,000 range. Like, yet again, it just makes sure that everybody that decided to trade at 16,000 is wrong. And I mean, I remember when I first started trading, I would look on the program that I was using, and I would see like analysts posting like about, oh, we're approaching like 10,000 or something like that, and it's like a round number, and they have like one line. They're like, if it breaks 10,000 to the upside, then we buy. And I mean, like, at the top, really? I mean, well, it suits them to put that in there because they'll get paid either way. Doesn't matter if the people that read that article get absolutely destroyed. And then I'm like, well, what if the institutions hired that person to convince people to sell because they needed somebody to buy their position? Or like, what if they round everyone up to offload these trillions of dollars they've accumulated from the bottom? How do they get the volume to do that? What, off of each other? No. Gonna be off the people. And I bet you there's been a task at some point where they were like, we need more people to get involved with the market. What can we do? Do you think they started entertainment companies? Do you think they started news companies? Do you think they bought news companies? Like Ryan was saying, how Jeff Bezos bought the Washington Post because they wrote an article about him or whatever? So if that's allowed, what do you think the syndicates that run the world are doing? And you don't think with all of their ownership and everything that they own and their ability to run the fund. The fund is the fact that, if you know what the fund is the collective assets that they own everything with. They own all of the jobs people work for, and all the companies that release the reports, and all the companies that provide us food, and all the companies that provide us entertainment, and all of the companies that compete against each other. They own all of them. So how do they fail? Well, if all of the people gang up and start selling one day at the same time, that means all of their assets will take a huge hit. So they better be hedged, right? Because they can make money off of their assets getting hit if they're hedged. And with them being hedge funds and all, you'd think that would be a strategy. So how do we hurt them? Well, catch a time where they're not hedging and dump the market before they can hedge it. Good luck with that, right? And I'm like, well, do you not think that before every single report there is, if they don't have full control over that report, that they will have a hedge? And if not, why not? If they name themselves after it. And then I'm like, well, the individual, they don't use those policies to keep themselves protected and to reduce the risk of the situation. Instead, they just fold on the entire position and escape with what little money they can before the market takes it back. And that's no way to live. That's a way of fear and lack of control and suffering and victimized life. I'm like, that's not how people at the top do it. They're despised by that, by being that. And everybody should be. Nobody should settle for that. It's terrible. Everybody deserves more. And what's funny is the people at the top release information like you'll never catch a falling knife. You'll never be able to have consistency for a year. You don't believe that you can get more than 10% a year. Nobody's doing it. If somebody tells you can get more than 10% a year, don't believe them. So just sit with the bank and understand 6% is good enough for you. It's good enough for Jim. I just had a client. He came in here and they were 100 grand up, on their $45 million account or something. I'm like, well, that's relatively good for them. Well, not really as a percentage time wise, but monetary value. But at the end of the day, I'm like, well, that information doesn't do anything good for the person that only has 100 grand trying to invest it. What are they gonna do? Give them 1,000 over 10 years, or over even every year? I'm like, what do you end up with 10,000 by the end of it? I'm like, maybe as well. It's a fat maybe. Just that everything you've ever worked for might be gone by the time you're done your life. Just give it to them anyways, though. Let them keep the control. Because when you suffer, they tell you everybody else is suffering. There's nothing you could do about it. And I'm like, why do we give them the control instead of taking half an hour at the end of the day to ensure that our financial situation is something that can be secured and protected, and something we're taking accountability for everything we've ever worked for? And I mean, like, I don't know. I imagine that, like, at my day's end, I will have to answer questions like, well, why didn't you care about everything you've ever worked for? And it's like, well, if you got to see everything you've ever done, I'm like, well, hold on a second. This really doesn't make any sense. Who's got you convinced that you shouldn't care about it because everybody else is doing it? It's tough. But for me, I'm like, I'm repulsed by the idea of what everybody's doing in every single regard, even in cultural and social aspects. I'm despised by the public usually. So old fashioned, and they don't make people old fashioned anymore. And the new fashion is, can't do it. But it takes discipline to be old fashioned, from what I can see. It doesn't make us feel as much. But you could hear them saying back in the day, but that's the right way to do it. And I mean, the gentlemen that run the show here, I think that they're pretty old-fashioned, and I can see it in their work. And they did not like it when Robinhood came around and everybody thought it was a meme and a joke. I think that they turned around and kind of made sure that everybody's patterns started to fail, and I can see that. Because it was the moment that people thought that they didn't have to work hard for something that all of the people at the top worked really hard for. And I'm like, well, I respect the work. The end of this consolidation is near. They're trying to find the moment to thread the needle. It's like there's been an attempt at a 5-wave move, but it's absolutely terribly proportioned. We've moved to the green zone that has a relationship with the red zone. Unless people have this range, they will not understand the value of the green zone and the red zone and what their relationship is. Of course, there's an S-wave. And S-wave meets back in the middle.
Hey, John.
Yo.
Did you end up following GameStop?
No, not really. I know that Michael Burry guy was associated with it, and he's just like the leader of the plebs as far as I can see.
Yeah, they just made a movie about it too. Not too bad.
Yeah, they'll probably make more money on the movie than on the stock. The way things go nowadays, and it's despicable. I'm like, when you make money off of something that provides no value to the economy, you should fear your relationship with God, in my opinion. Not that I'm religious, but whatever God you believe in won't be happy with you, I don't think. And I studied multiple religions, not just one, which is ironic. Most people, they don't do that. But I did multiple religions for years, so. And I wanted to learn, so that's why I did that. But then I came up with the idea that all of them were wrong, but it's okay. I take small things from each one of them, lessons.
I'm pretty sure, John, though, you pretty much do anything you want. Just, at the end, just ask for forgiveness. You should be good to go.
No, I don't live like that. I believe that we should rectify everything that we need to be forgiven for before we ask for forgiveness. We should try and actually do something about it and be better. And it's like, that's what I think we will truly be rewarded for in the future. If we're punished for vice and rewarded for virtue, it's not virtuous to assume that somebody else will rectify all of your problems. But it's good to hold accountability. I don't have a single altercation with a human being right now, that I can think of. I'm just neutral, and I like that. I try to keep myself away from a lot of people because they're not good for me, ironically. Seem to just try and take. And I think sometimes, continuously being treated like that, if it would make me snap one day and work against the people, and I'm like, I try every single day to create a hardened shell against that, but every single day I'm reminded by the public, why am I even trying? And I can see, the institutions have no remorse against the people, and it's like, what do they know that makes them so freaking angry at these people that they just cut down hordes of people every single day, and they don't think twice about it. And the people are just recycled, just like the sheep in the field. Because the shepherd always has the sheep. What happens to the flock? New ones are formed, and you just grow the herd, and more is produced out of it, and you keep feeding off of the herd. Like, same thing for the institutions. The more hope they provide, the less people would look into strategy, because they have hope instead. And hope makes them feel good until it realizes is a loss. And it's not like, when I explain these things, it's not like I wasn't even like that when I first started. It's not like I didn't have hope myself, but I realized how wrong it was to be like that, to now, to the point where it disgusts me to even think about that. Like, it makes me feel terrible inside. Like, I get a huge defensive block about that. It's like if you saw somebody trying to teach somebody that 2 + 2 = 5, and they were like wholeheartedly trying to give them that information so that they could use that in their life. Like, you'd be like, well, hold on, like, you'd have to say something. Well, some people would. It's like, it's so wrong. Imagine it was like a 25-year-old teaching that to like a 6-year-old. Be like, what are you doing? That's not fair on that person. Say something, probably. I would. So, well, most of the time, but at the end of the day, especially if you know the people. If you don't know them, then maybe you wouldn't say anything. But if you knew them, yeah. And if you cared about them, of course you would.
Hey, what's that yellow dash line, like right above the purple zone?
Oh, that used to be a 61 back in the day. It's like an old 61. Honestly, I could remove it because it's basically representing that there is a barrier where the red zone begins, and it's not any more of a barrier than where the red zone begins. The red zone is the red zone, so I'm like, well, red zone's good enough. basically I'm just like, well, let's see how much the market wants us to have. It basically wants us to acknowledge that there is a range here, and the people that have to wait for it to chop here so that they can then see that there's a range usually doesn't pay them very well. Pays the people that already knew there was a range here. They could respond to the range, and then as it's responding to the range, it shows people, hey, it's actually a range that it's responding to. So if they didn't have the range, they might draw it in. By the time they've drawn it in, it's so close to ending that they try to play the range. It maybe might gyrate once for them. And I'm like, ugh, again, that's like one of those like, ew, at the end of the trend, kind of just recognizing there's a consolidation, then you find value in it. I'm like, no. You know, this entire environment that we've been in here, do you think that this environment right here has been where the top-notch traders have made their decisions for the day? Or do you think that this area, anybody that's went long or short has been overlapped so many times and you know, it's been an environment of traps for people. And yeah, it doesn't matter that it's taken an hour or 2 hours because this is what it takes to get rid of the people. And by the end of it, don't be surprised if the long trade that I said to keep is still benefiting you. And if you captured a short at the high of day, what have you had to do while you're waiting? Watch the profit of your short trade, if anything. You know, manage the hedge, not the long. The long is good. The long is fine. The long, as soon as you touch the long while you're hedged, you lose. You may as well close everything if you touch the long. You know, and just you know, wait for the next extreme. Because if you give up the long, you're going to be settling for the middle, and it could be a prolonged period of time that it spends in that middle. Because how many times does it make the best price, typically? And how much people are associated with that volume? Look at how many people were not there. Look at how many people instead decided to trade in an area that did not provide much value. It's not ever the best price, and was never the best price, and never will be the best price, but people love it. I mean, like, that's just like, ew, again, for me. I'm like, I grow that repulsive feeling, and I feel it even more, and I'm like that much more disgusted in it. And it motivates me not to do the wrong thing, because I'm absolutely repulsed by it. I can see the pain and suffering that people go through by settling for less. So it's nothing for me to wait through it, because it's not like it's not going to provide an amazing opportunity again. It's just going to be after all these people are dealt with. Mark my words. And by the moment, they dissipate. Every single moment that goes on, there's less and less people, and you can almost see it. Because it's not doing this anymore. Not doing this anymore. Where did this come from, you could say? ATR, nose diving. And I'm like, well, I see, you know, the value in being able to spot the danger, and sometimes the danger is there will be a lack of movement. And if there's going to be a lack of movement, how do you make money on that? You know, like it's like, well, what does the middle dictate? For anybody that's chosen to trade in this middle area, they've only been given, at the best, 30 points. But most of the people don't catch the very bottom of the very top, so you'd be lucky if you get 15 to 20. And how much risk do you have to take on in order to get that reward? Are you going to have a 5-point stop? Or less? Or what? And I'm like, well, is the risk reward worth it? And it bothers me that I know it tests the patience of people, and that if I don't explain the danger, you may try it. So it has to be a very serious thing, that it's not just a joke. If you're going to trade in this area, you're going to lose money most likely. I'm like, well, look, what's happened for the people in here? Have they been making bank? What, because they've traded such heavy size in the middle that they've put on so much risk that they've managed to push a profit out of it? That's hardly as honorable as actually catching the low and selling at the high. But people will settle with that in the name of a quick buck. They'll expose themselves to that hot pan, right? Like I was saying earlier, I'm like, it's not worth it for me. But especially now, I mean, like now, it's like this is like looking way better than whatever this was, you know. So I'm like, oh geez, and that was rough too. And I'm like, remember when I was like, it's not even the middle, and I'm like, oh wow, look what it does for the people at the middle. Is it much better? Not really.
People are using here for Confluence to give them at least 50, 60 points a move. You know,
yeah.
I just don't understand it. So.
Yeah.
Yeah.
Yeah, it's interesting. Because I'm like, almost certainly when it leaves this area, it will be without the people that found value in trading in this area. They're waiting for them to leave, and I think that we'll see an immediate change after we're done this range. And I mean, like, well, one thing that could end the range is a triangle, and we're in the triangle, and maybe if the triangle ends, it could end the range. And I say that because after the end of a triangle, we get an increase in volatility. Maybe that increase in volatility is large enough to get us to break the confines of the barrier of the consolidation. And I mean, like, if it is, then it creates a contingency, something we may find attractive in the future. But you know, is it smart to trade from the tip of the triangle at the POC right in the middle of an old range in the middle of the day, after having seen that there was excitement and now we're in the slowdown phase of the ATR? It's just like, do I need to give more bad reasons? You know, or like, or what? I'm like, it's tough. It's not like it's not going to leave this range, but I don't even care. You know, if it leaves for people and it is profitable, like look what it did here, and it managed to come back. And I'm like, do you want to work for it? I mean, you can, but if you choose to find value in other levels, they may not make you work so hard. And I mean, God forbid you waste all your energy in this crap so you don't want to catch the end of the day. That's what it's trying to do to people. Because people settle for it and they're trying to battle it. And then come to actual moves at the end of the day, they'll take a trade and they'll hold it for a few points and they'll be out. You can count on it. Because it was too tough for them and they can't bear the idea of it just coming back every few seconds. So they assume it's going to happen to them every time they take a trade. Because I look at it as conditioning. People are conditioned from the sideways movements to think that the day is going to be sideways. You know, people are conditioned from the open when there's a report to think that the report is influencing the moves. And I mean, sure, you can come to that conclusion if you know absolutely nothing. You know, that's probably a conclusion that you'll come to just by thinking through the variables that you're presented on a chart that looks just like this. You know, like obviously those things, you'll start to look, maybe 16,000 will have something to do with it. It's responded to it so many times after all. But look at how many times it's freaking given people nothing. And that's the reality. Everything that it's ever done off of 16,000, ladies and gentlemen, you want to know what it's done? Come right back to 16,000. Not a single move is held away from it. This day comes back to 16,000. This day is 16,000. This day is 16,000. Every day 16,000 except for one. One of the days inside of this consolidation we did not hit 16,000. Every other day we have. Now, we also came away from 16,000 more than we ever have. This is the daily, by the way. So we can see the 16,000 has had a negative impact on volatility. But it hasn't offered anybody any money for anybody that's pretty much traded at 16,000, thinking that 16,000 is to be the entry. The market does not respect anybody that put an entry at 16,000, or would have given them profit, you would think, right? But instead it's given them nothing. Given them dread and made them have patience. You know, it's like, unless they have patience, they folded in their position, and if they folded, they've likely not made much or lost much. Like I said, the volatility at the end of the at the end of the triangle could end the consolidation. So you have to watch out. Things are changing. Contrary to popular belief, doesn't look like anything's changing if you look at it like this. Either we can accept it or neglect it, like I say.
So you're saying the main reason why it keeps tapping like 16K is because just people like the whole numbers?
Well, honestly, I think that people like the whole numbers, and the big players see so much volume at 16,000, and everybody finds value in 16,000 that's just an ordinary person, that the big players force it to go sideways here. Because consolidation invites capitulation. And when we go sideways for long enough, the people at the beginning of 16,000 will start to get the picture. They'll fold eventually. And you know what we're doing? Is it's not like, oh, I have to calculate exactly when it's going to happen. We are waiting until it happens because it's a matter of the institutions waiting for the people to fold before they decide when it moves, because they can't move it away with all these people involved with it. They have some control. Like, think about it. If 1,000 people are in, then that means that there is 1,000 people trying to take control away from the institutions. And if those 1,000 people all gang up at the next resistance barrier and they all take profit at that resistance barrier, don't be surprised if the institutions can't make it through that resistance barrier because there's 1,000 people trying to take profit there. And I mean, wouldn't it be better if we just got them out here? If they bought here and then they were like, oh, it's taking too long, and then they got out right there. Then we go to the same barrier without that 1,000 people and we can break through it because they're not there. And they're not able to become a barrier there because they don't have anything to sell. So at the end of the day, do we know, like, just like in a video game, like if you have a like an item on a marketplace, like even in Tarkov, and it's like 80k, and you've got like 100 something for 100k, and this is your item, you know that if 5 people have that item at 80k, they have to buy that first before getting to your 100, right? So like at the end of the day, if there's a bunch of people trying to sell at 80, like 1,000 people that all want to sell at 80, you have to buy those 1,000 people out if you're ever going to get the price to 100. Because everything at 80 needs to be bought up to get to 100. So wouldn't it be nice to knock out those 1,000 people here so they can't be a barrier at 80, so they can't take money at 80, so they can't sell anything at 80 because they don't have anything to sell, and I dare them to short it. Because they'll become fuel for the machine at the end of the day. So I'm like, I see this. It's formulating. And from the moment that they met the middle zone, it's pretty much been a danger zone for everybody that's been associated with it. It's offered very minimal movement. And in other words, anybody that thought that it was going to move very hard has been presented with, like, they have to have patience to wait for it. And I'm like, well, it's just they don't do that to people that have caught the daily low. Why did the daily low not grind like this? Why did we not chop like crazy at the bottom of the day? Because that was the best price to trade, and it was literally grabbed up so quickly that so many people found, or not so many people, but it was found so valuable that it couldn't spend any time down there. And it's like, oh, does somebody find this place so valuable that they're buying everything up that's here, or selling everything off that's here? No, they ain't doing crap because it's a shit spot to trade. And I mean, you can tell because it's like, who's trading here? Do you think big money's trading here? Are big orders coming through right now? Is there multi-million-dollar orders coming through right now? Or is it just like dormant, like just like the work of the public, people that are just like, maybe I'll get into Tesla here because of whatever reason I heard, or it's like I see a lot of those people trading here. People start to look at the news to try and find some sort of way to compel them into a trade. And I mean, like, that is just oof. If everybody did that, I mean, all you'd have to do is own a news company, release the news. And is that legal? Yeah, it's legal to stop the public out. It's legal to own a news company and release whatever the hell you want. It's legal to have other people advance your position on their failures. We can advance a position. Like, let's say, for instance, how I was talking about how if we had 1,000 people long in here and they would all sell up here in the red zone, if they found the red zone was a barrier, they might sell there too. And if 1,000 people were all selling out that barrier, it'd be hard to break it because there would be 1,000 sellers there. So if we came down and stopped them all out real quick first and then got there wouldn't be 1,000 people trying to sell there, would there? So could we break through that level a little easier, do you think? Oh yeah, we could. So why don't we... Hey, Why don't we stop them out and then go?
Hey, morning.
Morning.
You got to do stuff again today. I was just making it a point to stop in and say hi.
Oh yeah.
Going to the waste transfer station here in town. That'll be fun.
Oh yeah. Wear a mask.
Shitty job to
I've
me.
got a hard hat and a high vis and probably have a mask. You're right.
Oh yeah, dude. You don't know if somebody's puked in a Corona bag and just fucking thrown it in the garbage or something. Definitely wear a mask.
Corona bag.
Something like that, right? Like, goddamn.
Alrighty. I was just popping in to say hi.
Yeah, man, for sure, bro.
Sounds good. Take care.
Mm-hmm. Yeah. It's like what I'm doing right now is like fishing. It's like you got your hand on the reel. You're not going to start reeling until you find something, right? At the end of the day, you could choose to set the reel on the ground and then walk in the house and not have anything to do with the reel, or you could wait there. Be ready for it. You know, fishermen will understand the value of being ready for the freaking fish. You know, what if it's a big one? It takes your whole rod away, you're not even holding on to it. You can't even fish anymore. But the best fishermen will hold the rod till they're done fishing. It's like the best traders will understand the value in understanding all of the information. Even the bad information that you think is negligible. It's like, well, is the market trying to take your eyes off of it so you don't recognize the importance of having to make this consolidation? Because this is what the market undeniably chose to do, and we can accept that and neglect it. But if it chose to do this, maybe this is an appropriate thing for this environment or this area or this zone, or maybe that's what we do when we're in the middle of this range. And I mean, like, when I start to think about it, it's like, well, of course we do this when we're inside the middle of the green zone and red zone. What is the appropriate thing to do in the middle? Exactly what we're doing right now. Going sideways, chopping, making it tough for people that find value in this area because it's not a good, valuable area. It's meant to get people out of the way. And that's exactly what it's going to do, because you can count on people to quit. And that's what we will see. And they're close to quitting now. They're close to their breaking point. They're all wondering about what they can do for the rest of their day. And then when we get rid of them, let's watch the institutions come back in full force, hitting targets, hitting B points, making patterns. And what's funny is because of the average worth ethic of the person, they won't even think about starting work up again. They won't think about checking their work again. They won't think about showing back up because they'll be done. And that's how most people are when they're done work. So you can count on the fact that they'll take that culture over to this workplace too. And even in the professional world, you know, people take that job work culture into professional trading environments. It made me sick when I saw it in real life too, because I was the one that was there keeping my head on the gym bag at the end of the day, sleeping in the office because I was dedicated. And you want to know what it moved like for me in 2013, 2012, when it was overnight movement, ladies and gentlemen? Like, this was good. Oh. Very, 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 very slow. Now, remember what I said about stopping everyone out? And they followed the plan. Isn't that interesting? Everybody that bought in that consolidation has been stopped out with a swift move that is subject to coming right back to the consolidation in time. Obviously, they're putting people in a very tough spot to try and go long, and that's because they're long. They don't want people to be able to sell and obstruct their ability to push their long higher.
It's hitting the 188-200 and the fibs at like 11.20.
At 11:20, eh?
Yeah, I see little fibs from up there.
Okay. Well, yeah, almost at the 188-200 there. At the edge of the green zone. Come back for a retest of the previous trend break. We will return back to the tip of the triangle in time, and I wouldn't be surprised if we went through it when we did.
Just 52. The overall move up and down.
The 50?
Yep.
Interesting.
Yeah, I kind of spec through it there.
As we can see, we are on command returning back to the tip of the triangle. This is not the way it will always work with every triangle, but it is the way that I can see it will work with this one.
Yeah, that puts us back to that from the 188-200 back to the tip.
Yeah, that's true. That's true.
Yeah.
Yeah, see, the way I was looking at it originally was the fact that we had this movement right here, and we have this spike at the top, and it did formulate out of the bottom.
Yeah. I don't know why you call that out, right? Because as soon as you called it out, I go, oh, okay. And then I looked at the other one lower, and it only came off of 161. But yeah, this makes complete sense.
Well, the idea that we just like literally stop them out, so everybody's like, oh yeah, I'm in the green zone. I see the value in getting to the red zone. I'm buying. And then what do? Take their positions from them and then go to their target. That's the idea.
It happens so quickly too, right? With that spike and stuff like that, it doesn't really give people time to think about it, and you have to be prepared for it.
Yeah, exactly. Because everybody went long in there. Because think about it, when you open an account too, they don't typically. Well, they didn't used to give you the ability to short. Like if you make a cash account, if you go to the bank, they won't even tell you about shorting. And I'm like, well, that means that a lot of the people are only positioned to be able to take upwards movements on the market. So you can count on a lot of people were caught in that range, and they all were just like manhandled out of it. Basically, like you think about it, right? And it's like, okay, you know those 1,000 people that bought in here? They could have been sellers in the red zone because they were buying on the green zone, right? Now imagine this. So they bought here. They have a sell order up here, and they have a stop loss down here, sell order down here, right? To protect themselves. So what happens when the market goes down, stops out those 1,000 people, and then returns right back to where they were without them there, and instead who captured their position? Did somebody just effectively get everybody to herd up in this little area right here in the middle of the range, which is a shit price over the course of history, and then literally everybody settles for it because they don't look at yesterday, they don't look at anything but today, they don't look at anything at all actually, they just freaking mindlessly buy, and
especially
then
a third drive down too, right?
Yeah, and it just made it back to the first of the three. Multiple confluences there, but the number one confluence for me is the fact that I could see the institutions got everybody inside of this range and they wanted to get them out of the way and buy what they had to sell. Think about it. If you're an institution, you're like, hey, I want to develop a position, but there's not enough people to give me my position. Let's have everyone buy and then stop them out. And as they're getting stopped out, we buy their positions. And then when we go to their target, they don't have anything to sell because we have their positions and we can sell there instead. Why is this happening as I say it? People can love it or hate it, but at the end of the day, like I'm right. So it's very, very hard to argue.
I gotta look for that in the future. You know, I like that 188 off of that other one, and then third drive down, coming back to the tip of the triangle, and then yeah, there's a lot of confluences there, right?
There is.
I liked it. Yeah.
It's interesting. I didn't consider one of those confluences until after the fact, though. I knew that it was about the institutions that really got me going with it. But I'm like, you know what?
When you get close to the middle, right? You're looking for stuff, right? You're looking, you know, you always say it's going to come back to the tip of the triangle, but how will it get back there?
But I'm already in though, so I'm like, why would I buy here?
Yeah.
So
well,
that's another.
Accounts, right?
That's
so
another, oh, okay.
There's an account I just I trade basically like I took that 20-pointer earlier.
Yep. I do that too, but I'm like, if it's either explaining it to everybody or taking it on that side account, I choose explaining it.
Yep.
But no, you should definitely take it on the side account. It's a good move. That's what it's there for, bro. Good. But what's up, Hanky?
Yeah. Oh, I was just gonna ask Randy if you said you have 4 accounts. Are they all through like a Lilu?
Oh yeah. Well, I got 5 accounts, but I don't trade on that one. I just I'm building up my Lilu accounts. Yeah, I got a 150. I got a 250s and a 25. I just do minimum on the 25. I mean, nice. You know, you get days like this, you know, where you go long or whatever. Then there's just obvious moves in the middle or whatever. When it comes down to the 1 minute RSI, then I'll take it and stuff, and just build up the other ones. So that's all I'm basically doing, and just going like 1-1-1 on them all, and then build up 2-2-2, 3-3-3, and build it up that way. So
yeah.
Are you paying the monthlies on every single one too?
No. All of it's lifetime.
Oh, that's perfect. That's money, bro.
I know, right?
Yeah, that would be like freaking like $400 a month otherwise.
That's what I was thinking, bro.
Yeah. Couldn't do that. It would be stupid.
It would be stupid. You could just, you could open an account with NinjaTrader for $400.
Yeah, it's like crazy, right?
It's like,
no,
what?
I just do the lifetime and then qualify them all. Just using the bundle scenario, with a 90% off or whatever the deal is, and just using those, building up on those. That's all I'm trying to do is build up 4 accounts. Maybe working on the 150 and the 50 account, and then the other 2 I just do minimal trading on. But just give yourself some options, right? And just lifetime. So
man, you just gave me the realization that if somebody was paying for 4 accounts every month, they're better off starting a NinjaTrader account for $400 every month until they get their feet off the ground.
Oh yeah,
100%.
Like I'd never do that monthly thing where you got to pay every single month. That's pretty insanity. It's crazy.
And if you do, it's with one. Because that's all that there was at the beginning, and I mean that's what right. People had to do, and I mean that was fine. Right.
But they give people so many opportunities now. I think a lot of people are flailing on it, so they're just making money on these bundles, and then but they just don't want you in, because even after you get your PA accounts, a lot of people fail those, right? So get overzealous and stuff like that, and get back to square one again. So they're making deals. They're making money big time with these, even with these deals that come out. You just got to go 1-1-1, right?
So I've been so skeptical about trading today. I took 1 trade today. Yeah,
you just got to see more. It's just all about being here all the time and just seeing it. And once you see it, it's friggin' obvious. You just take the trades that you truly understand and know and have confidence in.
I was normally quite confident. It's just the fact that it's Lilu. I'm like, oh shit, yeah, I don't have 5 tribes anymore now.
Yeah.
But yeah, I think slowly getting in there, just patience with it.
I definitely see myself on like the emotional side still, like I'll see the move, but I'll cut like the first or second contract off way too early because I'm like, oh shit, like what if? And then I find myself doing that a lot.
Yeah, especially when it stutters at the bottom, man. You know what's going up, but it just stutters and it's only going up like 4 points.
Not sweating
back. Yeah.
But I feel like that's a normal thing to go through, though. You build off of that. Like you develop a problem with that, and it will change for you. Like you'll be like, I hate the fact that I only have 1. You'll do something about it eventually, because after having taken off 2 20 times, you'll be like, wait, I got like $500 from doing that. Can I afford to let 1 run? Of course you can.
Yep.
Yeah, the worst runs for like a day or 2, and I planned on holding 2, but like I just got scared and cut it. And I'm like, fuck, I could have doubled everything, But slow and steady, man. This would be a terrible thing to try to rush for sure.
Yeah, it's all about doing correctly.
Yeah.
I feel like once you make that profit though, because once you make an X amount of profit, your trail loss doesn't follow you anymore, does it? I don't believe on Leelu. So once you've done that, then you can at least think about holding, right?
Yeah, that's after you've qualified on your PA, got your PA, and then you you made $3 grand or $9 grand, whatever the hell it is, and then you go from there.
Yeah.
But it's not about money for me right now. It's just about being right and making the right moves and feeling confident about it. Because everything you can imagine, from not holding long enough to being in the wrong trades, trading them in, all that bullshit. Yeah, I've done it all, and I'm tired of it, and I just want to make the right trades now. That's all.
I'm sure you're retired, right, Randy?
Retired from my last job, but still working.
Oh, okay.
I mean, yeah, I was in the military for a while, then I was a financial planner for a while, retired from that, and now I'm doing this.
Yeah, it's awesome. I just don't remember a day where you weren't in here, bro.
Yeah, Randy works 100%.
Yeah. Well, in the summer, I'm not. Well, in the summer, I take off and I go camping on the island and stuff like that. But I pretty much try to be here every day, because it's just time in, right, and learning that'll get you there. Like, you just can't, spend just the mornings or just the afternoons or just a couple of days a week or whatever. You have to be in here every day.
Oh yeah, I have a lot of respect for the work you've put into this. I just want to say as well. It's good. It's what's required. It's what it takes. You're putting in what it takes, and you're seeing the result of what it means to have what it takes, and then to do what it takes to get what you want. And that's beautiful.
I was very successful in the financial planning field too, but I just got bored as shit. But it just takes the same sort of dedication and attention to detail to make it happen. And it's a big difference from being in the military. But again, you need discipline there too. But you just need discipline and time. Like, there's no shortcuts. You just gotta.
But with the military, I find it like there's something about the military's discipline where it's almost like you don't go through it yourself, which makes it easier, I think.
Right.
And it's like this is all by yourself, and you can rely on your buddies in the military to get you through stuff. And in this, it's like, and I think your buddies make you disciplined. It's like, and everybody's disciplined. It's easier to be that way because you're not going to be the one odd one out. You know what happens to the guy that's not following the rules when everyone gets disciplined? They get disciplined even more. I'm like, literally, I'm like, do the discipline. Make sure you do your push-ups properly, or you're going to be doing more. Like, that's what I learned. I'm like, shit. If you complain about it,
same way, right?
It's really more.
Most people make under 50K a year or whatever than that. And then there's only the top 2 or 5% that actually make money in the company, and so you just had to persist every single day. Like in the morning, I accumulate a list to phone people. I cold call people until 1 o'clock, 2 o'clock in the afternoon, and I would leave the messages.
And there would be some days where you got absolutely nothing for it, and some maybe even weeks you would go by probably not getting anything, right? Or what?
Not usually weeks.
Oh, really? Or no, like a week? No. Sorry, like no, I meant like singular weeks. No.
But then eventually, I made so many phone calls that I had so many clients, and then you can get picky, and then you only pick the ones that you really, really like, and they have lots of money, and then you invest it, and then you make more money yourselves. And then you only need 250 families, and then that's it. And I just did this in a small town where I didn't know anybody. Like, I moved here, I didn't know friggin' soul here.
And you did, and then you got to know everyone.
I built up a $50 million book.
Nice.
Within 5-6 years, and sold it and got the hell out of it because I was bored as shit. But the thing about the both of them sort of correlate. You need the discipline. You need to stick with it. Well, most people are actually failing it, and they fail it because they give up.
It's so true.
You need to stick to it, and listen to the people who have done it before, who have had the books of business and who have done it, and what does it take? And every single day, man, I was disciplined. Every single day I made 50 to 100 phone calls every single day, and had at least 3 appointments or more every single day with clients, day and night, for probably 2, 3, 4 years, until I built out the book of business, got referrals, and just fucking showing some discipline, and listen to people that know, and just keep fucking chugging along, man. And at that time, I only wanted to deal with people who were positive. And I got to a point where I didn't care how much money they had, as long as they were happy, positive people. Then I could deal with them, because I didn't have to deal with a shithead. I don't care if you had $1 million
Yeah, exactly.
to invest.
Yep.
Like, right? As long as you're happy and positive, then I'm going to be helping you out. But if you're not,
it's a big difference.
Yeah. Big difference. Didn't need a headache every day. Right?
Yeah, that's what. Yeah, literally at every financial office I've ever worked at, you know, you don't get to choose who you work with in this industry, and they're usually not that great of people in my experience. And I'm sure there is out there, but I mean, like, damn, they're hard to find.
Yeah, I mean, there's nothing worse than having a multi-million-dollar client and the guy's a real shithead.
Yeah, because then you're kind of walking on eggshells. It's natural, you know, and you don't like that. You kind of like, it's just demoralizing. Yeah.
So as soon as you bring in, that's what I mean. You just work hard, bring in new clients that have money, that are happy and positive, and then you drop those guys that are just causing you hate and discontent. You don't need that crap, right?
Exactly.
So, but yeah, after a while, it was like being on an assembly line. You know, I made a lot of money, but whoop-de, right? It's not about the money. It's about being, you know, moving forward and that sort of thing.
And then you start to look at what impact you're having, I guess, right?
Exactly. And I just got bored asking people what their goals and concerns were and planning for them. Like, after a while, I really didn't give a shit. It was just
time to think about yourself for once. Yeah.
Day. Exactly. So, yeah. And I didn't want to deal with the public anymore. That was another thing. I just didn't. I had too much people pleasing and all this other crap I had to do. So I'm glad I don't have to worry about that anymore.
Yeah, and it's crazy too, because it's like, it's I don't even know what to say about that, because it's like the people are lucky to be able to work with a guy like you, and like to the public having that impact on you, so you don't even want to work with them. They don't even know what they're abusing, and I'm like, I can see that it's tough.
You have to be motivated to do that every day. Like, if you're not motivated, like, what the hell are you doing, right? So after doing that for about 10 years, I was just not motivated at all. I mean, making a lot of money, not doing too much. And I said, God, I got to find something else. This ain't it. So that's why I'm doing this, because I'm motivated to do this. And I think it's just not about the money either. It's about doing something that's right and that you understand. And it's a challenge.
Like, exactly. It's an accomplishment to finish it. Yeah.
Exactly.
You know what it's like, the glory of doing it right and knowing that you've done it because you wanted to do it. And that's the key. Yes, I understand that. And most people, they don't know what it's worth to be in control like that. And what is it worth to take a trade that you don't understand? I mean, you're giving that up. And I'm like, well, we know what the glory's like and we can wait for it. That's the idea. And I mean, if like I say, if it dishes out crap all day long and everybody's eating it, doesn't matter. It doesn't mean that we have to. You know, that's the idea.
There's no substitute for being in here and listening to you and watching the charts. There is no substitute for that. And
thanks,
you
man.
just learn so much. Like, you may say it 1 billion times.
But I try.
You know, but then you say, oh my God, I haven't heard that before. Oh, that makes complete sense here now.
Yeah.
You know?
Yeah, and it can all change on a dime, where you're like, you think you're getting it down and it's going to be routine every single day, and you think that this is going to be it's going to mean a lot in the future, and then it becomes the thing that means the least, and as long as we know that, and it's like we can see the change and we can see the reason for it to change, and it's like, oh, well, everybody must be expecting this to happen. Well, we can't allow them to make money on that, obviously. And it's like, basically, it's like obvious that it would change, because I mean, we don't see anything happen for a prolonged period of time anymore. And if you look back when they were all writing textbooks about it before, like, you know, everything was you know, before ordinary people really got involved with trading, it used to be like semi-professionals only, and like it used to move very, very well for them. Like everybody, like they would have like patterns that would generate again and again, and it would just advance in a very, very kind of like mindless way that wouldn't threaten many people that were exposed to it, you know. And that was for a prolonged period of time. It gave that kind of environment, and it was really good at that. We don't do that anymore as much. Here it's been quick and sharp and fast after much difficulty. So it's like anybody that didn't catch the very lows, they're subject to major short-term pullbacks on a regular basis. And I'm like, well, Yeah, there's one way to do it, and it's to have found value in the bottom down there. And I think that's the thing that if we were to look back and be presented with another situation in the future, and let's say you found value halfway up the move, and you could see that the pattern provided value at the bottom, would you still find value at where you got in because your strategy said, or would you change your strategy to be more accustomed to the fact that there's better money in trading at a different spot in this sequence of moves? And I mean, does it sound like? I mean, it just sounds like logic, I'm like, okay, well, emotion is louder than logic. Your past experiences and how you feel about them might be more important to you than the logic of what is actually just happening. And that's funny to me, right? Like, because like there's other things that may be like that in life that we grow into, where it's like you can see maybe like children throwing tantrums, and it's only because they can't see the logic of the situation. We've all been there before, and I'm like, well, it's like everybody learns into a way that makes it so that adults don't have those tantrums. Well, I don't know. I get it's hard to explain, but basically, like we can see that there's a process to finding the logic in a situation, and there's a right way to be or to think about a certain situation to give you better results that you're more in control of. And that's the idea, is keeping that control of your situation so that you're not overwhelmed by your emotions and acting on uncertainties, basically. And and it's like I have this argument when I see my grandfather about emotion, and he says, like, we cannot not have emotion. We can only be good at dealing with it, basically, and like or managing it, because it's human to have emotion. But you know like I think that an understanding of what's going to happen to you or what could happen to you can help alleviate any worry or emotion that there is about the uncertainties of the situation. And when we have a choice to act on uncertainty or to act on an understanding, and we choose to act on an uncertainty, that is gambling, really, if you think about it. Because you're not gambling if you're acting on a certainty, or if you're acting on something that you can prove insinuates that there should be higher reward than what you're willing to risk, or there's a higher probability that you're going to obtain your goal rather than realizing a loss. So I think a lot of how we think about it is a really important, really important. So like you could be simming and practicing and everything, understanding that, hey, I understand a pattern, and I'm going to look for that pattern, and I'm going to try my best to position myself so that I can benefit the most out of that pattern. Does this sound like a logical way to think about it? I'm like, yeah, it does, 100%. And I'm like, okay, well, find out the ramifications of what makes that pattern work, and then understand those ramifications so that you can analyze them and determine whether or not that is the situation of the current environment. And if it is, how do you position yourself to the target? Well, first of all, you can't ever hit a target if you don't aim for it, right? That's another one. Wait, like, I think about that, and I'm like, it's so true. How do you hit a target if you don't aim for one? Like, what are you gonna get? You're gonna get a random result if you're not aiming for something, which is not anything that you could say could develop consistency. And if you're consistently lucky, you should be worried, because you're not in control. But a lot of people don't get to see the past the money. They're like, okay, well, the money's been made, and they try to repeat whatever's made them lucky again, and that's happening out there every day, of course. Now, I just want to point out that we do have a Head and Shoulders inside of the red zone. It is true that the green zone and the 188-200 brought us to a spike outside of the top of the triangle. It's like we've moved outside of the top as much as we moved out of the bottom. Now, just to put it in a different perspective, I want to talk about the move here and how we almost made it to the 61. There's barely volume past this point. Could we still be using the range?
I noticed the 1 minute got on top of the 15 here. With that, just that little jab down.
Yeah, I'm indifferent about this head and shoulders working properly, or rather failing. The spike again. I want to see. Okay, is this the distance past this high? Wow. Okay, interesting. Interesting. Okay. That's a spike on the bottom of the green zone, just like that's a spike on the bottom of the green zone. That's a spike in the green zone, just like that would be a spike on the extreme here. It would be the same distance. The 127, which wouldn't be a 127 to a V point down here, more like a 261. More curious about this. Because you want to know what's interesting is it didn't really. I mean, this is the M that it has. Remember we were talking about it doing this? So what could that mean? Could that mean we take this entire move and put it out to the other side? Oh my god, that would be that level 2? Jeez. I didn't intend for that to be the case. But remarkably, somebody's making it line up, because I'll be damned if it's the random judgment of all of the people that don't know what they're doing that make it work that precisely. So the head and shoulders is failing. It's not a head and shoulders anymore. It's about to be a 3 drives pattern. Head and shoulders, it's supposed to come down, and when it does this, it costs people money. And somebody that just sits down at the computer, they're not going to see a head and shoulders even hurt anybody. You know what we could do? We could make it into a bigger head and shoulders and say, hey, try this one. Fail again. Because you know what? The people in the 5 minute, just like another wave of, like a horde of people just yeah, like they're like waves. They come crashing down, man. That's the deal. Because you can't say, I would say that it would be very unlikely that the waves of people that come in are like, you know, like we're still dealing with the people from the beginning of the day. No. I think it's like people show up intermittently. I don't think that they have the integrity to maintain the entirety of the day, especially when it goes through a slow period like this. If they don't see the value of it hitting an area like this and going slow, let me show you one thing about this area. You know, I posted something last night about this area. And let's take a look at what it is. So check this out. So just before, yeah, that's nighttime. Yeah, okay. So 6:28 p.m. I'm like, yeah, that was a return to the POC. It would seem, because it opened and hit that high there, and I was like, okay. This range around 16K has been known to give chop, like we can see here. So like, you know that we continued to make that the case today. And where have the wicks and spikes been? Everywhere but the green zone and red zone. It got to the green dash line, which represents the target, which is the bottom. So we basically played out from that 161 all the way down to that B point overnight. And the high was just the wicks and spikes past that 161 in that red zone. So you can see the red zone and 161 were in there. Anyone that grabbed the red zone should have been filled at the target. I'm ultimately interested in getting above the red zone. Just beware of the slow chop in the middle of the range. And any stops that are dragged into the middle of the range are more likely to get hit if the range gets used. So taking off enough profit to justify keeping stops outside of the range may be a good idea. Anybody that focused all of their efforts from that point on to make sure that they had positions for the break of the red zone was profitable. And anybody that bewared the chop of the middle didn't buy in the middle, but was in before the middle. So it was what? Green zone or low? Or the red zone? Because what, are you trying to buy to the red zone to get to the red zone? No. And I mean, like, this pattern right here is something we're really familiar with. Well, at the end of the day, we've got a spike out of the top and a spike out of the bottom of a consolidation. And when we did that, it reversed. It broke the trend, right? Like, it took everything that there was in that area, and it's like it doubled it suspiciously, eh? You know, it did that. It took that that move. You can see same thing here. I remember it. Really cool. Because it too shared the same characteristics of having a spike out of the bottom, being separated by a consolidation, and having a spike out of the top, and it broke the uptrend. And it doubled down. Tripled. And yet again, like with this 16,000 POC, like the reality of today is when I see this, I'm like, this is one way that it can be interested in making an S-wave. You know, it could be a lot simpler, you know, and the results could be the same. Like, it could have just actually decided to come down like that and chop there and come all the way back up and then get back to here and actually complete the same result for everybody that's part of it, but it chose to make it like it did. It chose to make it a quick snap at the bottom that pretty much grabbed anybody's positions that were acquired in this green zone or red zone. And that's not very nice, is it? Anybody that tried to find value in that range and didn't keep from the range below was instantly wiped out. So I'm like, well, when we look back, it's like, well, were those the people that bought after the red yellow line break? So is it telling us that the people that found value in being in before the red yellow line break were treated better than those that were actually late and they were overlapped not once, not twice, not but 3 times to make sure that they're out? Because it doesn't want them in? Or else do you think that this is something that helps them? And you think it helps when let's say it gives you $1,000 profit and it pulls back to $400 profit? Do you think that when it gets back to 1,000 or 1,100 that you're still going to be in? You know, most people would remember what just happened to them at the slightest of, you know, sign of pullback. They would try and avoid the way that this makes them feel, because they watch the profit and loss. They don't watch the target. They don't watch the analysis. They watch the profit and loss. And what does the profit and loss do for you? The first thing that people do when they look at it is they seek for feelings. They look at it and they say, how does this number flickering around make me feel? Am I winning or am I losing? And I mean, at that moment, you're not in control. Because if you're in a trade and you understand where the target is and you understand where the price is relative to where you've got in, you know you're doing the right thing, and you should focus on it to make sure that you continue to do the right thing. And any moment that you spend on the profit and loss, you're wasting your time essentially. And you're not focusing on the things that can actually impact your trade negatively or positively, because you'll be looking at something that doesn't represent future price movement, doesn't represent past price movement. It tells you how it's good for your individual livelihood. And do you think that the market's aware of your profit and loss? Or do you think it doesn't care? Do you think it cares about actually the reasons why it's going to move? The reasons why you got into the trade in the first place when you didn't have a profit and loss to look at? And I'm like, well, it's human to look at the profit and loss. It's not like you have to feel shame about it or something like that, but it's literally something that you should want to change by hearing what I have to say. You know, like something that's like, oh wow, you know, every moment that I'm looking at my profit and loss, my enemies are focused on the actual price movement. They could be plotting some sort of move against my trade. And little do I know, I have to I have to, you know, visualize that the profit's actually disappearing before I can do something about it. No. And it's like, well, let's say it visualizes a good profit that makes you feel good and you take it too quickly. Is that not a loss in its own? Because you didn't hold to the target that you set out for. And it surprises most people when they're paid for the targets, because it pays more than you think to get to the target. Like a lot more for the time that you've spent doing it. It pays a lot to get to the target. So it's after having got to many targets, the time that it takes to get to the target is minimal, because you're like, or well, it's not minimal, it's insignificant, because you know that as long as you're on the right path with the market while it's moving, there's no other path that you can be on. If it's a slow one, then so be it, right? That's my point. But don't have it be bad for you because it's slow. That's a weakness. You know how often it's slow? Like, imagine it was bad for you every time. Like, geez, imagine you were compelled every time it went slow to get in and have it become bad for you. But instead, you can choose to say, hey, it's slow. Everybody else is suffering through this and they're having a terrible time. I'm analyzing. This is a moment where you get to spend thinking about your situation, reflecting on what you've done, reflecting on what could happen, reflecting on, what position you're in, anything like that, and understanding, gaining an understanding of the environment, of your, it's situational awareness, really is what it is. I mean, and it's important to have in situations that can be dangerous. Situational awareness is really important, and I didn't come up with that, but with the military guy I was talking to, and he would always get mad at the people that we were, associated with, because they wouldn't have situational awareness, and he would always tell them, and I learned from that. But at the end of the day, it's really important in dangerous environments to have situational awareness. It means that you're going to have an awareness of, the opportunities that you could take advantage of, and the dangers. That's the main thing. And to not know what a danger looks like is even more dangerous than, experiencing a danger that you've tried to fight and still lost. But I mean, if it comes as a surprise, you might even be timid to take opportunities in the futures, because you're worried about the surprises that you just went through and how much of a surprise it was, and it caught you off guard so much. It's like, how far could that surprise go? And what are you after you've been surprised? Well, you're aware of the thing that was a surprise, and now you're that much more capable of preventing yourself from being surprised. But do you have to actively go through the surprise yourself, or can you watch somebody else be surprised and actually learn from it? Of course you can. Learn from somebody else's mistakes. You can learn from an example, for Christ's sake. It's exactly the same thing. You don't have to learn through losing all your money, that people lose all their money, and it's like by doing stupid things over and over again, expecting a different result. And they effectively, they expect the same result. And same result out of the same action. And I'm like, well, how many times does the market have to show the same pattern and give different results before one understands that the pattern alone does not dictate those results, and it has to be something more, And I mean, do we have to lose 10 times before we figure that out? Or can I just tell you? And like, do yourself a favor. I'm like, well, it'd be a lot easier just to not have to lose 10 times first. And I mean, like, that's the key. And a lot of these like traps, as I explain them, I'm like, what is it for you to just choose patience over that kind of hard lesson? I'm like, all right, say you don't know anything about the situation. That's one reason that you're set into this monitor mode where you're monitoring, okay? And you're not going to be taking action at all. It's like somebody's, showing you how to use heavy power tools, or like heavy weaponry or something like that, and it's like, this is how it's done. Are you going to try and start using the tool as they're showing you? I'm like, god, oh my goodness, no. Are you kidding me? You don't know anything about it. Are you going to start touching it and poking it? No, you're not gonna. So I wouldn't do it with this either, because it can hurt you. And I mean, it's not a physical danger, but it's a financial danger. And I'm like, and you also tarnish your ability to potentially learn, because you're not seeing how it's done properly, and you're trying to change your experience, and it's not good. So it's better just to see how it is, see how all of the variables line up, and if they work out the way they're intended, and exactly what the experience was for the people that were associated with that environment. And you can learn right there exactly what the difficulties and the opportunities were for those people. And I tell you one thing, if it's the only time you ever see it, that you're ever going to see it, Like if it's the only, like say it's the penny stock mover of the month and it's the only time you're going to see that penny stock move, like why are you learning that play again? I'll tell you one thing, everything that I teach, we will see it again in some sort of shape and form and variant in the future, but in a different environment that could suggest slight differences or major differences for, it depends, so we have to be able to understand that original concept really well, so that if we can understand if something's wrong with it, and then look at all of the things that are around it, and it's like, oh, maybe it's this thing that's next to it that's making it wrong with it, maybe it's this other variable that's in the equation that makes it not work properly. And then you notice as it continues to fail that there might be something that's more enforced in that environment, a certain variable, like, hey, maybe it's the red zone, maybe it's high, maybe it's the top of the node, maybe there's a VWAP in there, maybe it's the POC, and we wonder why things aren't working like they were in the morning or something. And I'm like, well, if it is in the middle of the range or something like that, that's one reason why things could have changed. Because if it did something that wasn't in the middle of the range before, and it did it well, and then it becomes in the middle of the range and tries to do it again and struggles, well, do we wonder why? Well, of course, there's something different about the entire environment. Yeah, the pattern might be the same. The triangle in the middle of the chart might be the same. We might have had that same triangle outside of the channel before, and it acted completely different. But because it's in a channel, now it acts differently. It acts as a triangle that's in a channel, because it's not a triangle that's outside of a channel, and you can prove it. So why would we treat it the same way if there's such a big difference? It's like we can think about many patterns like this, and it's like, well, if there is such an obvious logical reason for it to be different, would it be smart to assume that it's going to have the same result as the past time it showed that shape? No, it wouldn't be. So I'm like, well, like, or you have the opportunity to wait, right? So it's like, and let's say for instance you've never seen it before in that environment. Do you think it's smart to watch how it responds to that environment, before putting your cards on the table? Because you've got, like, the price of not doing it right isn't worth your time. So it's worth waiting until you can do it right and only focus on those points. And that can take a lot of time for a lot of people, because look at what it's doing. I mean, the right thing to be doing right now is to have held. And I mean, for the past maybe hour, it's only benefited those that have held. Anybody that's bought within the past hour is likely to be overlapped in the next minor retracement. So for what little bit they've managed to squeeze out of the move, it means that they're that much more succumb to the danger, when they're going to basically be in danger if they, aren't at a point where the market respects. And we can see in this environment, the market really does like to come back to the people that are late. And until we leave this environment, we could expect that could be a thing of this environment until we have reason to believe it should change. And it's basically just at the high of this range, as we can see. The amount of consolidation that we had on the green zone, it doesn't really match to how much we've had on the red zone, but that's okay. The name of the game today is to get through the high, as I said earlier. But what it does make through the high, it doesn't have to hold for long though. The 61. How is it treated the people of the 61, and how is it treating the people of the 61? Like, think about how well it worked yesterday when we were talking about the 61 and I was explaining the golden ratio and all that, and how it like kept using the 61. I've taken them off since, but now what worked yesterday is giving people a hell of a lot of trouble today. And I mean, it's in the red zone. It's at the high of the range. It's at the 61. What's a bullish thing about it? I bet you momentum's coming down too. But why is it going to take people's money that short it? Isn't it interesting? Because at the end of the day, contrary to popular belief and contrary to previous indications, all of the things that it's suggesting right now have been suggestions yesterday that worked, and all of the confluences that we have now would have been enough in that environment for it to come down. But there's something different about today that means that this 61 costs people money that assume that it would make them money like it did yesterday. Why? And why can we figure that out so clearly and quickly and easily and see the danger so that we don't have to have it succumb or become danger in our lives? So it's like, how many times have we broken the trend off the 61? It's an interesting one. And of course, the people that are short from the high of day don't even have to take a risk at the 61 because you're waiting for it to knock your hedge out. At the end of the day, if you're in nothing, it's a deterrent, I think. There is B points that are down below that haven't been tested, but they don't have to be tested from here. Could be, but not super interested in them, to be honest. The 161, eh? Reminds me of yesterday. Except you want to know what's interesting about that 161 from yesterday? Where was it? Oh, it's over. Yeah, was the high of day yesterday not a 61? Am I tripping? I can't remember. Let me look in the chat real quick. You thinking about 2 days ago? That's okay. Was this high? Sorry, a 161. No, I got 141. Yeah. These two lines parallel and that channel there do give this line gives me does give me deja vu, sorry, from yesterday. And like I said, the people of the 61 are they're in trouble.
One slightly higher, yet the women at our size coming down a bit.
On
each spike and stuff.
You want to know what's weird about that though? Is like when we get this pattern, sorry, like this one, and then we go like this. In this consolidation, it does affect momentum negatively. So I'm just like, has there been a change to the way we do this? And are we doing this in a different way? I'm indifferent about it, to be honest. Yeah. Sideways movement that we have here could affect momentum negatively, but let's take a look at what it did when it actually made that movement. You know, like the entire time it was going sideways, the momentum was coming off, and like it's never come back, like ever. And I'm like, what the hell? I guess it did there, but still. Yeah, it's a different price. This is the price that it's never come back to, sorry. And I was thinking about here. So it did it again. And it was like, right, well, we did this here, and it came back to it. We came up, and then went sideways, and then went up. Like we did that sequence again there. And throughout the sideways movement, yeah, it went down, 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 until it just like was unaffected for a prolonged period of time. And then it went up, and I was like, what? But then that one, it's never come back to see again.
Yeah, you think that's where we're at right now, right? The longer.
It could be, yeah, it could be.
Okay,
It's
before
giving
we
me,
go up.
it's giving me those vibes though, and I'm like, what? Yeah, it's weird. I don't know. That's weird.
Yeah.
So it's like not just the negative effect of the momentum is the kicker, and I mean like they're getting the people at the red zone, the high of the node, and the POC here. I wonder why they would want people to put a lot of volume here. Is it like stepping on the red zone? Because I mean, undeniably, this entire range, this has been the 16,000 area that we've been like chopping the crap out of. Are we gonna step on it? You know? I mean, like, I think we're closer to the end of loving this range and showing everybody, hey, let's do more of this range. I think people are sick of this range. I'm personally sick of this range as well. I think it's done soon. So I wouldn't be surprised if it didn't want to do the thing that it's been doing and showing everybody. It's like, well, everybody sees that it's a range. They'll try and use it. And like, look at how it's been used today. It's been pretty rough, right? Like, I guess if you saw, I mean, hold on. Like, if I think about it, you come down to buy the green zone at 3 o'clock in the morning. They gave you almost the red zone, but and I'm like, think about those times. That's messed up, right? But now look at the people that could be awake for our session. Starts 7 o'clock. What do they do to them on the green zone? Absolutely terrible. It was like, well, first off, let's take their money, then let's take more of their money, then let's take even more of their money and make them think that, you know, they're getting away with it, then make it even harder to deal with. And then anybody that didn't buy into the BS that they were dishing out at the bottom, literally they had to deal with all of the pullbacks that came with chasing. So I mean, like, you had to find value in where other people were suffering, essentially trying to buy into this green zone because they thought it was going to mean the red zone again. And it's like, well, what it meant is that everything that we did out of the bottom of that green zone is actually subject to being out of the top of the red zone here, which is like, people might not see that yet. And I'm like, well, kind of looks like it would be hard to do. And I'm like, well, the big players, I think that's their goal. Right now, they're just dealing with the people. They're like, hey, let's put an order out there and see who bites. Will they flock in if we make a big order? Because they can't tell if you're willing to make a trade. They can't tell. They can tell how many people are in. They can tell how many people want to be in at orders and stuff like that. But they can't if they have orders there to get in and stuff. It all counts towards volume, and they see it very, very clearly. We can't see their volume though if they don't want us to. They only show us what they want, and it's called spoofing. It's illegal, but we can't prove that they're even doing anything if you don't know their names and don't even know they exist. So it's very interesting. At the end of the day, the small movements that we have here, I think they deter a lot of people that try and get involved with them. So less and less people will be involved with the environment as it goes on. Just keep in mind that the people that shorted the red zone have been getting a slow bleed in the sense that it's like, hey, just drag your stop up a little bit. Just drag it up a little bit more. Just a little bit more. You know, you could take a little bit more of a loss, right? You know, just take it a little bit more, right? Just a tad. It's going so slow. It's nothing. It's just another 20 bucks, another 20 bucks, another 20 bucks, and now you're screwed. And that's happening to people right now because they're just hoping. And I'm like, well,
there is volume up here. I mean, we're still in the yellow zone on the volume node. You know, so it could still move up higher.
Yep. Considering
just runs out of volume after you know, reaches the highs or whatever.
Yeah. And it's like, for every negative response that it's had on this 61 now, it's managed to put all of that movement on top of the 61. And that's the 61. It's the golden ratio that worked so well yesterday. Why isn't it working at all right now? Like, hold on. Very strange. Why does it treat them like this? Even if it does work, you know what they had to go through? And I mean, if it works for how long? For another one of these, maybe. But what this does, like, imagine, you know, people that buy puts and they have the problem with decay, and it just slowly is decaying on their, as they wait and they wait and they wait. Now they have to have it go even farther. They'll be the first to quit. Consolidation capitulation for the options traders quicker than anybody because they decay. Like every moment that goes on, their options worth less as it gets less and less likely to be profitable because it's running out of time.
And about just chilling, to be fair, though, when you see this type of movement.
Oh, but like the thing is when you see this type of movement, it's good to chill. But then once we're waiting for it to change so we can take action, basically. Yeah. Like it's like a sniper. You're waiting for somebody, or that's rough, but it's true. It's true. You're waiting for your target. You're waiting for your ability to take action. And if you take action too soon, everybody's going to come over and shoot you with AKs. That's the deal. So I'm like, yep, you better hit your target once and you better get out of there quick. And that's it. That's what you're there for. You're there to hit a target and they're there to get the job done. And then you're basically doing everything correctly and you avoid all of the risk of not having hit the target and having to wait for the target maybe to show themselves again. I'm like, all of these things, I'm like, it's just like cringe, it's like, you do it right or you don't do it at all. You know what I mean? I'm like, it's like, or they're not doing it right in that circumstance can involve them getting like killed. So I mean, it's like here it's the same thing, I think, but you have to, like, it's financial death instead. And that's the price of not having the patience to wait for the target that's good for you, right? And it's like, that's the way I look at it. Severity is key, I think, because the other replacement is to look at it like a joke, and even in the professional world, people do that, and I see where it's gotten them, which is interesting to me.
Fridays are always interesting ones, though, right?
The what? Sorry?
So Fridays are always interesting.
Oh yeah, honestly, in history, Fridays they've been normally days where they can actually trend in history, and I mean it's just putting that to the test that the way that it always has been and the way that's the most expected way for Fridays is not always the way. Like a lot of people would say that Fridays would be down days, and when I first started trading and everything like that, like especially with a firm, like the level of expectations that people have for certain stocks and stuff, like we used to like religiously trade like Coach handbags and stuff because they would have a dip in the morning every single day, and we would find things on Bank of America every single day, and it would be like it was supposed to move like that. And for a prolonged period of time, like think about it, when we were moving in the daily market, right, and it was like this. Oh, hold on. Could you not see how some days could be very, very, very similar? All the way through there and all the way through here, and then all of these days like this. There's some days in there where it's just like, oh my goodness, you see the same thing over and over again. Like I'll distinctly remember every single day was almost like a rising wedge, right? Every day it was a rising wedge that played out to the downside, and on the daily it was always making a rising wedge that never worked. So it's like if you ever tried to make it more than it was on the day on the intraday chart, you'd always end up getting burned in time. And what's funny is if you ever tried to go for the big home run rising wedge, they it's like it was funny how they could treat people with spiking out of the tops of those rising wedges and how they would treat people like that. I'm like, it's very, very, very tough because under no circumstances is it supposed to break out of the top line. And it did that, and it started to do that regularly. But on the short term, 1 minute, you'd never see it do that, which is interesting. And it would always come back to right about here. And it would take all day to do this process. But in the morning, it would involve typically a big run up, and we could capture that morning push and then focus the day shorting it or buying TVIX. I would trade volatility index derivatives and so on, and basically they would go up when the market goes down and vice versa, and all different kinds of securities that were balancing on each other, multi-leg trading strategies basically. Slow grind can turn fast. And you know what's interesting about the slow grind turning fast is is it makes less chasers, because the chasers are that much less inclined to chase it when it's high or when they think it's high. And this can create a short squeeze by all of the people that have been shorting it now are getting stopped out in big clumps, and they're really thinking twice about going back in. What we do that's very classic, make a big red candle, and it makes it seem like a big red candle because it's like relative to all these little crappers in here. And I mean, like, it's not really a big red candle. And when they do that, it convinces people that have been stopped out to get their positions back because they have hope that they'll be able to make the money back that they've lost on the trade that they want. They'll never think about going long. And that's ironically what they would do. Like I said with Ryan earlier, it was like, people are going to chase, and I'm like, ironically, they're going to get away with it. And it's because people, and I actually don't think that people are going to have the guts to chase because it's high and it's been slow. It started slow, and they got it off the ground really quickly by making sure that it was off of the people that they stopped out. They saw the long traders in here going long in a big clump, stopped them all out, and you know what? Why is it that all of the volume did not reflect when they were getting stopped out? It's almost like it went on to another exchange, no? Or did did it not reverse on anybody buying, right? Because it's right. We don't reverse on buying pressure, do we? I mean, like, that's complete BS. Where's the volume? It's because it went onto dark pools and exchanges that you cannot see, and it should be illegal. But that's the way that it works. If you don't know about them, I mean, you can't strategize around them, and it's interesting. But the institutions are allowed to trade on these. I traded on them, and I've been filled at prices that the stock was never at. Like, I literally had orders below the price, and it would come down like this. My arrows would start forming as I would get filled on things like SQQQ. I'll never forget SQQQ because that was the first time that it ever happened, and I remember walking around the entire office telling everybody that I was filled at a price the price has never been. But I set the program to aggressive order flow entry on plus sign, plus sign, plus sign, plus sign. And they didn't even have a name for the exchange because it's that under the fucking table. And I'm like, wow, so this is what we're up against. And, the market cares more about the volume placed on those exchanges than what people have to offer. And you can just see how it dries up and how the ordinary people don't have anything to do with the best price. They're all clumped into this middle area where it's not good for them. Where effectively, anybody that's shorted from that area would have had to take profit very quickly before it was soon taken back. The longevity of the trade minimal. Anybody that was long in that area was then stopped out, and we could see they didn't buy it back, or they would have volume there. This is the big red candle I was talking about. It's ultimately going to lead to people shorting it and then them getting stopped out again. So, very interesting. We shall see how it moves. Hey, do you want to know one thing about this triangle? Is it was never tested from above, That's another major thing in there, eh? So I do think that we'll see this triangle again in the future. Maybe not here to now, but I do think that those lines will become relevant again in the future. Let's see how it treats the people of the trend break. Do we think, okay, so first off, how has this trend break and what has the life of it been? Yeah, if you just sat down at the computer right now, you might be like, oh, there's a trend. Boom, put it in. It's never broken before because that's a trend. It's here, right? But wait, what happened to this trend? It broke, and where did it go? It only went to here before making a new trend. Where did it break? Oh, it didn't even have any negative, like maybe one red candle. And then what did it do? It moved into a new trend and it broke. And it was like, oh, we'll give them relief, but only to the first people that we started screwing. Because remember, when the first trend broke, it was these people that got screwed, and they only just got their money back. Interesting. And like most people, 70% of them will still wait for more profit, even though they were wrong. And like I say, if you didn't catch the right spot that it reversed, you shouldn't be in anyways. And if you have hope that it's going to continue and you're not in from the best spot, what if it has a 95% retracement? You're in from here. You can't keep your stop at the extreme as safely as if you caught the extreme. So it should be like, well, when it's at an extreme, our intention of trading should be that much higher. But it just means that we have to be focused on catching levels. Like, this is not an extreme because it's literally contained within this movement here. So we have to understand that. If it's contained with another movement, like this is just above the 61. If it was a little bit lower, it would be middle of all of this. And if we're zoomed in so much that we can't see that this isn't the extreme, we might not recognize that it is in fact just above the middle. And I'm like, well, that's interesting. Need to make sure that we keep that minds. Now we've already created another downtrend. Provides a risk for anybody that's associated with the downwards move. As every downtrend does, as soon as you can identify that downtrend, you best believe there's going to be people interested in it breaking. Not interested in it being their friend. The people of this trend were interested in the downwards movement being part of their play. And sure, if the big red candle that's meant to egg people on to go short attracts you, well, we should see what happens. At the end of the day, we're at the POC, and those that have traded here have effectively become part of the people that have traded this far away from the POC. Roughly. Separated by the consolidation in the middle. A consolidation that we could say happened before. It was separated by a spike on the bottom and on the top. We can either choose to accept it or neglect it, but the market did decide that while it was consolidating, that it made those the ramifications. Forgive my scribbles and such, but you can see what I mean. Is it not true that the consolidation did have a spike out of the top and bottom, and that when it was finished with those spikes, it was finished with that trend? And now we have the same movement, except it's not going to be finished with this trend, I don't think. Typically, it would be interested in doubling down. Something tells me that why didn't it do it when it first met the level? But instead, why did it treat everybody like this? Was it because this was the necessary amount of time and space that it was supposed to traverse while it was going sideways? And that's the amount of space that is necessarily separated the two spikes that have happened at the beginning and end of the
I mean, it came out of 188, hit that B point, so that's why it, it spiked to the B point there. B point being at 1229.
Yeah, that's like basically having this triangle.
Yep.
And doing it like that. But except it's separated by like an eternity. I'm like, who's that good for? Who would decide that that should happen? I'm like, it's not good for anybody for it to do that, but you can count on the fact that it makes people leave. Because, I mean, who wants to be around for something that's not going to constantly benefit them, especially with the attention span of the average human being nowadays, right? It's almost like the media that's provided to the average person also affects their ability to withstand environments like this that don't stimulate the mind for prolonged periods of time. And I'm like, well, that sounds like a weakness to me. I'm like, I don't want to enjoy something that deteriorates my ability to have patience and discipline. But yeah, maybe I'm just too old fashioned. That sounds like an old man talking about children in the lawn or something. I'm like, yeah, no, I guess no. But I'm cool with it. What is this, a 61? We want to blow through another 61 again? Is that the deal? Because we're at a 61, and look at how it treated the last 61. Why? Why is it doing this to them? Because the 61 worked.
Well, if you look at the 15 second, I mean, it hit the 30 on the 15 second, right?
Let's take a look.
And then on this spike, and then it came up on top of the line. Now we're riding on top of it. It's usually indicative of going up. because it has to get on top.
Like basically, okay, like it's basically ran into it, and then come up above it, and then stepped on it, and then moved through it.
Going up.
And I'm like think about that process, right? And like imagine that the blue line's the price, and imagine that the yellow line's the red zone. And we came up to it just like we did here. So we came up to the red zone just like we did here, and then we had a little bit of a response negatively to it, and then we busted through it, and then stepped on it. So a little bit of a negative response to it, busted through it, stepped on it. Same kind of idea, except this is happening like here, and that doesn't have anything to do with this over here. I mean, what wood is this? And it doesn't look anything. Well, hold on, does it?
I use it for entries too, right?
Oh yeah.
So even if you're like right at the bottom, it's going to hit that green line that you have there, and then it actually won't start going up until that blue line that you have goes on top of the yellow line. And then it starts going up. So on the 15 second, it's it ain't going up until it passes that line.
Well, it's interesting though, but the 1320 mark that you can see on that one there, this is the 1320 mark. Like that candle itself, when it hit the green zone, it was the valuable area. And like we look back here, what is this one? Well,
that's also a bullish sign when you see it just hitting the 30 there on the 15 second when it's going up.
Yeah. Because that's where you want to be in from. You don't want to be in from when it's hitting the yellow because it's already reversed.
No.
Yeah. It's good confirmation though. Yeah. For when you are in.
Yeah. It doesn't always work that way. I mean, sometimes it hits the 30 and then it actually won't start going up until it comes back down and re-hits the 30 or comes close to it, or you see some sort of bullish divergence and then it goes up.
Yeah. Yep.
So, no different than the 1 minute or any other time frames.
And it's like this one right here, it's really interesting when I look at what it did in this movement right here, because it's like it was like everybody. We're setting up like we always do. Everybody find value in this. We're coming up off the green zone, like right here, and it came up to the orange, and it really like gave that like, okay, we're gonna step on it, and then it was like bam, and then it went up. And I'm like, well, that's an interesting one there too. So you can watch for things like that.
The only second drive, right? We were always looking around for a third drive. That's what it has been doing.
Yep.
It's not going to go up on a second drive. It's going to go up on a third drive. They did that multiple times yesterday.
Yep. It's true.
I've seen that. Yeah.
It's true. And it's like the third drive thing while we're around the 16K, it seems to be very good. And I mean, like, well, as soon as we make any kind of progress that's suggestive of us like being done with this area, like whatever characteristics we're using in that movement, I think are going to be used for days after, and they're going to be new. And probably it's going to look like up then sideways, contrary to popular belief. A lot of people are bearish, and I think it's going to start moving like that. And literally, it's like I'm wondering how many days the low will actually hold for, because I think that it is going to be continuously easier for the people that have held from this point right here. At the end of the day, that was hard for everybody to catch. Those people are still getting rewarded for holding that day and for continuing to hold that day. And now it's just become even more and more unlikely that their position will be seen. So why don't you just focus on MNQ, trading MNQ in the downside? And like that's the main thing. Here we are, blowing through the 61. We've blown through more than the 61. We're through the 100 now. Like look at how it treated the people here. So imagine this, right? Do you know what happened on this short-term move right here? A very small move, right? And what happened here? Well, this big move, we came all the way down, right? We came all the way back to the 61. And it chopped it, just like it did here. But look what this one did here. It effectively blew all the way through the 100. If we were to get this to happen in the bigger picture, exactly as it's happening now, I would not be surprised. And it's like, that high is, like, I've been looking at it since the beginning of the day, and I'm not the only one. Somebody wants it, and they're orchestrating this move, and I think that the method of which that they're moving the market is different to how they did it yesterday. The slow approach, where they're going to get fast at the top. Mark my words, it'll start moving fast at the top, and every bit of fast that it gives that's at the top, it will take back just to the baseline of where it started, and we can do that. You know, like the fast bit comes back, and then we do it again. From that fast bit, we create another motion where we're continuously moving up, but every single major advancement is taken out. And it's only the people that find value in the area that's otherwise seen as tough in this environment. And it's not going to be the way next month, but it's the way this month. Might be the way next month, but I don't expect it to be. I expect change more frequently. Because it's easier for the institutions to dictate the change than to try and guess it with the individuals. And I think that they're in the business of dictating the change now, more so than ever before.
That spike hit the 188 to the B point at 1156.
Is that right?
Yeah. To that W down below.
Yeah, it's like after all that, what fib did that reverse on? It's like, holy smokes, 575. Like here we have like an interesting movement because we have this move again here. So it's true that we have one upwards move separated by one downwards move, and then another upwards move, another downwards move, with another upwards move. So 5 moves altogether. 5 times does it change the trend. And what's interesting to me about that is it's done this pattern before, where it was truncated, the 5th wave. Kind of reminds me of the beginning of the day, where effectively we did this pattern. And it was also cut off from the high. Responsible of coming back to the second wave. It's responsible for coming back to the second wave. So could it do that here? What would it be to come back to the second wave? A test of the red zone. All the spikes that it gives, it takes back to where the spikes begin.
It's kind of like a duplication there, and just in 15 seconds with a spike in the bottom, and spike in the top.
Oh yeah, so basically that red hit, and on the moment that red hit, we were spiking.
Yep.
Again, I'm like, I just want to talk about, the fast fear that happens when we break a trend. Like when we actually break a trend and people are actually selling and they actually freaking, make the market come off, they're really good about like not retesting. And like they're good about making that like, really like sharp cliff dive like that. Like that's nice, right? And like at the end of the day, we can see that, it shares that when it breaks trends like this, and it's like it's sharp and fast, and like really sharp and fast, and like no prisoners kind of movement, and it's like it doesn't give anybody second chances, right? And I mean, like, what is this gradual climb? I mean, is it the fast fear? Do you think people are like, get me out right now? It's like, no, they're not like that. You don't see that right now, and you see stagnation, and it's like, when did we do this to the red zone? And have things changed so much that we do not use the red zone in the same way that we have been using it? And could that be considered? And it's like, well, it is an analytical way to think about it, but it's a factual way to look at the mathematical situation. Is it's like, find me somewhere where it was doing what it was doing now. And if things have changed so much, well, why aren't we using the red zone as we did before? Because this is the longest we've ever spent in the red zone without having come down from it. And I mean, what does that say something? And the people that expected it to work the way that the red zone has, what have they been given? And do we need to go through this pain and suffering in order for us to understand that they're in a tough spot and that what they've been doing, they undeniably wish they didn't do? And it's been that way for a long time now. And I mean, like, geez, okay, well, we've avoided that one, right? So essentially not having to hope that the red zone is going to lead us to the green zone, but instead they're like, just drag your stop up a little bit more, drag it up a little bit more. Well, how's that been going for people, right? Hasn't been going very well because it's just been inching higher, right? It's part of a strategy that's being implemented against a party that has a weakness that can be exploited. And I'm like, well, it was much easier when the institutions did not get in trouble for manipulating the market. Because what I see is they still take the money anyways. Before, they were just clear about it and honest about it. Now, they take everybody's money, more so than they used to. And it used to be a little bit more user friendly. Like the patterns that you find when you type them into Google used to work more regularly. Now you'll be lucky if they work half the time. Half the time, you say, well, that's not something you can really place a probability on. So it becomes understanding when they're supposed to fail all the time and when they're supposed to work all of the time. Not about just when they're supposed to work and only playing them and being succumbed to the failures at any given time. Does that seem like an effective way to trade? Oh, no, 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 no. It doesn't. It doesn't. It seems like, you want to be aware of when it's going to hurt people. So you, one, don't think it's an opportunity. And two, if you find that it's going to hurt people so much that you can be a part of it, well, I'm not going to say that that I endorse that as much, but I'm like, hey, you have to have an understanding of what's going to happen to those people and what's going to happen to you if you get involved with the situation. And if you can explain to me exactly what's going to happen to them and to you, then why would I say that you shouldn't be able to do it? Because at the end of the day, first thing is I'm going to teach you exactly what is going to happen to the people, and it's going to become so clear. Sorry, that basically you will be able to find yourself a part of that clarity. It's like imagine where you've seen people play the tetherball, right? And the guy whacks it around the thing, and it goes around, and he's like, "Oh, that looks fun," and it's like, "Well, let me give it a try. I've seen how you've done it. Can I do it now as well?" And it's like, "Well, yeah, of course you can. Give it a whack." And it's like you don't like headbutt it, right? You would think, or maybe somebody would, right? But you know, let's say it's a basketball, it would hurt or something, right? You never know. At the end of the day, it would be you'd want to do it the way it's supposed to be done in order to get the most out of it, and that's the point. Here, we can see things have changed for the people that think it will be the same, and that is an interesting statement because the people that assumed that the same thing that benefited the past winners would benefit them are now losing. That's an interesting point. Because if not, then why does the red zone not hold when it's conjoined with a POC and a 61 and, somewhat of a high, and only Wicks and Spikes have managed to get out of the red zone? But if that's the case, well, then why is it treating everybody so badly? And I mean, people that have taken options in there are just getting roasted, like I said, right? They're just short and they're waiting and it's decaying, and now their target has to be even farther because their target doesn't pay them what it did when they set out for the trade because they didn't account for all of this sideways move. And I mean, like, well, do we think that the institutions consider the fact that this is the case for a lot of the individuals and maybe they make the market move to their disadvantage? That's a ploy on the composite man theory as well. Because they're the easiest to go after, the people that have been swindled into trading options, for lack of a better security. And I'm like, well, it doesn't have to have all the restrictions that you choose to have, but you decide to prevent your learning from continuing when you found what it is that you specialize in. That's why you find so many bond traders, so many stock traders, so many options traders, so many individuals, so many long-term traders, so many short-term traders, but not all of them. Nobody wants to do all of them because they want to be specialists, yet they're not on a team that can cover the corners of what it's like to not specialize in a certain area. What if it's not a day for your specialization? Are you going to be at a disadvantage? Well, how would you recognize it's not a day for your specialization if you couldn't see the danger coming? Because you only are so focused on what it is you specialize in that you won't hear anything outside of that specialization. And I mean, this common to be like that. I think it's my opinion to be bad. It's bad to be like that, but it's closed-minded, right? And I mean, like I challenge everything. Everything that I say, I'm like, I'm here questioning it with you. Like literally, I'm like, well, the people at the 61, I was questioning it too. I told you yesterday how the value of finding a good 61 and exactly what it can look like. But then when we come to this one in a certain environment where it's like, well, hold on, this is not the same thing. This is not the environment that we were looking for. And it's got some pitfalls to it and dangers to it. And those dangers being realized for the people that didn't see them is what we're seeing right now. And it's fine, to allow that to happen to them because it's part of the process that the market chose. And we can either accept it or neglect it, right? But sometimes this is, for somebody that's trading the 15-second all day long, just scalping to every single B point, this might have been good enough for them. And because they found value in it, this blew past like it was 5 minutes. To other people that only value long-term trades, they haven't been given a single opportunity in the single environment here in this environment. So they feel more dread. But is it not just a matter of perspective? And it's like only if we weren't specialists so much would we be able to see the value and why it does different things for different people. And it's not always good for the same person all the time. It's not always good for the long-term traders. Yeah, I'll tell you one thing. 16,000 has been the worst price for long-term traders for the longest time. Because it doesn't, like, think about it. What has it done for anybody for the long term at 16,000? If every day except for one has returned back to the 16,000. I mean, that's not very good for anybody, is it? Except for the people that are trading in the short term back to 16,000, I suppose. Or everybody that finds value in the short term moves around 16,000. But, to be put into a position where you've taken, a little bit of time to learn all of the strategies that you want to do on the long term. And it's like once you're satisfied and content with what you know, to block off your learning curve and your ability to adapt to further situations, even if you understand some, doesn't mean that you should be so close-minded to the ones you do understand, but rather open to practicing ones you don't understand while you're in ones that you do, like things like that would make logical sense because you don't, like I say at the beginning, you the when you first start, it's impossible to know what a pattern even looks like. It's impossible to even know anything about the market because we're not born with the information. We have to learn it somehow. And at the end of the day, it's impossible to be born with even one concept. But when we sit down and we learn one concept, then we can find one thing. When that one thing does appear, then we may be able to trade it well. Hopefully it works the way that we understand it. Now, if we understand two things, are we waiting half the amount of time? If we're waiting, if we understood 10 things, how much time do you think you're going to have to wait before you see something that's valuable or could provide opportunity for you? You know? It's like, but people stop at the second thing so many times because they can't see past the money that it'll give them. They're just like, oh my God, I know this thing. This is my strategy now. And this is what I'm going to do every time that I find it. And in an ever changing marketplace where we are we are closer to the next change than the next we're closer to the next change than the last thing repeating itself. That's what I want to say, basically. That it's more likely that the next thing is a change rather than the last thing that we just saw. And in the 80s, it was the last thing that we just saw is the most likely for it to be the next thing. 90s could be the case, but maybe spread out over the course of a week and like every week it would have a different characteristic change, or maybe every month it would be a different characteristic change. Now it's like every day, every 4 hours, we can get a characteristic change. And it's like to the people that have had it really slow for decades, it's okay for this to happen. Like I often say, if the market moved twice as hard in half the amount of time, I mean, it wouldn't change much. It would just change the rate at which we could find opportunities and the rate at which they played out for us. So I mean, I wouldn't complain. And I suspect with all the more money and all the more people, it'll make way more sense to have more of an understanding of multiple different environments than it does to just understand one. And was the play not here a rather defensive one? At the end of the day, it was something that was the play yesterday because it was actually something that we found value in. And today it wasn't. Today there was inherent risks around it. And the play was to take the spike out of the bottom of the consolidation, and that's still holding for anybody that's part of it. And the play.
This high here hit my purple line. Your purple line's a little bit higher, but it hit mine.
Oh,
just about hit it. Yeah.
I do like that. And you're.
I think it's still relevant. I think the VWAP's still relevant. I mean, it tipped it and then friggin' went up this morning. So.
I mean, that's a barrier too. Like every time we've ever gotten on top of it, we felt the need to test it from the other side. So I do like that. And I think that that's a characteristic that we'll see again. But the VWAP is far. And okay, one thing that I like about the VWAP that I didn't really consider before is if we look at the space that we've made on the top, right? The space that, well, I guess it's not really that distance. I was gonna say if it was a little bit more, could be attractive, but hold on a second. Maybe I undercut it. Maybe it's supposed to go from the outside of the red zone and go from the outside of the green zone. Now we're talking a little bit more. And what's interesting about that is you can see that as we continue to trade on, the VWAP does have a slight trajectory. I'm like, by the time that it gets to that level, will this have met the bottom? Well, it probably will have. But an interesting point. Not that I'm bearish on. I don't think it's worth giving up any core positions over. But in the event that there is like an 88% retracement, I do believe it will be bought back out in order to make things even on the other side of this range. And I think it might be a little bit more than even. I think that we might see some bearish patterns form and fail because
it hit the 15-second, the 30 on the 15 seconds going up again.
Yeah.
So that's a barrier right now.
Yeah, and it's in conjunction with the POC in the red zone.
Oh yeah, yeah, that's true.
Yeah, and if you look really closely on the 15-second too, you can also see like it's been M into W very, very, very frequently. Like this movement right here did make a dip and come back up. I mean, that's what it did do there. The thing I like about understanding that it's in this sequence is that it can be done when it's finished the W. Because what else does it have to do? I mean, sure, yeah, I could come down and test the middle here because it hasn't done that yet. But I mean, like, that's just something you don't want to obstruct from happening. It's not something you really want to trade. It's something that could happen in a millisecond. A quick snap down to the POC and then a rally through the VWAP or something. And I think that with each test of these extremes on that RSI, we're getting closer to really putting one of them to the test and actually trying to get out of it. Because it's not like it's going to stay in this little range forever. I mean, like, it just made me check the time. I'm like, are we close to the imbalance or something? Like, if we were, it would have made a lot of sense, you know, with this range. Because this is how we act when there's an event coming up. You know, it just goes so slow and keeps everyone so contained and more like they're being detained, not even like it's a forced thing because nobody wants it. Like more like detained, yeah, to be honest. Because I'm like, again, if anybody had the autonomy to benefit positions that they've taken themselves, do you think that they would choose for it to go sideways here? It wouldn't make much sense, you know. It wouldn't. They would try to make it favorably move for themselves instantly to the target that they saw, or maybe not even a target. They would just be watching their profit and loss, so they just want to see it go in the direction that their profit and loss benefits, so that they can watch the profit and loss, then determine how good they feel about it and then sell it. Or if the news is good enough at convincing them out of the position, you best believe they'll sell it because the news tells them to. Like, or if they hear other people are selling it, another good reason why people sell. Which are none of the above are any reasons you'll ever hear me tell anybody to even think about selling, because it's a lack of control. Reminds me of people folding under pressure, like saying I can't take it anymore. Reminds me of capitulation. Capitulation under the own profit. Under their own profit, sorry. Which seems like counterintuitive, you know? Like, I make so much that I can't deal with it, so I have to sell the thing that's making me money. I'm like, because I don't understand how much money it's going to make me. I mean, like, is that the disarray that people are in when they're in a good trade? I'm like, literally feels like it to me. Second. And I mean, who's on the other end of their trade? Somebody that feels the opposite way that they do? Like, it's really interesting. It's like you could say, all right, me and my team are going to play a game against you. The only thing that you're allowed to use to make your moves are your emotions, and you can't think about strategy, and you can't think about anything but the way that you feel. And I don't know what game would win that environment. The strategy, the understanding of where you are and relative to the dangers and the barriers and the opportunities and how well you can fit yourself amongst them. It's like you'll be ready for every environmental situation. And it's like, what's the price of not trying to be ready for the danger? You know, if the like we would all try if we were going into the jungle to prepare ourselves as much as possible. You know, you bring bug spray and stuff if you had the opportunity to. If you're like, here's a shack, it's got all the stuff that you can bring. You're like, oh nah, shorts and a t-shirt, that's good enough for me. I mean, like you last 5 minutes in there, something stuck to your leg or whatever. It's like, oh yeah. And the dips, remember I was like, oh, it can make one big red candle, it gets everybody to short it. Why does it always lead to a new high? Very, 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 very suspiciously particular. It's like it's egging people on to be losers. Why has it costed everyone that's been associated with any time that the uptrend is broken? It's taken their money. Like anybody that tries to dare to fight against the trend has ultimately lost money every time since the inception of this trend. And any barrier that there ever has been that has otherwise obstructed it for any amount of time has been conquered and stepped on and turned into a support. Or are we going to neglect that that's the fact? Or how not if not though? Because if I'm missing something, please tell me. You know what I mean? I'm like, well, it's like I just it seems to be benefiting the people that have the patience to hold. Interesting though. What an interesting Friday too. It's a hell of a Friday because it's not like any Friday that I remember. It's so slow, and I mean, you know what's crazy is they'll be like, "Hey, nobody will be holding after this slow. Everybody will have given up." And you want to know, I've noticed this in the past where, they'll come down, it'll be really hard for people to buy, and every time that they buy, it'll be like, "Oh man, it's just a new loss." Just like how they're like, anybody shorts here, we're making sure it's a new loss. Now remember, daily lows, it's like, "Hey, everybody's a new loss, new loss, new loss. You better drag your stop up with any profit that you've ever had or it's going to become a loss," right? And if that becomes the case, and then it's like, "Oh wow, now it's like they see that it's not bottoming out anymore, but it's just tough and tough and tough." Maybe it goes on a little bit of a decline, but it's not actually going much lower. Like, you know what that reminds me of? Right here. And look at how nice of a reversal it was, and it never. Oh, look at how tough it was for a lot of the people. And I'm like, well, why is this the case? That we are very like I didn't intend to even think about this time, but it is very similar to that environment in a lot of ways. Like, look, it gave these people hope here as well, and it makes new lows. But at the end of the day, everything past that point was literally bought up as quickly as it was sold off, and the people can't see this because it's affecting them negatively, so they think that it's bad, so they quit. Yet they can't even see that everything that is affecting them bad has been bought back up straight to the point that they bought as well. And just because of their experiences, they give up. And I mean, that's why it helps to have a passion for analysis so that you don't jump the gun. You get drawn in for the fact that, hey, oh my goodness, this is actually forming. Because this is forming, I'm going to take action. And if it's any other way, then what way could it be where you still retain control of what you're doing because you intend to do it, and because you see the results of your actions, and because you seek them, and you know what your time is worth, so you 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 only act on things that'll pay you what you're worth, and or at least you do your best to. And that's the main thing, because it's not always going to work, and it's going to be like, how are you going to deal with it when it becomes difficult for you? Well, the first thing shouldn't be to feel anything. The first thing should be to think about what you can do, because it's hard to feel stuff when you're actually thinking about strategy and plan. If you're thinking about math, like try and do um a long multiplication, and while you're thinking about the numbers that you have to put together to get the result, it's really hard to feel anything because You're just basically filling in the blanks. Yeah, it might take you a minute to do the calculation and everything, but as long as you know how to do it, let's say you literally have a calculator and you're like, well, game over. Like, give me the numbers, right? Like, it's like, is there anything negative about that? Well, you know that if you put the numbers in correctly and you know how to, you're going to get the right result. But if you've never used, like, say somebody hands you a calculator and it's in like Chinese, you don't speak Chinese. That's a problem. After, is it useful to you? Well, no, you need an English calculator. Maybe. If I don't know if the buttons are the same, they could be. But after all, imagine there weren't. Imagine it was backwards, which it could be. It could be upside down. I don't know. I don't I don't know. But at the end of the day, it would make sense that we would say, well, do I have access to an English calculator? That would be the first question. Trying to use the Chinese one wouldn't make much sense if you had the ability to ask for an English one. And I'm like, well, okay, well, that would be logical, first off, and we think about that. But if we feel the fear of, oh my God, I've been given a Chinese calculator, what do I do? How am I supposed to do this? And I mean, like, well, you just accept that you're not going to do the calculation because getting it wrong means that you are wrong. And until you can calculate it accurately, nothing gets written down on the paper. Even if you have to go in every single day and you pick out the last calculator and it's a Chinese one every day until finally you get an English one. Then you're like, okay, here we go. Give me some numbers. Now I can deal with you. And today it's rather simple. Pretty much any of the times that I've said to go long, I never said to sell. Instead, I said you should find times to trade against them. And until you get knocked out of those trades that rival your core, we wait patiently. And we have protection. At the end of the day, if you don't have a hedge for your core, you can feel the risk of having tried to get one over the past 2 hours. And how many times less does this happen than the first one I just showed you? We could say that the small one that happened originally happens dozens of times. And this one happened 3. So it can make a trend, and there can be multiple different types of pullbacks within that trend until that trend finishes. But so long as that trend is active, if it shows us that there is a certain way that it likes to pull back, we can either accept it or neglect it, right? But we have to analyze it in order to understand it. And if you don't know to look for it, then you'll never even guess it. You'll never even look at it. You won't even know the importance of it. And all it takes is just that little bit of understanding of, hey, these things have mattered to the market in the past. Will they matter in the environments to come? But always makes promises it can't keep. And it's never a part of my trading strategy. Always, you know what always is good for? Always comes to an end. Always is never to be trusted. And, always means that there's no versatility. Always means that, close-minded and there's one way and it's going to be that way always, and that way can't change. It's a very dangerous way to think about it. That's what people said in 2008. They were like, it's never going to come down. Never going to come down. The dot-com bubble. They were like, it's always going to be like this forever. My grandfather told me about that. And it's like, well, it's tough for those people. They were all wrong. Tough was a shocker for a ton of people. And it's going to happen again. I'm confident. When is the $1 million question? And I think it will be made clear by the market, as it makes every other move clear. And what will be clear is how the big players position themselves for the event, because they will know that it's about to happen. They will benefit from it, guaranteed. Because people really start to lose when they suffer. Because they don't just fight back in the market, they fight back by laying 10,000 people off. Seems to be the magic number. And last year, if you look at how many 10,000 people were laid off by all of the major companies, I find that suspiciously particular, suspiciously convenient for some billionaire to decide why not 10,000. It's good for all companies, good for Apple, good for Microsoft, good for Amazon, All magic 10,000 numbers, like they convened in their inner sanctum and decided that they should cut 10,000 hardworking jobs for their own benefit, or for the benefit of their bottom line, which is their own benefit. They can say it's the company or whatever all they want, but no, it's a benefit of themselves, of course. At least that's how far my trust goes for them. Because I know what they're like, and I don't want to have anything to do with them. And instead, I take pride on the fact that I'm on the other side of every single losing trade that they have. And if there was more money backed up by the things that, by the reversals that I put in there, they would have a big problem, big problem. So that problem may formulate sooner rather than later. Because effectively, if people put volume at the areas where I knew they were getting screwed, it wouldn't work for them, would it now? Because they wouldn't be able to screw everyone over, because everyone wouldn't be part of this node. Everyone wouldn't be part of where they got screwed. Everyone would find value in the same spot that the institutions did, and there would be actual volume down there. But instead, they're comfortable with 85% of the people. As long as they just take a big hand and just as much as they can get, and if they grab, and as long as they get 85% of the people out, they're good. And the rest of the people can fall through the fingers. They're cool with that because they don't matter effectively to them. That's what I could see them saying easily. Because, like I said before, they have, I think, 1,000 times the average market participants' money, 1,000 times, so multiplied, which is a hell of a lot. 1,000 times anything is a lot. But that's what it takes. It takes 1,000 times what we have to impact the market. Kind of interesting. So the entities that have that 1,000 times, people that started those groups, they're likely to be at the end of their lives, if not dead, and pass the torch on to people that are managing it now, because it's a team, and they pass the ability to work for that team on, and that is the lineage, not the money that they made out of trading and they escaped with by the end of the day. The fact that they have a business and a team, and that's what everybody relies on, is the team supporting each other, the team managing those assets that have otherwise been worked hard for at the beginning. And they know it's not just themselves that they're letting down when they make a mistake. And that's power, to actually care about people and actually have like the honor and the respect for the people that you work for, and or work with. It's huge. And at the end of the day, I think that a lot of people, that's the problem. They work for the business, not with the business. And I think that at the top of the food chain, everybody's working together. They're not trying to fight over each other like they are at the bottom feeding portion of finance. I think that they're all very much in line with each other, like a team that works well. Is just so valuable, and you can see that it is the value that's given to those teams is incredible. Like the best of the teams, are contained with the individuals in those teams that do the best in the world. So they're all part of teams, and they all started as individuals, just like we are now, and ironically. So don't think that they have anything on us, because they don't. And if anything, I've started sooner than they did. So let's do this. And I'm like, let's say they started earlier than I did. That they got to learn in an environment that had less technology, where they looked at less information, where they saw less movement, where the market was more stagnant, where there was less people involved, less money involved, less information on past experiences involved, less knowledgeable people to ask, less pretty much everything. And I would say that 10 years in 1930 or 10 years in 1950 is not worth 10 years in 2000. Not worth it. Because you can go back in 2000 and look at what happened in 1950. You can go back and look at what happened in 1930, and you can see that it's not as valuable. If you were to say, "Hey, market, provide me what it gave in 1850, or provide me what it gave us last year," what could I squeeze more value out of if given the opportunity to trade it in retrospect? Well, obviously last year gave more value, more percentage gain, more volume, more liquidity, more stocks on the table, more companies out there, more news events. So yeah, sure, their learning was worth something, but it's not as much as the current curve. It's just like programming. It's like you start learning programming 25 years ago, your information is absolutely useless. If you know how to program a IBM machine that you walk inside of and flicker the switches and stuff, it's literally not the same as what we do now. I mean, like it's completely different. I mean, I don't know how to deal with either of them, but I can tell you the ones that you walked into definitely are a lot different. Well, they better be, you know, because like look at what we could do now. If we could do the same thing with the old thing, you would think we wouldn't need to change it, but we did. And now there's a lot more working parts and pieces and more things to understand with the computers of our days now. And somebody that spent a year working with a computer in 1994 will have inevitably more information about technology than somebody that's discovered it the year that um, Steve Jobs was figuring it out. In his garage with those little circuit boards and stuff. Do you think it's valuable to understand how to do that or how to work our computers nowadays? Or what's the benefit of having retained information from all the way back then? It's like, yeah, it's easier to understand for people that understand the difficulties of the now. So I can take my analysis right now and I'm like, well, your analysis of 1930 where you barely moved the market and it was so slow and decrepit. Yeah, easy, easy, easy. No chaser retracers, patterns that happen frequently over and over again. Everything was new, not obstructed by anything. There's never been a problem with anything because everything was just working at the beginning. And I'm like, well, they don't even know what a problem looks like at the end of the day. They haven't even seen 2008. They don't even know what that looks like. How do they know to sell at that point? They haven't learned from it. So it's not valuable as the current information. That's like saying that people of back in the day when they were good with swords and sticks, like the warrior doesn't stand a chance against like the crappiest like soldier that he's like blind in one eye and everything. As long as he can point and pull the trigger, he's better than any kind of warrior with a sword, right? So I'm like, could be a child, as they've proven many times over. Can take out the strongest of warriors nowadays. That's the way things work. And I'm like, wow, just that little bit of extra technology can mean that the child can overpower that warrior that spent the whole lifetime studying war and they can't stop a bullet. Very interesting. And now it's not even a bullet, it's a button. It's a freaking button. That's how easy it's become. And I'm like, I think they should get rid of all the buttons personally. I think all the buttons should be illegal. Should go back to the bullets and the swords, but cheap to push the button. But that whole point is basically just you have to understand that what we're learning now might be harder to learn than what they had. It might be harder to conceive than the books that you can read about what they had, the information that they had at the beginning. Now it sold 100,000 copies. Look, because it's been around for the longest, do you think that that's going to be the most valuable? It's going to have the most outdated information. This is math. It's meant to be kept up with. When they don't change the books, people fall behind. You want to use a mathematical textbook to learn grade 12 math from 1954 or from now? Same thing. Over the years, I would suspect that maybe maybe the way that it's presented is a little bit easier to comprehend than the way that they did it in the 50s. Hence why this is an impulse wave truncated Elliott wave, and I'm like, well, it could just be a 5-wave move that's cut off. Like that's my point. The way that it was described at the beginning and the way that it was perceived at the beginning is not an effective way to the way that it could be understood. 5-wave move that's cut off or something, like updated. But I'll say it again, pretty much the only thing that one has been able to see with this is the fact that, hey, we've been doing a 5-wave move the entire time. The way to do it was to hold it. If you've gotten out, where do you get back in, and how is that safe for you? Because you know what it's offered is anybody that sold their long trade has effectively chosen to buy back in if they did somewhere in the red zone or above. Now, do we think that it's a good place to buy in the red zone towards high of day or above the red zone? Like, what's the green zone for if not buying? So I'm like, well, at the end of the day, let's say it does benefit somebody that bought right here. And you can say, well, I'm up. I bought from the high of day at one point and it was here. And it traversed a little bit more in this trend. Now, what's the average pullback of every single major blast that we do? When we pull back, is it not true that when we pulled back on this one, pulled back like a 50 right there, 50%? And then let's look at the next pullback. It was about a 50 or a 61, right? 61. And then let's look at the next pullback. It was about another 61. So you could say that over half of every single move the market has given today has come back again with the 61. And then all the way. And then every move started to come all the way back. And now it's like, do we think it would be safe to buy somewhere that is contained within such an average pullback? Like, what if the value of this trend is to break and also get to the 61 and you're in from above it? And like, no matter where we end this trend, the 61 is going to be above this point. So if I mark that 61 right there, and let's say, and I'll mark it with a gold, and let's say we continue going up, 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 up. Oh, all of a sudden, now your position is considered late and above the 61 if we hit this level. Because you bought it so far into the red zone. Doesn't make any sense to find value in areas that could be contained within the average pullback. I mean, that's one thing the market is not like today. And I don't see that that's changing for anyone, because why would it benefit to change that? At the end of the day, one thing that we'll see is if it doesn't pull back, we'll be interested in going up then sideways. I think it's getting more risky to try and trade the pullback. But at the end of the day, if you ever traded the pullback today, you're still waiting for your hedge to get knocked out. Because at the end of the day, the name of the game was to continue holding the long, like I said, I don't know, maybe 10 times today. And then I'm like, well, you want to focus on hedging, on shorting. And at the end of the day, we want to wait for that short to get knocked out so that the long can continue. And the other flip side is that you've given up the long trade to try and fight for it back that's somewhere in the middle, or somewhere that's likely to be contained within the next major retracement. Not good enough for me. Like, who likes to buy above the tip of the triangle? And especially an untested one at that. Or who likes to buy at the pinnacle, at the POC of the node? Like, when we were down there, that point right there was the exact POC of the node. It was the point of control of the node. And it's been really tough on anybody from there. So we are now touching the upper VWAP band that I've got there. And I wouldn't be surprised, contrary to popular belief, to see bigger green candles now. A lot of people won't be chasing it, and a lot of people are out of the way. So when the institutions put a little bit of money in there, they're not obstructed. So they're cool with pushing their assets a little bit higher, especially if they buy them on other exchanges and they can't get caught for pushing positions that they quote unquote that don't exist. You know, if the public can't see them, I wouldn't be surprised if the Fed couldn't either. But at the end of the day, derivatives can be completely hidden. After all, you know Michael Burry about that freaking the movie. He went into the bank and created his own securities to be able to short the housing market. What do you think the institutions can do? You think they got some special ones that move the market in their own way? Maybe keep them hidden from the public's eye so that they can't see their moves before they do them because of the amount of volume that they have to put in. I'm sure the public has interpreted their volume before as something, you know, that they didn't want. And I'm sure that dark pools were created to avoid people from interpreting the institution's volume. And they get away with it. Or you have to fight their hundreds of lawyers with their trillions of dollars. Good luck with that, right? Not even the government tries. So, especially it's hard to when you don't know their name because they're so good. I'm like, yeah. And if they're not doing it that way, then I would find it very strange because there's no better way to do it. And I don't question that they're interested in keeping that major control and doing it the best way to benefit them for the long run and benefit the team at the end of the day. And hedging, I wouldn't doubt, started as a something that can keep your assets safe, right? And they only became named the hedge funds after they realized how much money they could make off of hedging. Didn't become about making it safe anymore. It became about making it safe and making money. Think about it. Because if it's not working that way for the best of the hedge funds, they're not the best of the hedge funds. Can't be. But this is a law that must be the case for the people that are at the top of those hedge funds. They must be good at hedging. They must find value at keeping the fund so they have something to hedge. And if they sold every time they saw a problem, do you think they would have much of a fund to hedge? No, it's about keeping the fund, keeping the control, and hedging to keep that short-term control over your long-term assets. It seems to be just like, you know, it's very interesting because they're in the business of that. Everybody else is in the business of just getting a quick buck and escaping. I'm like, what the hell? Do it like they do it and have what they have. And you know what they go for? They go for clarity. They go for ease. They go for consistency. No hope at all. As soon as hope comes in, it's like, no. So this line right here is a blue line. The next time we pull back, we are likely to hit that blue line. So any stops to any long trades that are dragged above that blue line are subject to getting hit until it does get hit. And that's like, okay, well, what if it gets hit multiple times? Well, until it gets hit and moves away then. And honestly, I don't think it's ever safe to drag long stops above that blue line, but in the event that you broke your position down and kept some stops at the bottom at the extreme so that you had exposure and regardless, and then took part of your position and started dragging the stop up, it's like you can do that and take some of it and reduce the risk from some of your position. You're still trying to keep as much exposure as you can, but you wouldn't drag that stop above the blue, just asking for it. And I mean, as it touches the blue, the middle medium line on the RSI could be getting tested as well. I don't mind that, even on the 15-second, both of them. But it doesn't have to linger much down there either. It can be very quick and it can happen from 5 points away, 10 points away, but no matter how far it goes away from that blue line, I don't care how far it goes, it comes back to it. That means it's unsafe to assume that buying above the blue line is going to hold in perpetuity or longevity is major risk up here. Doesn't mean it has to be easy for people shorting it still, but it's going to be easier. And it doesn't mean it has to offer much for those that do take part in it. But personally, I look at it as something that should be monitored, something that should be allowed, something that something that's necessary. And if something is necessary to happen while you're waiting for your target, Like, let's say, for instance, if you're in on a long trade, right? And it's going up, and you find that there is an absolute necessity for it to come back to this level. And you know it's going to happen. Like, everything is telling you that it's going to make this move. And let's say this move is 50 points. Okay? Let's say this is a big move, and let's say this is 50 points, right? Look at it come to the blue line. Anyways, the move is 50 points, so you can take this on MNQ, right? So if you're in NQ, why don't you take MNQ for that 50 points? And let's say it does it again, and you're like, oh, I see it's going to do it again. Why don't you take it for 50 points? And let's say, for instance, if you're in NQ, right, it's worth 10 MNQ. So 1 MNQ is worth 10%. So let's say you got 5. That means you've got 50% of your position essentially able to profit off of this 50 points. And effectively, if you were to repeat that process twice while you're waiting for your assets to continue, that means that you've been able to benefit off of the decline where everyone else is like, "Oh, I'm tempted to sell. I'm tempted to sell. I'm tempted." That's what they do. They sell. They get out. And I'm like, where are you going to get back in? You folded under the pressure of your own profit. You didn't realize you could actually make money off of the thing that you saw so clearly that you sold the thing that's going to benefit you. And I'm like, well, look at how that's worked for the people today. They were like, oh yeah, it's got a spike or whatever. It's something. I mean, how many levels have we went through where I didn't set a single expectation until now? Until now. The only thing that I said was that it would come back to that blue line. And under no circumstances do we not come back to that blue line. So am I explaining right now a little version of what it's like to find interest in this move? And could you have taken this while you're waiting for more progress? And in the event that it gives you more, while people are sweating buckets about it coming down on their position, oh no, if you're short from the top, oh my goodness, it's like, give me more money while I wait. Because it's only a 61. And it means that you don't have to take your stop and drag it all the way up, and get stopped out when it pulls back. Because you can keep it at the bottom because you're focused on taking this hedge down. And you're focused on dragging your stop from your hedge down. And leaving this and capturing the entire upwards movement and not folding under the fact that it's too tough or that it's given you too much money. I say don't even check until you're at the target. It makes no sense to look at the profit and loss. And if you can see how it's benefited you, then let me know. But at the end of the day, there's nothing more valuable than understanding where you are and where your target is, and how capable you are to knocking down every barrier between you and that target so that you can get what you deserve. That's what, like, I mean, and if you don't intentionally do that, then don't be surprised if the market gives you something that you don't like, right? For lack of a harsh explanation. So it's like, well, now we can see that everybody that traded back to the blue line was just given the blue line. And the assets continue. And I'm like, oh, God forbid somebody sold because they saw the risk in it coming down this much. They don't get to be part of any upwards movement. Remember, I said that we're going to get bigger green candles, no? And we were at the high, no? Interesting that it's doing that, like it's listening. Contrary to popular belief killed the cat, though. Curiosity compels you to continue looking and analyzing and finding what you deserve. Like the hunter's curiosity, it's like, what's over there on that field? Should I look or should I sit here and look at the ground? I'm like, how are you going to do? You gotta look. You gotta find your target, or you're not going to be given something that you demand. You have to know what you want so that you can get it, and you can put your energy towards getting that thing. And it's very much like if somebody has one shot and they've taken it and they get out of that opportunity, it's like, where has it offered them a safe opportunity to get in that's not going to be overlapped in the next 61? So as of right now, if we were to reverse from here, that means that anybody that's bought above the tip of this triangle is contained within this entire 61. Which means that you had to be in from when it was spiking at the bottom. And then I look at all the volume there, and I mean like, oof, don't be surprised if we come back to get these people again, but these people are safe. That's an interesting point. So it means that if you're hedged, you target this, and you do not drag your stop above that level. You keep it at the extreme, and you fight for the highs like everybody else, except if you use 5, like, so let's say for instance, if you're on 10 NQ, so if you've got the value of 10, which is 1 NQ, and you use half of that, if you're right, then that means you get to take profit on 5 contracts. But if you're wrong, 5 of the 10 contracts that you have are being canceled out. So instead of making the value of full 10 while you're losing, or while you're winning, you're just making 5. Just making 5. And what's funny is in the moment that you screw up, if you've got that 1 NQ at the top, or at the bottom, and it comes up and you lose on that 5, you can close both positions and get away with starting again fresh. Because at the end of the day, that moment that you've accepted a loss on that hedge, you've made half on that NQ, and when you lock that in, that means that there's no other way that you can lose that half again at the same level. Because if let's say for instance, if you hedged it with 1 NQ at the bottom, and then it went up and started doing this, and let's say you shorted it here and lost money with 5, and then you did it again and lost money. Now you're catching up with how much you're making. Now you're catching up with it, but only if you do it twice at the same level. Now, do you know that if you were to use 3 contracts at $2 a point still, so that would be $9 a point you're still able to capture. So at the end of the day, basically capturing this 25 point move is still pretty lucrative. You know, it's not like it's not paying well. And I mean, you have to lose 3 times at the same level and you're still up by 1 contract, you know? Because if you took 3 and lost here, and then took 3 and lost here, and then took 3 and then lost here, that will cancel out 9 of your 10 contracts. And if you close everything at that moment, you've had 3 chances to get your short. Whereas for somebody that's not holding the NQ, that's 3 losses that they can add to their account. But somebody that's hedging, it's not even caught up with how much they've made. And they've got to try to short it 3 times, and they were wrong all of the times, and they're still up. I mean, like, this is what's this is the strategy that's being used against you on Wall Street. And I'm like, well, it's not one strategy. This is one way that you can hedge, and it is it's not like a strategy. It's like a way of life, you know? That's why they name themselves after it. That's why they live and breathe it. That's why I teach it every day, you know? It's important. Really important to the people with all the money, so it should be important to you too. And we should stop looking at people that don't have anything to show for any of the analysis that they have, like CNBC. All those people are making like less than 100 grand a year. Like, what the hell? Like, and then everybody listens to them like they're going to become millionaires. I'm like, I don't understand that. And it becomes the case when, if you were to take all of like Jim Cramer's call outs, right, over the past like 10 years and put like 100 grand into it, like, you wouldn't be able to live off of it. So it's like he would be down, I think. And like, it just goes to show that, like, that's not the information that he uses to make his own money. So it's kind of interesting to me. and I find that very unethical. Like, I think that every like bank manager and stuff, if they get you into something, they should have 10 of it themselves. I think so. But you think that would be fair? They're the professional after all, right? So, really should. And it's like nobody should be allowed to sell something that doesn't have a negative impact on you when the people that get it from you literally can have a negative impact. It's like literally you have to be in line with it. And I mean it should be like a law in my opinion. Like when I got my first broker, it was like she did something where it wasn't like you pay them no matter what. It was like she wanted 12% of the profit. And I was like, well, that was an interesting way to go about it, but it's a way that I do respect a lot more. And it gives them the invested interest in making sure that you.
Nice cut for them.
Yeah, I know, right?
12%. Oh my god.
Yeah, I know, right? She was $1,500 an hour to work with her.
Jeez.
She's vice president of RBC Dominion Securities. My great grandfather had her as a broker when she was 18. My great grandfather used to trade in the Great Depression in the mining exchange in the TSX. So she's been around for a while.
Making me think of Wolf of Wall Street.
Wolf of Wall Street doesn't even trade.
Yeah, I know.
He's a con man.
Yeah, the commissions and stuff like that. That's what I'm thinking of when you said 12%.
Yeah.
Yeah, 15%.
Well paid to bullshit. Yeah.
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 It's sales, man. Yep.
Yep. Could be, though.
It's interesting because everything in the movie is the entertainment factor of it is not the fact of the business side of things, but rather what they did having done the business. Everybody was interested in the lifestyle and the drugs and the partying and the women and all that stuff and all that jazz. And nobody's interested in actually doing it right. Everybody's interested in just getting to the end result so they can have all those things and be done with it. And that's what life is to them.
Nobody wants
Not
to
to
do
me.
the hard work, right?
No, yeah. Nobody knows what it's like having done the hard work and having accomplished it. That's what I can see now. And I'm like, whenever I see somebody working hard that's actually doing something that's going to accomplish something by the end of it, and I'm like, wow, you have the patience and the discipline to be able to do all of these difficult things in the name of completing your task. And I'm like, I don't see anybody doing that. I'm like, because it's so hard. I'm like, that's huge. I'm like, what compelled that person to be so different? I respect it. Because they're not thinking.
Enjoy the process, right?
Yeah, exactly. Even though even if it's something that they literally don't enjoy, but they enjoy the results so much that they have to get it right. So it's like even if they're enduring like pain on themselves, like somehow in order to get that result, it's like wow, that's strenuous. Like this guy's painting the freaking ceiling and his back's gonna be out of control. And I'm like, yeah, I can relate to that, but he's going through it because he can't stop because he needs it done. I mean, maybe it's not something as trivial as painting the ceiling, but it doesn't have to be something so brutal and painful, but something that's actually humorous and painful, I guess.
I think it's those little wins as well. Those little wins really help you get through everything. I mean, like, I remember when I got the Lulu account when I passed, I was on my way to work and I was blasting music out loud and screaming, it's like so happy about it.
Yeah, like I see in a time like where it's like okay, I know that like the market's moving and it's going really slow, and then it's like boom, oh my goodness, it's going to come back to the blue line, and then it's like bam, 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 blue line, blue line, blue line. We're doing what you want. We're doing what you want. Just keep watching, and I'm like in line with it, and I'm like yes, of course, I know it's crappy movement, but this is what it's deciding to do, and it's what I decided it should do, and I'm like well, what'll it show next? Will it be something bigger than the blue line? Because I didn't decide that it was going to do that, but like a fish, it came to me. And not always are they small like this.
I threw a resistance line on the two highs previously, and it's kind of staying inside of that.
Like that? Or no?
No, like one before it.
Oh, yeah, okay, let me change that. Interesting. You know, we have a triangle here. Yeah, I do like that. And it's like it's caught between these two lines. And the thing that I like about it is I'm like, yeah, sure. You know, to somebody that's looking at it like this, they're like, what do you mean a triangle? It doesn't look anything like a triangle. But then I'm like, well, it is true that until we break one of these barriers, it is confined within them. And it is breaking this one now. And does it have the inclination to try and retest it like it would be a triangle? I honestly saw this line before today. This line, it reminds me of like what we did here. Like, I'm just going to point out what we did here real quick so we can see. You know, when we made this blue line, it was like it had like a rising wedge like that, right? And then when we blew through the top, it's like it came back to it and then it did this motion. Let's take a look at what's going on over here. Because at the end of the day, it's like it had a rising wedge and it blew through the top and it's coming back to it. In a weird way, it is very similar. Like, you know how I'll show? Is I'll take this movement, draw the line over it, take a picture, paste it here, and draw the triangle over it again. Whoops. Draw the triangle over it again. The one thing, you know, like notice that the yellow line even supports it as it did before, but it's not exactly the same. One thing that is different about it is the moves are larger, but it's at a different time of day that could suggest larger movements are more common. After what we just went through, you know, these moves are larger, sure, but like, I mean, it's still terrible. Sure, but at the end of the day, what happened? What was the result of this environment? Well, it's true that in this picture right here, what we did now, it did confine itself within a triangular pattern that converged into a tip, where we did have a blue line on the top and a yellow line on the bottom. Okay, those are the same here. We could put a yellow line there too, but um, it made the rising wedge. And then what did it do? It spiked out of the top and spiked out of the top and spiked out of the top multiple times, but did it come past the top of the rising wedge? Well, it did in the form of wicks and spikes. And look at how much volume was in those wicks and spikes. And it did in the form of a 3 drives pattern. Holy smokes, hold on, I just recognized something. Do you know that this is 2 highs into 3 lows? Like, hold on a second. I can't believe I didn't recognize this. This is a pattern. I invented it. And it's a way for a head and shoulders to fail. And it's happening up here a little bit better because usually this high is lower. And I'll show you an example so you don't think I'm crazy. Look at this here for a second. This is something that we did not too long ago. Here. 2 highs into 3 lows. You'll remember the same thing. So it had those 2 major spikes at the beginning of the day, and then it had 3 consecutive lows like that. I'm like, holy deja vu right there with these 2 major moves at the high, and then we came down to start making 3 lows there. And, you know, just like before, those 3 lows literally ended up breaking the trend. You know, there were those 3 lows. Remind me of like these 3 lows. So let's just look at it like this. So it's like we've got this pattern here. So forget about the 2 highs. You know, the 2 highs I guess weren't very similar, but I can tell you one thing. This was very similar because the components are all the same and I can prove it. So we go, whoops. So we go down with the big movement here. And we went down with the big movement there. And then we came up and then into a 3 drives pattern. Up into a 3 drives pattern. Now it's not exactly the same, but it did go up, down, in order to make its 3 drives. And after that up, down, did it not break the trend like it did here? And was that not the lowest point of the day? And did it ever see it again? Well, might have saw it again, sure. I don't really care, but it played out from that point, and it did today as well. And the point is in this example, like I didn't go through it the whole way. Like, look, it even carried on to do this next. So I mean, like, maybe it doesn't stop at the same thing here. Maybe it's going to go from the 3 drives and literally do this pattern next. Maybe it takes back the entire dump that we had before the 3 drives. Is that what it's doing? You know, because it kind of is. And I mean, like, well, sometimes it comes a little sooner, but I was explaining something and I was like, wait a second. The 2 highs into 3 lows, and then I looked at that and I'm like, how the hell is it so similar? Everything is very similar to this environment, and I'm like, it's shocking that just analyzing it at this high, I didn't even look back, and I continued to go back, and I saw exactly that there was those 3 lows, and exactly like it was that environment that I did remember, and then I went and found that environment. I recalled that environment because I was there for that environment, right? Couldn't have recalled it if I wasn't there for it, but that's a fact. But
I'm glad you mentioned that, John, to be fair, because I do look quite familiar with the pattern, to be honest.
Yeah. And it's like you'll see, even if you weren't there and you saw I posted it in the chat or something like that, you can remember it like pretty easily as well. And I could say that's something that many people will not catch on to very quickly. And I think that's why it can be presented in the environment where we can say that the institutions have seized full control. They printed this pattern out to have best impact on the public, because it's not a public pattern, or else it would be on Google, wouldn't it be? You know, and at the end of the day, like I said, this pattern, usually the first high is not as big, and it usually looks like a head and shoulders. It's like this is the 2 highs, and then it goes into the 3 lows. And it looks like that. And I mean, it kind of has that like falling wedge vibe to it even. But when I when I saw it before, I went back and I posted this. I was like, this is a pattern I discovered long ago, and I posted this chart. It's like an infographic, and I'll post a bigger version of it. But basically, what it is I'm trying to explain exactly what it looks like. Like, this is the idea of what I like in the pattern, and exactly what it looks like on the actual chart we were looking at, and how I analyzed it that day, and the results of what can happen there. And then these are all other environments. Like, if you search up another perspective, you can find that. If you search up, like, you can also view how to, or you can also see how my 2 highs and the 3 lows pattern is in play, and you can also see currently 2 highs and the 3 lows, and like all of those things like that. Huge. And you know, sometimes the people that haven't seen it before, they'll block off their ability to look at it. They'll say there's too much going on that screen. And I mean, like, well, if you know what you're looking for, I just showed everyone what 2 highs into 3 lows looks like. And we can see that happening here on all of these different little areas. So that goes, you can just recall on other environments, and that's what I was doing in that area. As I was like, hey, I used to be able to go back to this time and this time and this time. Now they're really far back, but I can recall on this, and it goes to show, like, if I wanted to, I could go back and get every single time, but I really don't think it's necessary. I can show this, and you can search it up if you want to. Like I said, if you wanted to go back, like, search up second Tesla 188, you'll find all this stuff, and it's in there. And from the point that I first acknowledged it as a pattern that could happen, just like the point that I acknowledged this as a sequence that could happen. Because it was capable of showing us that those series of movements happened again after a larger series of movements that happened at a different level. So you can say that it's not the size of the moves that made it reverse each time. It's not the levels that it was hitting at the same time. It was literally the sequence of moves from trend break to trend break that meant that this set of moves was identical to the moves that it's just done. And I've been watching and I haven't seen this form. And it's like, because it wasn't doing something that I was familiar with at that time, I analyzed exactly what it did do, and it was almost absolutely clear the moment after that it did the same thing. But unless you look, no chance. And I'm like, well, now I look, it's like looking, it reminds me of, you have to make it habitual, right? Because it's like when you get into a car, you put your seatbelt on, and it's like you do that, and it's so clear that it should be habitual. Like a lot of people get the habit of putting a stop in really quickly. That's like one of the first habits that people should develop. It's like, okay, the first thing that you have to understand is that you're going to be managing a stop loss. You have to ensure that that stop loss becomes profitable as soon as possible. That's the name of the game. And then it's safe to hold it. Because if you make it so that your account is reflected profitably by hitting your stop loss, how can that position affect your account negatively? So what do we work for? Do we work for the allure of buying a position and seeing profit, or do we work for the ability to strategize so that we are positioned in the most favorable and safest position possible so that we can benefit through the majority of the moves that the market has to offer? And what has that been today? Well, it's been very slow, but I tell you, I didn't say to sell it. So at the end of the day, we're coming up to a change of the hour that could have an impact on the trend, but even our counter trend move that we've been accustomed to doing in this consolidation has been seen very minimally. Like, when was the last time we did it? On the red zone. And I mean, like, now that we're above the red zone, we're doing more progressions and less pullbacks. But is it true that less people seem like they're in the way now because they don't feel that they're buying low anymore? The chasers have been grinded out in the gradually increasing trend, where they were like, hey, just drag your stop a little higher. Don't mind the sting each time that we make a new high. It's not going to be a brutal, hey, snap out, let's take all their money at once. They tried to get 1,000 people to drag their stops up a little bit higher each time. And somebody did that and lost their account. 100%. And it doesn't have to be anyone in here, and like I hope not. So that's like, after I've explained it so many times, I would think it would be clear. From the moment that we started consolidating, it's been dangerous. From the moment that we hit the 61, it's been dangerous. From the moment that we hit that 61, it started grinding, and it became difficult for the people that started shorting. And at no times has it even allowed them to be profitable. Like for the quick snaps and wicks, sure you could say, but I'm like, hold on. Do you think that's a profit for most people? Do you think that's what they were going for for the negative response off of that 61? And I mean, like, well, it's safer to say that more people that took that 61 were affected negatively. And what does that mean? Well, does that mean that people that shorted here have been turned into buyers at a higher point that the people down here maybe didn't want to buy it? So if we can convince those 1,000 people to turn into buyers at the high of day, don't be surprised if the price goes up. Who's that good for? Well, the people that are holding, people that have assets, the people that are, interested in seeing them progress. And why does it seem so conveniently easy for the people that have followed the rules of the day each day? I'm like, well, it's that, it can come down to a specific rule at the end of the day, following a series of attempts to get, like, let's talk about this. If it moves like this and you catch that move up and you catch that move up and you catch that move up, you catch that move up and you catch that move up and that move up and that move up and that move up. Imagine that, right? Imagine you did do that, let's say. And it comes down to another low. Do you feel dread about it? Or do you think that it's like that the profits that you've been making, because you have to work, aren't worth anything? Because it's not giving you your target of all the way up here? At the end of the day, you have to question, is it valuable to be exposed to the trend break? Is it the target that you're looking for? Is it the exposure that you want? Is it worth getting in? And I mean, if it's like the daily low, yeah, you're going to experience a lot of major chop and a lot of difficulty in trying to reverse. Just like on the daily highs, we're going to see a lot of chop on the highs. It's going to make it just like this environment right here. at all-time high, super toxic, you know? It really is. Like if people see it's at all-time high, they're like it's making a new high and they're like, "Oh man, this environment will kill people." Literally, it's very 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 tough. And the whole time the bearish momentum's going down. It's like it's had so much time to go down that it's going up now. And I'm like, "Well, it's been going up the whole time. Under no circumstances has it ever reflected anything that it's done on the momentum." And I mean, like, that's dangerous. That means that, coming out of this environment where everything was all about coming back to 16,000 and now it's acting like this, where the hell did this come from? You could say. And I mean, like, well, if things are so different and you can prove it, well, don't be surprised if we see more changes, right? That's the way I would look at it. Because it's like somebody's seeing like an hourglass and the sand's falling through to the other part and somebody's like, no, it's not. But you're like, well, I can see that it is, but they're like, no, it's not. And I mean, you've been in that conversation before, and I feel like this is the opponent that we're up against in this, and we're talking about their strategy, and it's like very very difficult to get any specialist to change, and they pick different batches every week that they target, and they ensure that it changes in a way that negatively affects most of the people most of the time. And that's the same as this, which I mean I put it on from time to time, but I do think it's necessary to understand that this gentleman, 1873 to 1834, or sorry, 1934, but he didn't even get to see World War II. How old he was. And they, think of having computers and the ease and stuff. You know how long it would have taken to create a chart that he could then study, and how long it would take to understand that the change would happen? You'd have to go to a place to figure out the change. And then you'd have to write it in yourself if you wanted to see the chart, because they didn't have it at the exchange. They didn't even look at the chart. He decided that he should. And what he believed is this: all fluctuations in the market and all various stocks should be studied as if they were one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. Of course, in this like jargon from the 1800s, you could say. I mean, he went to school in the 1800s 100%. And they spoke a certain way back then. You can get what he's saying. He basically is saying, you know, he used to talk about it like this. Like, the composite man carefully plans, execute, and concludes his campaigns, you know? Ah, look at this. One must study the chart with the purpose of judging the behavior of the stock and the motives of those large operators who dominate it. What do I do? That's what I thought. That's what I think about every single day. Is not the individuals, but the people who dominate it. And he sees that domination, and he wasn't even alive to see World War II, ladies and gentlemen. He's older than than my than my great grandparents. Like my great grandmother was born in 1908. Yeah, man, this guy is way out there. He'll have great great grandkids by now. Probably great 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 grandkids actually. Depends. I don't know. Maybe he didn't have kids at all, but he definitely could be a great 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 grandfather to somebody, and hopefully they kept up with his work. But
I honestly don't even know how they kept up with prices back then and just everything.
yeah, it's crazy.
Seems like it'd be way too like hectic, and I don't even know.
Yeah. it all came down to how well you could read this guy's handwriting. Pretty much. Yep, that's how they used to do it. Literally, there would be people writing on chalkboards the prices of the stocks, and you could make your orders with the people at the table. And you better be quicker than the other people. You know, like I could see people would definitely be stepping on each other's toes and shoving each other out of the way. It would pay to be a big guy, actually. In those days, I think push everybody right out of the way. But people, would make money off of just the chaos and stuff that was associated with the non-digital.
Yeah, you better hope his sixes don't look like zeros and stuff like
Yeah,
that.
right, exactly. Yeah, somebody could just like destroy the entire economy with a water gun. That's funny.
That's actually really funny to think
about. Yeah, that's too funny.
Guy from the future just pops up for a pulse. Done.
Like a little kid on play day or whatever. Like a big bazooka water gun. High powered. Takes everything off the chalkboard. Yeah. So we've completely went through the entire retracement. So you can see how like from this high down to this low, it tells us levels that come from all the way, from the bottom to the top. And basically it tells us like, that we've retraced over 100% of that move. So none of these levels are effectively going to impact us because they're used to tell us that it's a resistance level that's meant to come down off of them, and you can see that none of them have worked. Right? Perfect. Now we can take them off and assume that it's not them that it's interested in, but probably the other ones that it's going to be using in the future here. And I think it's just a minor stall before we truly get on top of this. But what did I say at the beginning of the day? Wasn't it to position ourselves so that we could be on top of this movement by the end of it all? So we could be in for the entire movement that happens on top of the day, everything that happens on the high. These highs are to break. And it's been a hell of a journey, I tell you. Really strange, to be honest. And I expect this is the kind of move that they can build on, because it seems very meticulously created and concrete. Seems very much like they haven't missed a single B point. They haven't done anything out of order. They haven't left anything untested. I guess this one, the first one's okay. But since the point it became difficult, since the point that we could say people got squeezed, they've been very careful about it. And I can see that. Because it wasn't like they weren't squeezing people here. After all, what they did was they got everybody to build up a position in here. Most of the people of the morning, you can tell because it's relatively early in the day and there's still been heavy volatility. This was one of the first consolidations that they had, and a lot of people that expected it to move well would have landed right in that area. A lot of the mutual funds and everything that accumulate every day, they're very likely to have been, buying before then or at that time, not much after that, I wouldn't expect. And when they do get filled, all of the people in this area, the node grows. And then when they more than double the range to the downside, you could say it's safe to say that, if people were assuming that, they find value in this area, do you think they would allow for it to more than double against them? You know, so there's a good chance that they were caught out in that move, and that it took their positions from them. So you could say that they were rounded up in this area, and that somebody came down, spiked their positions out, took their positions from them, and then held them to their target, and then continued to hold the entire day. So
261, to that be point at 13.15?
13.15. That's an interesting one. Something's wrong with this one, eh? Not out there yet. I'm skeptical. The 188 is very close, and I'm like, well, you know what I like about this one? Is we're gonna get to the 188 and then come back to that 261. Because I'm like, well, on crossing these highs, it's very likely that we come back to them. And I'm like, well, if we look at what we're really doing here, it's kind of like it's doing that. It's kind of like it's coming back to these highs. And that's okay. You know, it's almost like I could take this triangle here, and we can see that for what it was contracting, it tries to expand in a weird way. Similar to, yeah, so I was gonna say similar to a bow tie, yeah. You know, that just reminded me of something actually. Is earlier when Ryan mentioned the pitchfork, let's take a look at the pitchfork on this one. I think it might actually have one. It's gonna look really funky, but it's gonna be very particular. It has to be very particular. I'm gonna have to zoom. The way that I'll take off some of these other lines so we can see that these are the lines that it presents, and not the one. This is the medium line, and I'm just like, wow.
Nice, yeah.
Yes, that's really good, right?
I know, right? Like they were using it as a trajectory line almost. There's no line that, you know, we can say it's safe to say that in leaving that line for as long as we did, things have changed. Because I mean, what caused us to move so far away and stay so far away on such a move that's larger than any other move away that we've ever had? Because since we've ever hit this line, it's never made it to this yellow one before, like this yellow one right here. Like, because it made it to it first here, but you can see when it made it to it first there, it had never touched the middle line yet. But since it touched the middle line, it had never, ever, ever touched this yellow one. Until now. So you could say that the yellow one, you know, what it is it's a distance. It's a distance away from the white one. And it's the same distance away from the white to the yellow as it is on the other side. It's a 161 as a matter of fact. So that distance we can see from that yellow to this yellow is exactly the same. So what it means is the distance that we've went before has become acceptable to move away from the middle. Hey smokes, that movement that we just did right there was actually the original size of the movement that we did around the white line, which is very suspiciously particular. The work of the public, we say. I'm like, do you think the public is doing this? I'm like, no way. Why does it line up so particularly? You know, is it a mathematical phenomenon? Perhaps. But at the end of the day, why is it that the first discrepancy with this range amounted to such a change? And we can see that change formulating right now. Now you want to know what's funny? Is like the last one that I showed, it changes to the inside pitchfork. Hold on. Or the original, sorry. No. Bad. I'm gonna post a picture. Because what I was looking for is the last time that I saw the I just found a different time that jogged my memory too. Some of you may remember this time. But basically there was a strong pitchfork coming up from the bottom. We were using it, but then we had all of these other levels and it chose to come back down and test those levels. The minutiae of what is going on in there is not something I expect anybody to be analyzing, but the result of leaving the pitchfork and coming down to the previous downtrends that there were. And I mean, those downtrends were used to advance the market at one point. That's basically the point here. And here, I'm like, well, we don't have this one. Huh. That I have reason to believe can be placed here. %61 of the dump. Let me think. So if we're coming into this move like a fourth wave, like let's say for instance, it's moving 1, 2, 3, 4. I mean, it is on a fourth wave. If it comes to the 61, it'll hit the B point. That's what I was originally looking at, the alignment between the 61 point, at least from my mental measuring tape. Like that has formulated. 61 is now hit, and the B point at the same time also. So if we take these off for a second and I turn these back to normal fibs, you can see that it all came back up. And you know what I said when I said in the chat as well, is I'm like, well, a pitchfork came to an end briefly, it would seem. At the end of the day, like I said, the top lines are as attractive, contrary to popular belief, because they don't believe it's being controlled by somebody that has an agenda. It's too hard for them to believe. It's got to be random movement that does just as much negative for them as it does for everyone else. And I'm like, no. Somebody intends for every move, and they work hard to keep that control. They work all day to make sure that they have it. Now you can see the crispness of the candlesticks, the demand to come back to a specific B point, and the ease and lack of obstruction to be able to do it at all. And I mean, where was that? earlier in the day when everything had to have a wick and spike and everything had to dig into the last candle, and a snap couldn't happen normally back to the B point, didn't even make it all the way there because there was so much chop and so many people involved. But after all of this movement, you can count most of the people out, especially if they've been trying to fight against it.
I'm gonna dip out now, guys.
Okay.
Got a bit of packing to do. Gonna be heading away on Sunday, so
Oh,
I'll
yeah.
get on next Wednesday. So yeah.
Right on, man.
All right, guys. Take it easy. I'll see you next week.
Okay.
Yep.
Take care.
Have a good one,
You
man.
too.
Take it easy.
Bye.
So this is a new trend. This one down here is more like a blue line, but it's representative of being parallel with the line on the top. I do believe that it all ends by breaking the line on the top. And also the usage of the upper VWAP band is intriguing. We've stepped on it multiple times. Of course, the VWAP is all the way down here. Its respective VWAP band is all the way up here. And just to give you some perspective, I'm going to place a VWAP at the beginning of this consolidation. And you can see how the bands are relative to the VWAP. Their standard deviation, I think it's 1.8 that I got it on right now. 0.6. And that's the standard deviation that it is away from the mean. You can see that that's represented on both sides, and is it not true that it's quite uncomfortable to be outside of that? And I noticed it was riding it, and then it came down and broke it, came back to test it from the underside. Really intriguing movement around the longer term one. See here as well. That was something that you could say was respected by the larger moves of the day. The first one was initially, a move right back to the red zone. And when we make a move to hit a barrier and it returns back to the red zone, and we can see that that same distance and that same respect was had on the other side of the barrier. And then again, and again, and again. And it becomes something that's been quite a common movement. I did that to check if the movements were the same distance apart as well, but they're not. And what we've done now is basically like this. The pullback was this. Interesting. So now it is the case that we have made this counter trend move inside of a downtrend instead of an uptrend. Because every other time that we've made this move, it's been involving a pullback to the downside. Now it's a pull up. So what could that mean if things are going backwards? Interesting. Could it have opposite effect? And right now what it's showing is actually a triangle that it has done before. The angles and the confines are exactly the same. I did mention that we'll see this again, and I said it wouldn't be soon. But that angle is undeniably able to be used in this environment right now. We'll see if it acts like it has a tip. We'll see if it acts like there's a triangle there. We'll see if it acts like the last triangle. But positioned in a different spot, could it have perhaps a different method of play out, but maybe the same kind of volatility? Could it be true that the movements that are going to surround this could be similar to the movements that surround this? Let's take a look at this for a second. Is this movement at all involved? No, that's not involved. Could this one be? Same move. Same move. Okay. The move that we had out of the bottom of that triangle, Could that be the movement that we have out of the top of this one? Because do you think if we have the same triangle and it's a neutral pattern and it happens at the bottom versus one that happens at the top, and we haven't seen that pattern form anywhere in the middle, and it was used as a reversal pattern before, and when it was used as a reversal pattern, it spiked in the direction that it wasn't going to end up going before it reversed and broke the trend. But at the end of the day, ironically, I think that we still have new highs to see beyond the red yellow line. But it is.
I kind of just saw something, John.
Yeah, what up?
If you want to check it out. So if you go to like the 1 hour, maybe the 4 hour.
Okay.
And you snap that line from like October like 26th to like the 1st. It's like definitely just sticking back to that. You know what I mean?
20 October.
Yeah, right there. So if you snap that up right there, it's almost just coming back to it perfectly, and like retested it a few times too.
Like up here, eh?
Yeah. No, like to the bottom, like the whole, like just those 5 days. Yeah.
Okay, let's take a look here.
And then it's just retested it like 6 or 9 times, you know?
Okay. Yeah. That one, you know what it reminds me of? Is those trends where I'm like, hey, it broke at the beginning, and then it keeps breaking and breaking and breaking and breaking, and it's just breaking so many times. We saw that on the 1 minute when we look at what it did with this original trend break. And it was like, well, it was first at the 61, and I mean, nobody would really think twice about it. If you look at these fibs, it's like, okay, it's grinding at the 61, and it doesn't really seem like a long time right now, but like it literally went sideways there for 23 minutes without budging at all, and then ultimately any move for the whole hour that it was there didn't end up leaving it. And now it's made it into the middle, ironically. Like, this is very centralized now. But never has it ever allowed them to be profitable. And options traders, like I was saying, I think they caught a lot of options traders in there. That's why it was so slow. It was trying to bleed them out. And it basically means that they're at a position where it's that much more likely that the option becomes entirely worthless. So the entire value of their whole trade gets absorbed. So if they bought an option contract for like $600, expecting it to go to like $2,000 or something like that, the whole $600 is subject to being like a zero. Like you don't get not like $20 out, you don't get $40 out, you don't get anything out, you get zero out. So a lot of people have that formulated as a situation for them. Somebody is at risk of having that become the situation if they are in for puts at the 61 right now. Like if we build on this slow for tomorrow, and because it's so slow today and hard for people to withstand, it's hard for people to hold it when it doesn't offer them so much excitement for prolonged periods of time, but instead constant risks and threats that it's going to come down all the time. And you know um it's going to be hard for people to hold into the weekend, and I'm like, that's the play 100%. And whatever they make it seem like it's happening over the weekend, it could be a huge rally. It all gets taken back. And I'm like, I'm interested in the fact that they've worked their asses off to get it here, and they don't do that for nothing. But they're interested in hedging, and they know that their hedge trade can come back. Like, let's say, for instance, if they get the ordinary people to be part of this, they can find a hedge trade, and it can come so close back to the entry, and nearly all the long traders will be made into sellers, and that creates liquidity for them to be able to add to their positions. If they know it's going to go up like 5,000 points anyways, then they use everything that they can to keep accumulating as much as possible. And it's like, what would a better way to do it be if you could imagine it? Like, there's no better play than to set it up that way. So I'm like, well, of course they have it set up that way, or they would basically be at be ruined potential. All the power that they have, how to use it. But they do, clearly, or they wouldn't get this stuff done. They're so good at it, At the end of the day, it's been grinding up to hit the new highs, and from the beginning of the day, the name of the game has been to find exposure to get to those highs. And it's been difficult for anybody that lacks the patience to wait through the hour consolidation. It felt like 3 to me. I mean, it's a ridiculously long period of time to wait for, but it's what it took to get to where we are now. And funny enough, like, the beginning part was like all the allure, and everybody's like, hey, you're gonna get this if you start trading here, and then all of a sudden it gives them this. But what they didn't realize is that they were given this. They just had to wait for it. And really, there hasn't been any kind of risk until we've seen the thing that caused the change the last time. Did you know that the last thing that we saw that was capable of giving us more change than this was the triangle? Not the red zone, not the 61, but it's this stupid triangle that creates a lot of change because it changed things last time. Wasn't anything but that. Maybe a 50 on the entire move. Wasn't even a 61. They weren't trying to make it easy. At the end of the day, the 50 did hold as the first move, and I'm like, wow, that's kind of cheap, Like, after showing how many people the 61 works, and then they try the 61 and it fails. Wow, audacity, right? Like, can't believe they would do that to them. Seems like somebody's trying to play the game against them, and they don't think that they're very smart. That's the way I look at that. I mean, like, show them the 61, show them the 61. They'll be trying it for sure tomorrow. Look at how much money we made doing the 61. Ensure it fails tomorrow, and then our day is set because we'll be set taking money off the people that think that the 61's gonna work. And that's how their day went today, is by showing everybody that the 61 worked yesterday. Golden ratio was worth explaining. I even went through the seashells and the galaxy and everything. I was going through all of the explanations to do with the portions between your arms and your ears being a 61-degree ratio and how important it is, and how in that environment it was a good example because it was using the 61 a lot. And it makes me it reminds me that the 61 was used like that. And then they have the audacity to make the change like this. Now, I go back to the theory of, hey, what trader that's been trading for a long time with a strategy that works would suddenly decide it should change? Why would you go through the process lining up a red zone, lining up a 61, lining up the high of the node, lining up so many different things, right? Or like untested B points even down there. And the audacity to make a W, make half the M, and not even come down to the B point. But instead, anybody that tried to make the M, anybody that tried to take the 61, anybody that tried to take the red zone back to the green zone, what'd they get? It treated them like terribly. It was interested in them trying to get their stops up a little higher, a little higher. It's like it's trying to screw them. And I mean, like, I see that very clearly. I mean, what better way would you try to screw the people if you were tasked with, doing that? Is there a better way to chop them out of something that you just shown worked? Because, that they've seen it work, they can go to all their friends and say, "Oh, the 61's been so common, let's do the 61." Well, because it was so common, ironically, I believe it won't work. I believe we're so interested in changing so regularly that the thing that you just found worked is destined to change soon in this market environment. And it's about adapting. So, like, it reminds me of like juggling or something. Like, at the end of the day, the people that understand how to do it, they understand that the balls are going to be moving exactly the same way every time, but they're going to have to position themselves properly to be able to put their hands exactly where they should be so they can continue the process. There's one way to do it. You have to keep doing it the right way, or it's going to be wrong. And it's very interesting. Very interesting that that's the case here. And if there's one right way to be exposed from a point where you didn't show up, it was at the beginning of the day or something, and it's been running, and it's only offered people crap ever since it was that point of golden entry. I mean, that's not a thing to feel bad about, but it's a thing that should motivate one to be in for the beginning of the move. You can see that when we've just developed a major move and it's nowhere near the target, well, we could suspect that this pattern and this movement could come to an end before we could find an interest in something from the beginning. And what's the value in finding something from the beginning? Not just something like new to us or something that we just noticed, but something truly from the beginning. Well, that means that we're there from the construction of when it begins, from the best point in that process. Now, the first thing that you would have to do in order to get that is to be able to understand the process, to be able to identify where is the best place to trade and how do you value it? Does it give some sort of moment at that spot when it's forming that pattern that gives you an indication that there could be more reward than there is risk in the environment? So what else could you look for that could give you an advantage in that situation, or what else could you do? You know, the more risk there is, it can affect how much you take. Like if there is something wrong with it, like like if it's inside of another major move like that, it's effectively proven that it's been able to cross through this level multiple times, and it's not something that's ever been regarded as an extreme or the best price. So people, you know, I mean, they find value in it because it stays there for them for a long time, but it doesn't mean it's a valuable spot, you know? And like I said, when we were in there, people that are scalping and so on like that, they can find value in that the entire time that it's finished, but it does take energy, a lot of energy. And I think on these kind of moves, you need as much energy as you can get because it's so slow, and slowness is brutal. That's one thing that we could all do without is too much slowness, and it's lack of opportunity. When it's so slow in the short term that the only people that's benefiting are those that choose to hold through everything it throws at you, why is that still the right play? And I'm not sweating buckets, So it's like at the end of the day, I'm like, well, there's one way to do today, and it was kind of hard because you had to have a lot of time, you had to have a lot of patience. But I mean, it's not like it moved any way for anybody else that was even better. Doesn't matter how good you are, you're either in on this move or you're not in on a move that's as good enough, or that's as good as this move. I mean, it's just the way it is. I mean, you could say you're in from 2 months ago. That's fine. That's absolutely great. It means you haven't had to take a risk at all today. You just benefit through the entire gains no matter what. But if you focus on trading against it, like I say, instead of giving up what you have, it's huge. And today's a good day for that, except, I mean, I haven't barely hedged it. It's been just grinding and grinding and grinding to the highs. It basically knocked out the highs and came down a relatively, say, reasonable amount. I mean, it wasn't too much that it came off. It was roughly the movement. If you look at it, it was contained within the triangle still. It's not like it even went from the top of the triangle all the way to the bottom, and it could have. I mean, honestly, I would have even preferred it to, personally. It's a little neater when it does. But no worries.
Be informative here then too.
Yeah. Yep.
Do you like?
Yep. Right after the
Yep.
Oh, it's a weird one because it's almost like I'm gonna be a W, psych, and then it's like, no, seriously though, we're gonna do the W. And I'm like, I see that there, and it's plays games like that with people because at the end of the day, the way that I see it is, I'm like, if people struggle with the Ws in this range, just question like, what are you doing trading so close to the imbalance and in such a tight range and going long very, 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 very close to the high, as opposed to, it reminds me of, that's the price people pay for not having held, but rather they jump in, and the pan's hot right now again. That's the way I see it. Because it's like, well, any gains that it does give people beyond this point are subject to coming back to this point, because it's basically like buying at the B point. So it's like it's going to suck for the people that found value here. And I'm like, hopefully it manages just to hit the B point. But if it goes a few points lower, costs you your position again. And I mean, what are the odds it goes for the people at this POC? Probably again, and just like the last one, I mean that the last hot pan environment, it had a POC and it had everyone buy off of it. And now it's not even from the middle. It's like it would still be bad if people were buying from the middle, and it hasn't even made that yet. So it's like, let alone talk about low, not even close. And if you talk about buying above B points that are untested as well, that's just a whole other ball game of danger. So I'm like, right now, I mean, not to say anybody's doing that, but I'm just like, well, at the end of the day, this is a time where we like to centralize for the imbalance. The imbalance is a report at the end of the day where we basically go over or we reconcile all the shares, and it's a time where the individuals can gang up on the institutions, and they don't do very well at it usually. And for what they do, what power they do have, it usually dissipates within 5 minutes because they can't work in unanimous agreements for long, unlike the institutions. But that's what I see. The result of the people trying to be part of it, and they dissipate within a moment because their understanding is lost within 5 minutes. So it's you can see that the institutions will keep everyone in a pen for the end of the day. It's like a very, very contained area. The node starts to grow. The little spike might form on the bottom, and that's absolutely fine. But at the end of the day, there's not much we can do about it. It's a triangle, big old triangle here. Like the old one, sure. I guess we could look at that old one and say it spiked out of the bottom and the top and returned back to the middle. And I'm like, yeah, sure. That old triangle is the one that we used at the bottom. What did it do? Well, it went down and then up and then tried to test itself again from both sides, which brought it to the highs that it made there. But after all, did it not make a spike out of the bottom and then the top and try and make it as even as it could before it ran into its own support? I'm like, well, yeah, do we have that here? We kind of do. A smaller version, but still, it's doing it. After all, there was a tip, and when it got to it, it made it even out both sides. But not exactly even, just even in the sense that it had spikes out of both sides. Even in the sense that everything that was sold off was bought back up to the tip. And even in the sense that everything was bought up was sold back off to the tip. And everything met the equilibrium, and that just so happens to be exactly where the triangle started, exactly where the triangle ended, and exactly where the POC is. And exactly the worst place to trade over the past hour. Because it's been wrong more times than any other level in this area since we've hit it. They've crossed, every time we cross it over, it means the people that originally traded there have to endure a loss. No? And if not, how not? I'm like, well, if you don't realize what pain and struggle is going on with these people in the red line jumps around. It's never a good spot to trade. It's okay for taking profit. Think about it from that example. If you're trying to be as far away from the red line as possible and you're trading back to it, when you know it's in a consolidation, the only thing that can affect you negatively is for it to end the consolidation. And how many times does it end the consolidation? Well, once, because any time that it's moving around and it's not ending the consolidation, it's inside the consolidation. That's the way it goes. And or else it's just the way it goes.
Go to the close of the imbalance that gets us out of this little thing here, and
yeah,
the spike up probably, and come down, and
Yep. Yeah, I'm inclined on just readjusting it because it's like it is a triangle, as a matter of fact, still triangular, and I mean it's like that's proof. It is a triangle. We're stuck between it, and it's so funny that the tip is right at the imbalance, suggestive that things will change on the imbalance. And okay, let's see. So we gotta watch for the retest of the red yellow line. So not only did it break, but it came back. It's coming back. Anybody that see the benefit in the moves will not obstruct them from happening. Yeah, that's the way that I believe. Yeah, anyone that can see the benefit of making the moves won't obstruct them from forming. Like, the benefit of returning back to the trend, the benefit of even breaking that line in the first place. You want to know why I know nobody will have this line? Because it's not a trend. It never existed. It's never touched the price except for once. How do you draw it? No? So do you think a lot of people have done that? Oh. Not because of them that the market moves, though. Contrary to popular belief. The return to the triangle. The imbalance is approaching, of course, in 8 minutes, so we gotta keep in mind all the movements that we have here now are subject to being associated with the imbalance itself. Old 161 it looks like. Or no, it's a 94. Okay, so I'm going to take these ones and put them at the high, because we're going to be considering the major moves throughout the night. You could see, which, I mean, the 188-200 is a couple hundred points up from K there, so I think that that's a pretty substantial movement to get there. 16,200 area. The test of the yellow line is something of an interest, the top one. We do have a little bit of an inverse to a head and shoulders kind of vibe going on here. Curious to see how that plays out for the people of the imbalance. Of course, having a hedge for the imbalance is reduce the risk for the imbalance. And to have a hedge for the imbalance that's protected by a stop and profit is to have control of the imbalance. Because regardless, if your core has a profit and your hedge has a stop that's profitable, you're in a win-win situation. And it's not because it fell on your plate, but because you demanded it, because you didn't fold the original position, but instead you chose to hedge it, which means that you take on another position, and you have the ability to hold yourself accountable to both of them in order to make it easier and less risky to be involved with the entire environment. And it's like, it's a small price we pay for a little bit of extra work to have that safety. It's oftentimes that it's worth doing. It's like chopping the logs for the firewood, you know? It's like, we just got to do it. It's easier when we've done it. Because then you get to keep warm. And it's like, in this case, you get to keep safe. And you don't have to worry about what it's going to be like to not be safe. Whereas, you know, it's like you don't cut the wood, you have to worry about what it's going to be like to be cold. And it's never good. The yellow line will really make things look like a right shoulder, so just because it forms doesn't mean it has to play out, but keep in mind that whoever trades the head and shoulders will borderline be trading the tip of the triangle itself. Yes, this is a time where we are interested in leaving the triangle on the imbalance. The triangle itself is coming to an end. We've seen that it's already spiked out of one side, not the other. Yellow line closing in fast. Now remember, the yellow line wasn't ever a line that was created by, you know, people. It would be rather strange to see it responded to with precision, because it truly was only ever created off of one point touching the market. And how do you know if you were going to draw that in that this one would matter? You couldn't. It'd have to be from another angle that came in the past, like this blue one, that made it matter. And it just goes to show that the market is regarding this exact angle that it has on the bottom as something that matters from the top, or maybe it's something else. But I wouldn't test it. The people of the head and shoulders are in trouble from what I can see. They wanted that sharp, quick play out to try and convince people to short it so I can stop them out. Anything sold off on the imbalance is subject to being bought back up as well. The question always becomes, are we going to make things even here? We've seen this pattern before, you know. You know, this spike out of the bottom with this spike out of the top and such. I'm like, it's like it was associated with the same one when we were inside of this pattern. Like we had this middle area with the spike out of the top and the spike out of the bottom. And I mean, like, why is it that that pattern is here? And why is it that that triangle is associated with it like it is here? And what could it mean for us to be doing this instead of this? Because while it was doing this, it was never doing any of this or this. And the closest thing that we've ever done to this is obviously what we're doing now. I'm like, well, those are facts though. Like at the end of the day, like we stopped this environment to do this kind of movement, trending movement. And this kind of movement you could say was contained within an area. It was always returning back to the same spot. Everything was even around both sides. So how is it not a consolidation until it was over? And at the moment that it was over, that is when the trend began. Funny enough, we're pushing the same amount of time that this has taken to reverse on the bottom. Now, what's interesting about this as well is the fact that we have this amount of distance associated with our original movement. And today, you know, like, sorry, on this one, we're barely even doing half. That's weird. Like, where's the juice? Like I said, it's ironic because a spike out of the bottom than the top, it undeniably does create an uptrend and it does put it into jeopardy. However, I don't think that it's going to have good longevity. I think it's meant to convince people, because it's a bearish pattern, to sell their long trades and instead worry about further gains. Back of my mind, these people that did this and made it this slow are not going to throw away their hard work. Hence everything being bought back up on the imbalance due to the fact that they show their control. And now it's just minutes before the close. And I mean, they've been here every day making their move on the imbalance. It's like they're testing the public. Like they're actively looking for a fight, and they don't think the public has what it takes to keep that control for long, and they're right. I can see it. they win again.
It's a head and shoulders, though.
Yeah, it's done like a double right shoulder. The short term, it's got a low with a lower low and a higher low right now. Curious about that. The end of the day is closing in.
That's a movement in the close, in these last few sessions. So we'll see.
Yeah, yeah. Yeah, this triangle's looking to end here soon, it looks like. The third consecutive low kind of gives me deja vu to the ones that we were seeing earlier in the day. Interested in coming back to the first of the three, and it just so happens to be the same spike out of the top of the triangle that we had out of the bottom. And the first of the three lows getting attacked yet again, contrary to popular belief, because this was a big scary red candle to most people. Just bullshit. That's what it was. Or else why'd they buy it up as quickly as it was sold back off? Very interesting. But it's for the people because they respond a certain way. Short term, it looks like it has a spike in spring and it hasn't even finished the candle on the 1 minute yet. Curious to see if they make the candle change before they do the next move. Yeah, looks like they're waiting for it. They waited for it. The upwards motion began on the next movement. A little healthier this way. The first of the three lows is met as of now. So out of the new three lows, it went 1, 2, and 3. And when I say it goes the first of the three, it's like this one. Out of the 1, 2, and 3 new lows. And just remember, when we made this triangle to begin with, look at how much we spiked out of the bottom and top. And look at how much less it's doing now. And how convincing it can be after such a stagnant, slow environment. How a red candle like that can convince a lot of people to feel fear, and they're all wrong, ironically. They're fooled into thinking that their emotions matter. And it's true that the only thing that matters is it coming back to the equilibrium and making this thing even. You know, it was appropriate for a spike out of the bottom. It didn't have to make one, but it did. And I mean, the last one that it had the same quality. Except this one is smaller in nearly every way. So it's like, now that we've returned back to the tip, can we be done with it? Oh yeah, we could be. Maybe the fact that we've returned back to the tip multiple times means that the next time we move away from it, we may not have to return back to the tip. Those that assume that it will could be in trouble. And that's particularly from the upside. I think no matter what we do under the tip, we return back to it, but anything above the tip, it's a little bit less questionable. Like, I don't care if it gets tested. Like, I think it might get a little tap as it passes it. That's fine, because it could be like a retest of both of those lines at the same time. The head and shoulders can also turn into an inverse head and shoulders really quickly on a retest.
It's a weird reverse thing there where I was looking at, stocks went up today and on the NASDAQ, but Dollar General went down by 5. Must be like a hedge or something.
Yeah,
Strange.
it's like
strange. Inverse.
It's a strange inverse correlation, yeah.
I mean, it still has a ways to come up, but yeah.
I mean, I guess they do better when people are hurting.
Yeah, that's what I'm thinking. Like, you do really bad at this on the market, so then you run to the dollar store and grab a package of hankies or something. Just crazy. But just like that every day, like it's just weird. People have money, maybe they don't shop at the dollar store. I don't know.
Which is funny too, because you would think they would do well in all environments.
Yeah, in all scenarios. Yeah.
Yeah.
I mean, everybody shops there. You got some cool items there,
Yep.
Good or bad day on the markets, I'm always going to go there.
It's usually for something specific and something that a general item.
Yep. Some of you don't want to pay for $20 at Canadian Tire and pick it up for $5 at dollar store.
Yep, and it might work for like half the amount of time, but it'll still be good.
Yeah,
at least for
the
first time. Yeah, it's fun.
Yeah. Just trying to figure out a way to support the Chinese economy, I guess. It's full of it.
Like, who's to say that they can't put like chemicals in our devices and stuff, or like tamper with them in ways that could affect our lifespan or something like that. I don't trust it. Like, I'll pay 60% more to buy Canadian. Anything more, I question it. But if they're looking at me because they made it, I don't care how much more it is, I'll buy it. Because it's different. But if it's from like just on a shelf, I mean, I look for it to be within 60%, and I'll still pay the extra. Not that there's many things that I can do that with other than food, but yeah.
Yeah, we don't really make too much here. We're more of a raw materials type country.
Still, you can get like a plaid shirt. It'll last you a lifetime. You get some jeans here. You get everything you need. Mark's Work Wearhouse. I don't know if you get that out there, but that shit lasts forever.
In Indiana.
Yeah, pretty much.
Yeah, they just moved into a store that shut down, Bed Bath & Beyond.
Oh yeah.
Yeah.
That's funny because you'd think they would keep Bed Bath & Beyond open for Christmas time, but no.
Yeah, well, they were just bleeding too long.
I guess so, right?
Prices were too high. People were buying the same stuff at Walmart and other places.
See, it's funny because I thought that they were always packed. Whenever I would ever see a Bed Bath & Beyond, you got tons of people.
Dude, I got an aunt that managed a Bed Bath & Beyond for 30 years.
Oh, gee.
God, wow.
Job, yeah.
Oh, that's tragic. But she'll be able to find somewhere else, not because of her. She'll probably find managing.
Yeah, she'll be fine, but like,
she'll go work for a competitor.
Before I was born, she was managing a freaking Bed Bath.
Oh yeah, that's crazy to think about. Yeah,
that's a long time. Yeah, she could probably see it coming though. I mean, insiders normally can tell.
Oh yeah, the last 5 years of Black Fridays all being online stuff.
But that's like saying the guy that flips burger at McDonald's will be able to tell you when it's gonna have its downfall. I'm like, yo.
For 30 years.
Oh, I guess so. 30. Yeah, but still.
Downstroke,
I guess if you're a manager and you manage multiple different places, I would think maybe. Yeah, I guess so. Yeah, I guess so. If you're a manager, maybe you're in on the know. But
probably saw the profits lower and lower every year or something.
Yeah, I guess you get to look at that. But if you're just in there, I guess it would be hard to. You could tell the progress of your individual store. It could be terrible. You'd think, how is this even open? But I'm sure there were some places that did really well. I mean, like the places I seem to see, I guess it was all a lie. Like, what?
In cities, I think they did really well. Like in Calgary here, they were always busy. But in smaller towns, they just couldn't make a profit. I think partially too the pandemic kind of killed them in shipping issues.
Oh yeah, because everybody would be in the store, like messing with the freaking bath bombs and stuff like that, and like smelling them and touching them and everything. And that's how you get corona.
I don't know, it's because of the bath bombs.
Yeah. Well,
Good analogy.
They started it all. No. They were an interesting. Sorry, interesting
I
stock.
was gonna say, yeah, every store goes through its lows, right? It's can they weather the storm, And the pandemic killed a lot of stores, no doubt, and restaurants.
Mm-hmm. Wow, look at that volume
cash
profile.
on hand.
Yeah, this was in March when I first started this group. I was saying go long. It was a great long. Great long. I said to go long on everything down there though. I said to go long on 3 times bullish financials. I said to go long, and this is when I told everybody to buy calls too. So it was when everyone was trading options. But yeah, it's a hell of a.
Doing so well then. They never really had an online presence then. Everybody had to go into the stores, and nobody.
Oh
could go
yeah,
to the stores.
it was purely technical. I was looking like I saw the market down there, and I was like, oh, I want to find something that I know is going to rebound really well. And Bed Bath Beyond was so cheap, and I was like, oh man.
Yeah, you just went on the technical scene rather than.
Yeah, yeah.
Anything else.
I can't remember what it was called. It's sort of an FN, or. Oh. Let me just find it. But it was an interesting time because it was at an absolute market reversal. FAS. Oh yeah. This is what it was. FAS is what I was saying to buy into. And that was really, really low. Like $15, and it was all of the financial companies bundled into one. And I was interested in WFC as well, the major one. Trying to get everybody to do that one. I think Bank of America was on there as well.
Was this just to accumulate cash so they could trade on the NASDAQ?
Yep. This is like when I first started the group, and I wanted everyone to get exposure to the downtrend break here, and get in for this movement to come, and
So prop firms never existed back then.
Like
Lilu and.
No, well, they might have, but I just didn't have anything to do with them. The prop firms I was interested in were all in person. You had to go there. And if I knew you could have done it online, I wouldn't have woken up at 6 o'clock in the morning to take a train to Toronto every freaking morning, man. Freaking brutal. But yeah, the day's over, and I mean it peeled off a little bit at the close, but I expect the downtrend to actually break into the overnight session again, and it's kind of like it made a 5-wave move. But I'll keep an eye on it overnight, and I'll keep you guys posted like last night, and hope you guys have a wonderful day. I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, take it easy. Anytime. See you guys.
Bye.
Yeah.